remaining now. I'll be leading with the US CPI year over year.
Matthew and Keely Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of 2 cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
10
if
seconds.
America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
We just have
2.9%, 2.9% lower than forecast, 3%. Month over month, 0.2%, 0.2% as expected. Core year over year, 3.2%, 3.2% as expected. Core month over month, 0.2%, 0.2% as expected. Looking to the markets here, strength in the US 2-year government bond yields, weakness in the S&P 500, dollar little changed.
Right now, we do have the economic data with US CPI coming out. Here is Michael McKee.
And economists got this one right, bang on. 0.2 increase in the core, 0.2 increase in the headline, just as forecast. Now, base effects are somewhat hard to measure, so we do see, even though we're in line with the headline number, we see it drop on a year-over-year basis to 2.9% from 3%. That is better than expected, and 3.2% on the core on a year-over-year basis. That is also better than expected, and that may have to do, and we'll look this up, with the rounding that Lisa was talking about before we came on. Taking a look at some of the numbers here, we see
so as the breakdown here in the US CPI report, then the food index is up 0.2%, housing up 0.4%, owner's equivalent rent of primary residence up 0.4%.
We saw in the PPI, remember, that gasoline prices were up, and that pushed overall goods prices up.
We have posted out the US CPI July report on the feed now for anyone interested.
2.3%. Those are kind of as expected by analysts. Shelter costs up by 0.4. That's double what we saw in June. We'll have to see how that breaks down. I'll take a look at that while you guys check the markets. But that could be something that maybe worries people a little bit if it turns out to be in the home price area.
We'll give you a second to go through some of the details right now in markets. Hard to know exactly what to do with this. That's my takeaway, although marginally a little bit of a pop.
So as the day to digest, just noting a reversal in the market reaction here, strengthening the dollar, strengthening the S&P 500. Government 2-year yields a little changed, but seeing a little bit of strength come through.
Stands out with the idea of rate cuts. This not necessarily impeding the prospect that the Fed will move in September.
I think here you kind of see the clear divide of how we went into this. The fact that you had bond markets in the front end rallying so much, it's undoing some of that. This morning, the front end is moving higher by about 4.5 basis points, which you wouldn't think if you saw small caps taking off. So maybe it is just the fact that we did see, I don't know, some differences in between bond and equity markets, that you did see bonds, again, price in already some very, very significant Fed cuts. So maybe it needs to undo it with a report here that's, I don't know, basically in line.
Yeah, basically not a lot of dramatic action, and euro dollar pretty much staying around that 110 zone. Mike, you've had a couple of seconds. You get a couple seconds here on camp surveillance to parse through the numbers. What stands out for you?
Well, in terms of this housing question, it isn't particularly good news, because the Fed had been hoping we were now going to see a series of lower inflation levels. Shelter, as I mentioned, comes in of 0.4, rent up by 0.5%, and owners equivalent rent up by 0.4, which is a reversal of the decline last month to 0.3. So housing a little bit more expensive, and it is not what the Fed wanted to see. I'll continue to parse through this while you get the reaction of people who are smarter than me and certainly better looking, and we'll see what else we find.
All right. Well, joining us right now, we've got David Kelly of JP Morgan alongside Steve Rasciuto of Mizuho. David, thank you for being on with us. I want to start with you. What's your reaction to this?
I think it's pretty good news because if you look at what's Well, first of all, it was slightly better than consensus in the headline. I mean, very slightly. But if you look at what's still holding CPI up, we got a 1.2% increase in auto insurance. So it's still that an auto insurance anomaly there. And we did, we did see a 0.5% increase in rents, but that's showing the rental numbers up over 5% year over year, and owners' equivalent rent up over 5% year over year. Now we know that that is somewhat misleading, and I think the auto insurance number is also somewhat misleading. But everywhere else, inflation is nowhere to be seen. And I think that's really the important point, where in the actual transactions markets of the economy, where people are sort of bidding and asking for in terms of prices, inflation is disappearing. So I think that overall, this very much confirms the idea that inflation is heading down. I think over the next 2 months, we're going to have some relatively easy comps. So I think that by September, the Fed may actually hit its 2% year-over-year number on consumption deflator inflation. We'll see what happens. But overall, I think this is further confirmation that inflation is gradually whittling away.
So, inflation problem dead. Steve Rasciuto, your take?
Complete opposite view.
See now the calculation for the US Supercore CPI month over month was at 0.205%, which is up from the previous minus 0.154%.
What it is, you don't parse through the components, throw out what you like, throw out what you don't like, keep in only what you like. This is a problem that we have over and over again. This is a problem we have with people who want to look at a particular component, like an unemployment rate or a yield curve, and make macroeconomic forecasts out of it. The reality is it's a little bit like Chicken Little getting hit in the head with an acorn and saying the sky is falling.
The traders trimming bets on Fed rate cuts after the US CPI data.
Components of a larger aggregate set of data. And that aggregate set of data is telling you, A, the unemployment rate is still low, B, wage gains are still happening in the economy. Inflation is not near the Fed's target. It's still 1 percentage point above it at the CPI level. At the PCE level, it is lower. And it's telling me that we have an economy that is still very, very healthy. So, again, they want to cut rates. They're probably going to cut rates in September because they've opened the door wide enough to, bring a Mack truck through it, or should they bring the Queen Mary through it. And the net result is they'll get what they want. But at the end of the day, is it going to have much macroeconomic effect one way or the other? To be honest with you, it's going to affect financial markets much more so than the underlying macroeconomic environment.
David, I just want to give you a chance to respond to that.
Yeah, well, Steve and I have just got a slightly different view of this. I don't think this is an inflationary economy. I realize the labor market's tight, even with the unemployment rate up at 4.3%. But what's remarkable is how much wage growth has fallen very steadily all the way since March of 2022. And what that tells me is it doesn't matter how tight the labor market is. American workers are just not demanding huge wage increases. They're just not doing it. We're not seeing massive numbers of strikes. We're not seeing massive industrial action to try and get wage increases. Wages are still rising more than inflation. But if you look at core goods, if you look at food prices, you look at energy prices, none of it shows inflation picking up. So we're heading back towards 2%. Inflation is cooling. It's cooling slowly. But I think the greater risk right now is the Fed. I think the economy is in a soft landing. It's in a good place. But if I'm the Federal Reserve, I want to try to get back to normal here, because the risk of recession, I think, is greater than the risk of any resurgence in inflation.
David, not that this is a competition between you and Steve, but if the market had a vote, it would probably be voting with Steve right now. Front-end yields are moving higher by about 5 basis points. You're looking at equities giving up on their gains, except for small caps. That, to me, seems like a market that is saying, hang on, maybe the Fed can't cut as much as we thought it was going to. What do you make of that reaction?
I think, well, the thing is that I do work the details on all these numbers, and I was kind of surprised the consensus was as optimistic as it was in inflation. But I think people are looking for, at this stage, they want, okay, if we get a negative surprise in inflation, then maybe we can price in some more Fed rate cuts. If we get something close to expectations, then we'll sort of sell the news. And I think that's what's probably going on in the bond market. But it doesn't change my view that things are weakening here, and on the inflation side. And the really important thing then is, where is the economy looking when we get to September? Because we'll get another inflation report, but importantly, we're going to get a jobs report for the month of August. And that's going to be really crucial here, because if it looks like the economy is softening too much, I think the Fed can look at these inflation numbers, they can study them, they can be confident they're going to head towards 2%, but they don't want to be responsible for holding rates too high for too long and helping trigger more economic weakness. And so I think they'll be looking very closely at what's going on in the labor market and on the demand side of the economy.
So, Steve, David says the risk of recession at this moment is
So the
greater
US
where
2's
we
10s
are
yield
than the
curve
risk of
flattens
inflation
about 1 spot
reacceleration.
3
Do you
basis
see that
points to negative
completely
11 spot
different?
6 basis
Yeah,
points
I
following
don't see a real
CPI.
risk of a recession whatsoever.
But do you see risk of reacceleration of inflation?
If you wind up with an accelerated economy, the answer is yes. And that, I think, is the risk in this scenario. This economy really hasn't slowed much. Look at the GDP numbers. Yeah, we've slowed from last year's 3.3% number, but we continue to exceed expectations in terms of where we're going in the second quarter numbers and what we're looking like eventually in terms of where we are in the current quarter. You know, the Atlanta Fed nowcasters are at very, very high rates of growth. And this becomes an ongoing problem, is that you do run the risk of a domestic cyclical story versus a global deflation story. And this really is the end result debate. We were talking about it earlier. This is the discussion, deflation versus cyclical inflation, globally versus domestically. Where do we pan out on this? David's right. Inflation has been coming down slowly. It's coming down slowly primarily because there is this real battle going on between these two forces. And the problem I see is if you start backing away from the pressure that's allowing you to achieve your target, you might wind up creating an environment where you stop improvement towards your target.
But what would you say to corporate CEOs that continuously say they are seeing this slowdown from consumers? They do see consumers deferring big spending.
Again, after an environment of 3.3% growth, which is a 1 percentage point above trend, you're going to see that inflection point. And that's a real inflection point. By the same token, you have services where spending is doing exceptionally well. And I think that becomes part of the problem. Again, it's the goods versus the services side of the equation. Services are doing extremely well. You're seeing that in some of the components that people want to throw out of the CPI report. The reality is it's services that matter domestically. It's goods that matter globally. Globally, it's a deflation story. Domestically, it's a cyclical inflation story. The currency sits in between the two, and where the currency goes from here will be critical. If we get back to 100 on your DXY measure, from having been as high as, 113, 116, that's a huge depreciation in the currency, and you could start to see some of these benefits on the good side of the inflation dissipate at the same time that you may see a little weakening in the service side of the inflation, and you wind up stuck at 3% inflation. Now, if the Fed's willing to be stuck at 3% inflation, fine. Bonds have to adjust to that.
David, we'll let you respond in just 1 second. I just want to, if you are just joining us, give you a sense of where we are right now. CPI month over month coming bang in line, as Mike was saying, with forecasters' expectations 0.2%, up from negative 0.1% in the prior month. Across the board, ex-food and energy 0.2% in line. CPI year over year coming in at 2.9%, just a touch below the expectation, and ex-food and energy 3.2% bang in line. All of this really suggesting forecasters are getting it right. Mike has been looking through the details, the line items that we can debate whether they matter or not. What are you finding in terms of interesting nuggets?
Well, plays into the whole political campaign season that we're in now. Insurance prices are very mixed. We do see motor vehicle insurance prices going up significantly, and if you look at X, formerly known as Twitter, I think you said that yesterday, a lot of complaints about that. But homeowners insurance is flat on the month. Medical insurance down just a little bit. So it's not a universal situation. Airfares were down by 1.6%, so if you're traveling, you're going to notice that. And overall, it is housing that has pushed this up. 90% of it was the 4/10 rise in owner's equivalent rent and shelter, and that the Fed can't do anything about. So they're going to have to decide, they'll go back to Powell's ex-shelter measure and say things are getting better. One other political thing, and I know Anne-Marie will appreciate this, bacon prices down 1.1%. So that was, I guess, a big issue on one of the candidates' public appearances this week.
Bacon was on your bingo card. Here you go. Thank you so much, Mike. David, Kelly, and Steve Rasciuto still with us. David, I want to go back to you. And there is this real question about the line items and how much they actually matter versus just the overall aggregate index pointing to a certain type of scenario. What gives you confidence that we are not at risk of reacceleration at a time when, as Steve says, the dollar is actually weakening, and as the Fed is likely to cut, weakening even still?
Well, a falling dollar, although frankly it'd be a good idea if the dollar came down in the long run. It wouldn't, I think the dollar's been too high for too long, but that would add a little bit to inflation. But this is not an inflationary economy. Let's just pick up on airline prices, because I think that it sort of exemplifies the exact nature of the U.S. economy right now. Airline prices are down 2.8% year over year. But if you look at the number of people going through TSA checkpoints, it's up over 5% year over year. It is at an all-time record high. Americans have never flown more than they are flying today. The planes are all packed, and yet the airlines can't actually push up the prices year over year. They've had to push down their prices 2.8%. So, I know Steve is a little more worried about inflation going up. I'm a little bit more worried about the economy slowing down. But so long as we disagree in that way, the truth is the economy is just doing great here. What we're seeing is steady, low inflationary growth, with inflation gradually coming down, and hopefully the economy avoids recession. I do think the Federal Reserve ought to normalize rates to try to remove that risk, because I think they are distorting the economy by keeping rates a little too high at the short end for where the economy and financial markets are. But overall, this economy is in a pretty good place, and I hope that Steve and I are similarly disagreeing as vehemently in a few months' time, because that'll probably say the economy is straight down the
Futures
middle,
imply
doing fine.
that after the
I mean,
CPI,
you hear
traders
that
see a
from the Fed, to be fair, as well,
56.5%
this idea
chance
that
of the
the
Fed
economy's
cutting
doing
the Fed
fine,
funds rate by
and they have
25
time,
basis points
and
at the
that means that
September
we can just
meeting.
wait for more data.
Seeing a
Steve, you look at this data,
43.5%
is the
chance of
wait
a 50
over? Do
basis
they have
point
everything
cut.
they need to cut?
If they could get a unanimous agreement, they will cut interest rates, yeah. And I think you would need something on the labor market to do it. I think, we're arguing today over the CPI number. I think they've already taken that out of the equation. I think it's all about the employment numbers. And the claims numbers, we'll see what the retail sales numbers give us tomorrow. We'll see what the claims numbers give us. People aren't getting fired. What's happening in the unemployment rate is people are coming back into the labor force. They finally used up all that excess savings that most of my colleagues on the street thought they had used up, a year ago and hadn't used up. The reality of the situation is the transition that's taking place from a very abnormal recovery period to an expansionary period is going to be volatile. And reading through all the tea leaves, trying to look at one or two indicators, makes an enormous amount of mistakes. What's important is the breadth of the data within the payroll employment report. It's like the breadth of the data within the JOLTS data, and I'm not a big JOLTS fan. It's the overall aggregate interpretation of the data. And this is what the chairman's trying to bring out. But by the same token, he also then wants to hang his hat on a particular component within a report to say, oh, well, this is what I'm looking at. But the reality is you can't have it both ways. And that's what they're trying to do, and I think that's what the markets are trying to do. They want the Fed to cut rates, and they want the Fed to cut rates a lot, but we don't want the Fed to cut rates too quickly that people begin worrying about a recessionary environment, and then the equity market goes down. So we want to craft an environment where bonds go up in price, equities go up in price, and everybody can go home happy. Doesn't always work out that way.
To that point, David, of whether or not the Fed likely they're going to be cutting in September, but now the debate is, do they go 25 or 50? If you think we're closer to the risk of recession than a risk of reacceleration, do you think the Fed needs to go 50 basis points in September?
I think I would like them to go 50 basis points, but only if they can message this as being part of a normalization, because honestly, rates are in the wrong place and they need to get to normal at a reasonably rapid pace. I think that's what they ought to do. But they have to message it that way, because the problem is that, as Steve said, if the Fed cuts 50 basis points and does it because they are scared of the unemployment rate going up too fast, it won't speed up the economy. It'll scare people. It'll cause people to halt business decisions. It will cause people to wait for lower rates before they borrow money. It will reduce the income for people, the $6 trillion in money market funds out there. So the problem is there's a J curve in monetary policy. When you cut rates, it actually hurts the economy before it helps it. And that's why they've got to be very careful here. Of course, the truth is they shouldn't be in the wrong place. They should never have raised rates as high as they did, and they should try to get back to a normal short-run interest rate of somewhere in the range of 3.5% to 4%, and just stay there. But I do think that I think the employment report for August will be crucial here. I do think they ought to do 50 basis points, but I think they ought to try to message that as, look, the economy is fine. We're just getting back to normal at a reasonable clip here. We're not going to draw it out over a year and a half. We'll try to get back to normal a little bit more quickly than that. If they do that, I think they're managing the situation well.
Well, David, I guess what I don't understand then is if we're 50 basis points and we have more room for that, is that not sort of like an emergency cut? I mean, isn't 50 on its own something you wouldn't do if the economy is healthy?
Well, we didn't really have an accelerating inflation problem at all in 2022 and 2023. The inflation rate was coming down after June 2022, and we saw plenty of 50 basis point rate hikes. So I think the Fed has to sort of desensitize the economy a little bit, say, look, just don't freak out here. Big moves in short-term interest rates don't seem to have much impact on economic variables anyway. So let's just get back to normal. But it's a close call. I mean, the thing that I wish they'd started earlier, because then they could have started based on, look, inflation is steadily heading back towards 2%. We're very confident we'll hit 2%. We're going to take off the brakes here. They ought to start doing that earlier, because I agree that if it looks like they're doing this as an emergency rate cut because the economy's in trouble, that's only going to weaken the economy. So they have to be very careful in messaging. I think should start with expressing some confidence based on today's numbers that the inflation situation is on the road to 2%.
Steve, just final word, 30 seconds, your view on 50 basis point rate cut in September.
There's no way, given the dots, they can message that properly. Remember, this is a committee that went from several rate cuts before the end of this year to 125 basis points. And now we're talking about, oh, gee, in September, let's go 50. What are the dots going to do? Are we going to get a number of people on the committee to turn around and say, oh, I'm going to reduce the dots? Are they going to be able to do that? They don't talk about the dots in that direction. So the reality is, if they go 50 basis points, then the question is, what changed so much that you only had one, that now you have two, and you're doing it all in one shot? And then what happens to the additional meetings for this year? So the reality is, like we saw the other day when the unemployment rate came out and the market moved, people jumped to the idea that when the Fed cuts rates, a recession begins. And this is a mistake. Typically, when the Fed has cut rates in the last 4 cycles, it's because we had a credit crunch. There is no credit crunch unfolding, and therefore there is no real need to move aggressively in monetary policy.
Steve Risciuto of Mizuho, David Kelly of JP Morgan, thank you both. We love having you on, especially together. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Hackes. Yahira.
Hi, Lisa. As you were discussing, U.S. inflation eased on an annual basis for the 4th consecutive month, keeping the Fed on track to lower interest rates when it meets in September. Core CPI increased 3.2% in July from a year ago. That's the slowest pace since early 2021, while the monthly reading rose 0.2%. The print showing inflation is still broadly on a downward trend alongside a softening job market. And U.S. mortgage refinancing surged last week by the most since the early days of the pandemic as borrowing costs continued drifting lower. Mortgage applications climbed 2.8%, the largest advance since the first week of June. Meanwhile, the rate on a 30-year fixed mortgage eased 1 basis point to 6.54%. And shares of Kellanova are rising in the pre-market, up 7% after Mars agreed to buy the maker of Pop-Tarts, Pringles, and Cheez-Its for nearly $36 billion. Kellanova was spun off from Kellogg last year, and since 2020, Mars, which is known for M&Ms and Skittles, has scooped up snack bar maker Kind's North America business and Nature's Bakery as part of an effort to expand its snacks portfolio. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, setting you up for the rest of the week, you're watching Bloomberg Surveillance.
Who is the Vivian Tom clientele?
Yeah, power women, like the dragon. Dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, they are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is Individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Markets still trying to figure out what to do with the CPI print. Right now, counting you down to the opening bell. Here's the trading diary for the rest of the week. Tomorrow, we'll get retail sales, plus another round of jobless claims, plus Walmart reporting before the market opens. We'll also get Fed speak, and this time, yes, it does matter, from Musalem and Harker. And on Friday, we'll get round out the week with housing starts, UMich sentiment, and more Fed speak from Chicago Fed President Austin Goolsbee. We are about 24 minutes away from the CPI print that hasn't showed that much more clarity, but at least doesn't seem to derail the Fed from cutting rates. Danny, what's your takeaway from what we saw today?
That this market was all just shoved up into it, that we went so far on this bond market. The JP Morgan client survey showed the most net long on Treasury since the start of the year. So we went into this decision kind of expecting something soft. We got something basically in line, hence the market reaction.
Anne-Marie, just taking a step back, it sort of raises this question, how much more clarity do we actually have right now versus before?
Well, when you have Steve Rasciuto and David Kelly on, I don't really walk away from this conversation with any clarity. Steve Rasciuto was talking about the fact that the Fed shouldn't be cutting. David Kelly saying they should be cutting, and he'd hope that they would go 50 basis points. If that were the case, though, think about the timeline. 50 basis points going into a U.S. presidential election where people already are trying to politicize this. So I have not a lot of clarity, except for the fact that I think, given the report here, housing costs, that's going to be a huge talking point Friday when Kamala Harris comes out.
I can imagine so. Coming up tomorrow, don't miss this, Lisa Shallett of Morgan Stanley, Tom Steyer of Galvanized Climate Solutions, Harry Sommer, CEO of Norwegian Cruise Line Holdings, and Joyce Cheng of JP Morgan. This was Bloomberg Surveillance.
Day one at the Cincinnati Open, Frances Tiafoe stormed into the second round with a straight sets win over Spain's Alejandro Davidovich Fokina. 6 aces, 4 breaks, and 18 winners for Tiafoe, while 23 unforced errors told the story of the match for the Spaniard. The American closing out the victory on his 4th match point to move on. And don't forget, you can watch all the action live on Tennis Channel. Our daily coverage starts at 11 a.m. Eastern.
The top names in global leadership are on Bloomberg.
I envisage not only some kind of a bridge towards membership or language linked to the irreversibility of Ukraine's membership in NATO, but also some kind of a broader package of military material, of financial aid. The more we support Ukraine right now, the sooner the war will end.
Nobody covers the top global leaders like Bloomberg Television and Radio.
One of the institutions you've been very philanthropic with is your alma mater, Harvard. But recently you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's treatment of Palestinians in the West Bank, or you can say, we can talk about Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs so I make sure I don't inadvertently hire them. And so I tweeted out that, sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local
The effective
money
Fed
in
fund rate
China
is
for
unchanged at
investing and bringing those that
5.33%
choose
for
to be
August
there,
17th.
To invest in China.
Excuse me, that
So
was
it's
for
just a
August
different,
13th.
Where the money's coming from is just different.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
All right, we have markets that are showing green arrows now after CPI came in bang in line with expectations. 30 minutes until the start of trading. I'm Matt Miller.
I'm Shonali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, core inflation eases for a fourth month in the United States, keeping the Fed on track for a cut in September.
And we have one of the biggest deals of the year. Mars scoops up snack maker Kellanova for $36 billion.
And the push to break up Google. We've got the latest as the DOJ considers a rare antitrust move. But let's take a look at where markets are trading 30 minutes until the opening bells and 30 minutes after we got that CPI print. As Matt said, green on the screen right now. Not huge moves, especially relative to what we saw yesterday. But the S&P 500 up about 0.2% right now. Same thing, too, if you take a look at big tech. Of course, not doing too much to alter those bets on a September rate cut. Meanwhile, the bond market, you did see a move out the long end, but currently 10-year yields retracing a little bit. I'm going to go ahead and call that unchanged, Matt.
All right, I'm taking a look in depth at the CPI, at the inflation report. I'm using the function on the Bloomberg terminal, ECAN-GO, E-C-A-N-GO. If you pull that up, you can get data for CPI, PPI, non-farm payrolls, what have you. I've clicked in for a deeper look at the shelter component, which is this amber box here. You can see it's getting smaller and smaller, but maybe not quickly enough. We'll talk to Mike McKee about CPI in just a minute.
Let's look at those pre-market movers as well. We were talking about that mega deal, Mars agreeing to buy Kellanova for nearly $36 billion, and it'll bring together two major food companies in one of the biggest deals of the year. And Kellanova shares up more than 7.3% on the heels of that. We're watching shares of Starbucks after its record surge yesterday, adding more than $21 billion in market capitalization on the heels of a new CEO announced, but now down almost 1%. NVIDIA also being watched here. Shares moving about 2% higher pre-market. Remember, they've surged 17% in the past 4 sessions, adding nearly $424 billion in market value, Matt.
All right, we are looking at, I would say, kind of a muted reaction to the CPI numbers. Very important to get this look at inflation. Of course, we're also going to focus on the labor picture with unemployment claims, and then at the beginning of September, the non-farm payrolls number before the Fed makes its decision. I think when we get cooler and cooler inflation numbers, it lets the Fed worry more about the labor market. So it takes this more out of focus, in a sense.
And I mean, you made the good good point that there's still a lot of data to get through before we get to that September Fed meeting. But when it comes to this market reaction, just the one-day tick, you could argue it was priced in. We got the PPI numbers yesterday. We saw that huge rally. And now we got these numbers bang in line.
How much does it take 50 basis points off the table is what I want to know, because there were still
Was it on the table at some point?
Well,
I mean, all the
market was
economists that
betting
we
on
surveyed,
it.
80% of the economists we surveyed say 25 basis points.
Economists versus the market at all times, Matt.
All right, well, let's ask Mike McKee. He knows all the answers. He's our Bloomberg Chief International Economics and Policy Correspondent. 50 basis points?
We'll get to that in just a moment. The market is adjusting, but we did get a bang-in-line number, 0.2 on core, 0.2 on headline, and that's why you're not seeing as much of a market reaction, because that was priced. But the good news is, on a year-over-year basis, because of rounding, we dropped to 2.9% on headline. First time in the twos since post-pandemic for CPI, and headline core CPI, rather, on a year-over-year basis, 3.2%. That's a decline as well. So overall, inflation is well behaved. Now, Matt brought up ECAN at the top of the show. I want to go back into ECAN and look at where we see the big moves. And the yellow there is core services, which includes housing. And that's 90% of what happened this time. Basically, housing prices went up 0.4. That's a little bit more than last month, and that really accounted for almost all of the increase that we did see, the 0.2 increase that we did see. Now, to your question about what does the Fed do? Markets think the Fed at this point is still looking for a little more than one move, but not a whole lot. We have come off that idea, as you can see there. Number of cuts priced in under overnight index swaps, and now we're down to 1.3. We were at 1.5, and as you can see back on August 8th, and then we go back all the way to after the jobs report, and we had more than 2 priced in. So markets are backing off the idea of 2 rate cuts. But remember, we get another CPI and we get PCE before the next meeting. And the other real issue here for all of us, including the Fed, is politics. It's an election year. So what is happening with overall inflation? You take a look and you can see that inflation, the blue, is coming down on a month-over-month basis, CPI, but the level has only just sort of flattened out, maybe gone up a little bit, and you can see the red line there gives you the trend line. So voters are looking at the white and red lines, and economists and Fed officials are looking at the blue lines, and they've got to close that gap before anybody can get elected.
And what's fascinating here to me, too, is you have this inflation print this morning. This was supposed to be the big moment of the week, but there are a lot of people that are watching, and you pointed out earlier this week that tomorrow might actually be more important with the retail sales, and then many also looking at the jobless claims numbers.
If we don't get if we get a major move in retail sales, especially to the downside, then that could move markets more than we're seeing with CPI today, because it feeds into the narrative of is the economy slowing too much? Same with jobless claims, if they happen to jump up. But we probably aren't going to see a resolution to the idea of 50 basis points unless Jay Powell comes out next Friday and says not doing it, until we get the jobs report for August in September. That'll set people's expectations for what the Fed's going to do.
All right, Mike McKee, really appreciate the breakdown as always. That, of course, is Bloomberg's Mike McKee. And let's keep this conversation going now with Amanda Agati. She is the CIO of Asset Management over at PNC. So come into this debate, 25 basis points versus 50 basis points in September. Does it really matter, the magnitude, or just the fact that we're starting?
Oh, I absolutely think that it matters, but we're very much in the camp of it being 25 basis points as opposed to 50. Of course, the market is leaning towards 50. Market wants the sugar high, craving more policy accommodation, but the sky's not falling. The market thought the sky was falling, but based on the data that's been coming in, it's hashtag choppy, but not falling precipitously here. And so we think 25 is the right first step towards easing policy.
Is that enough for us to continue this rally? I mean, we've had a great, I think the best 4 days of gains on the S&P so far this year after, I mean, speaking of choppy, last week was tough, but if we get the Fed starting to cut on September 18th, can we keep going to 56, 57, 5,800 on the S&P?
I think it's a tough slog, to be honest, in terms of keeping this rally going from here. For all intents and purposes, this market is still effectively priced to perfection, despite what happened with the sell off and rebound. It's almost like it was a distant memory. And so there isn't a ton of headroom to keep this market rally going without seeing a really significant rebound in earnings growth expectations. And Q3 is kind of starting to look a little bit weak here. I'd like to see that rebound in terms of revisions. And so far, it's going in the opposite direction. So I think that may very well be more of the key to keeping this rally going.
You know, I hate talking about the past, Amanda, but just over a week ago, we really saw a pretty significant one-day decline in all the major U.S. indices after really steep declines around the world. And you do have some fear under the surface still. Can we still see some shocks given where leverage is, given where positioning is? Do you have to be prepared?
I think you always have to be prepared. It's the things that we don't see coming, right? Out of nowhere that certainly send some shockwaves through the system. I don't know that there's anything in particular at the moment that's bothersome here in terms of, a significant catalyzing a significant correction. It's really more about the fact that I think global economic growth is still quite weak. We're starting to see some movement in terms of central bank policy accommodation. Fed's last in line. It's very unusual for the Fed to be last in line. So they need to join the party here. But as long as they start moving here, I think it can help stabilize the backdrop.
And how does that filter out in terms of how you want to build a portfolio around that? I mean, I know that reading through your notes, you've been pretty defensively positioned. I mean, after we start to see that rate cutting cycle kick off in the U.S., is that the green light to maybe move out to maybe some more cyclical areas?
Oh, absolutely. I'm chomping at the bit to try and back up the truck here in small and mid and value and certainly cyclical oriented exposures. It feels a bit early, though. And so from a defensive positioning perspective, it's not like we've been sitting on the sidelines with a ton of cash. We've been fully invested, but our exposures tend to lean more quality, dividend growth oriented. There's been some minimum volatility exposure to help create some ballast in portfolios, which was really helpful in the middle of the sell-off, and we're leaning investment grade and fixed income. So I would like to move towards cyclicals. I would like to move towards some more below investment grade credit exposure, but just not yet. It's a little bit early to make that move.
Are you worried about the consumer, Amanda? We've gotten some concerning reports in terms of big ticket items like travel from TripAdvisor, Airbnb. We've gotten, not encouraging reports from Disney in terms of the parks, and we get some retail numbers out this week. How's the consumer look to you?
The consumer's starting to exhaust itself. It is not hitting a wall per se, which is good news, but I think the consumer is definitely starting to exhaust itself. And so there's still a lot of activity happening on the services side of the equation. You see that in the CPI print for sure, but definitely there's some trading down in terms of behavior that's happening there. It's natural. It's late innings of the cycle. We've been spending like gangbusters these last few years post-pandemic. So I think it's natural to see that start to fade a bit here. I think back to school shopping is going to be really interesting to see what happens from a consumer spending perspective. Certainly holiday shopping. I can't believe I'm saying that since it's August, but I think we're going to get some more clarity on health of the consumer going forward, but we don't see this big wall right in front of the consumer here.
Some of these big consumer names are really driven on some significant and event-driven activity. You look at Starbucks, you look at Kellanova today, and there's a sense out there that this is a stock picker's market. Do you buy into some of these moments that M&A or spin-offs or other event-driven moves are giving investors a new opportunity?
I always feel like it should be a stock picker's market. As a former equity analyst, I'm all in on the idea of stock picking. And so certainly event-driven opportunities can create some interesting actionable moves for investors. It has not been much of a stock picker's market this year. It's really been the top 5 or 7 names that have been the only things that matter. And so active management has definitely struggled. But I do think that as we move towards Fed policy accommodation, an inflection point in the cycle here, it is going to create some more opportunities for investors to get really active and be less focused on just broad beta exposure. As it relates to some of the deals and what's been going on today in particular, that to me feels like a pricing power story. So to kind of harken back to consumers starting to exhaust itself, I think some of the catalysts for some of the deals and the action that you're seeing is because pricing power is starting to wane, and so scale in this environment is going to matter an awful lot going forward.
All right, Amanda Gotti cut her teeth at Legg Mason. Now she's the CIO at PNC's asset management arm. Thanks so much for joining us. Great to get your take. Another quick check on futures after that CPI number. We're still looking at green arrows here, just about 1 or 2/10 of 1% on the S&P, and on the Qs you see Russell 2000 up about 1/3 of 1%. So we're looking at gains even as bond yields rise a little bit, 3 or 4 basis points. Let's get a look at these individual stocks moving ahead of the opening bell. For that, we go over to Bloomberg's Jess Menton. Jess?
Well, happy CPI day, guys. The option market was pricing in a 1% move in either direction, but as you said, Matt, the futures kind of muted reaction right now. But when you look under the hood here, Micron Technology, one of the big movers this morning, if you look at that stock, up about 3%. So New Street Research actually reiterated a buy rating with $150 price target on this. Stock's actually up over 50% over the past 12 months, so outperforming its other components here. But really, this had to do with a lot of the AI and server type business. If you move over, though, look at some other individual movers, though. Have to point out Alphabet's Google getting pressured here, down about 1% ahead of the opening bell here. A lot of this had to do, as y'all were mentioning earlier, when it comes to the Department of Justice potentially having any potential thing when it comes
Seeing
to
here,
breaking
Biden says there is more work to do on inflation, but we are making real progress. He also says the prices are still too high.
It's probably why you don't see the stock moving even lower on this, but Alphabet stock's actually up about 18%.
He also says that large corporations are not doing enough to lower prices.
Healthcare space for healthcare distributors, Cardinal Health here getting a bit of a pop here, up almost 6% ahead of the opening bell. If you look at its annual profit forecast, actually boosting that. But something to keep a close eye on is if it gaps up above its 200-day moving average. If you look at the A&R function right now, has 9 holds, 9 buys, and actually 1 sell rating on this. But those are some of the big movers ahead of the opening bell, guys.
Jess, we thank you so much, and I will talk to you later in the show. Looking forward to it. And coming up, we're going to talk about a major deal. Candy giant Mars is forking over $36 billion to buy Eggo and Pringles maker Kellanova. We're going to discuss the consolidation we're seeing in the food industry. Up next, Kellanova shares on the rise. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest to look at what's making headlines around the world. The world's biggest steel producer is sounding the alarm about a crisis in China with the potential to send shockwaves across the globe. The chairman of Baowu warned of a deeper industry downturn for the metal than the traumas seen in 2008, I should say, and 2015, with conditions in China proving to be, quote, longer, colder, and more difficult than expected. UBS, on the other hand, beat expectations in the second quarter after posting higher than expected profit thanks to investment banking revenue. The Swiss bank has also made progress in its integration of Credit Suisse, and CEO Sergio Armati doubled down on efforts to return capital to shareholders through a $1 billion share buyback this year. Victoria's Secret is poaching the top executive from Rihanna's lingerie brand to lead its turnaround. Hillary Super is replacing Martin Waters as CEO at the retailer, with CFO Tim Johnson assuming the role in the interim until September 9th. The lingerie maker has been struggling for years with competition and misconduct allegations. Shanali?
And we're keeping an eye on shares of Kellanova. We've been talking about it, one of the largest deals of the year. Mars is buying the maker of Pringles chips and Eggo waffles for $36 billion. Buying Kellanova will help diversify Mars's chocolatey product line away from cocoa, which has hit historically high prices this year. Mars has been diversifying into the snack business, and earlier this month, Kellanova actually raised its guidance for the full year. Let's discuss what's going on with Bloomberg Deals reporter Crystal C., who, of course, has been covering this story, but also realizing Kellanova actually recently spun out of Kellogg's, now merging with Mars. How is this a company that has changed hands like this? What does this make sense most in this industry for?
Yeah, so Kellanova is actually the RemainCo, and KW Kellogg is the spinoff. Anytime you have like a spinoff situation or any kind of a separation, actually both companies tend to become more vulnerable, even though this is a really big company. It's like a $30 billion company. Today, the premium is sitting at around 33% compared to the unaffected stock price 2 Fridays ago. I think it's really interesting because the tax, there was a tax implication when it comes to any spinoff, and that has reached a sunset. So it's a really good time for any buyer to come because the separation is done, the tax is out of the way, and there you go. This is a deal.
I feel like hanging over the M&A space, of course, is regulation concerns, antitrust concerns. What are we expecting when it comes to this deal, which has a pretty huge price tag? I believe this is the largest deal of the year.
It's the largest deal of the year so far. It's larger than the Capital One situation. So right now, it is the top of the M&A league table. So congrats to all the banks and advisors that are on it. But like Shanali was saying, actually, Mars has a lot of cocoa products. So it's mainly sugar, sweet confectionery products, whereas a lot of the Kellanova offerings tend to be savory snacks like Cheez-It, Pringles. So actually, all in all, it's actually quite a good combination. It's quite a complementary portfolio of products.
They also make Pop-Tarts, which is, I think, interesting because it comes after what is possibly the worst movie ever made.
Jerry Seinfeld. I love that movie.
You thought it was good?
Yeah, I loved it. Kitschy.
What movie is this?
The Pop-Tart movie.
Oh, I didn't know.
You didn't see it? Well, all right. I only saw a little bit. I couldn't get through the whole thing. But they get an international reach with this as well, right? Because Mars has been fairly restricted to U.S. sales.
So actually, Mars has some European operations as well. Mars actually has a pretty good global footprint. And when this Kellanova when this deal was kind of became on the block, when it became separate, it kind of put a sale flag on a company. One of the concerns is that if there's a U.S. buyer that approached Kellanova, it doesn't have the distribution or the expertise to sell the products globally like Kellanova does. Actually, Mars comes in being one of the most perfect natural buyer here because they actually know how to sell your Mars bar, your Twix, outside of the U.S.
Just wanting to comment here on Crystal's point here on the bankers here, because it did pop Goldman on the league tables, even higher up on the league tables, now firmly in the lead for M&A above JP Morgan from a 26% market share compared with JP Morgan's 23%. Lazard, also on the deal, came in with record revenue in the most recent quarter. So solid inking here of the deal's turnaround.
Well, like Crystal said, congratulations to the bankers. Crystal C., thank you so much. Appreciate your report. reporting this week. Now, coming up, we'll take a look at the companies making the most social buzz today in our Social Climber segment up next. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
All right, it's time now for Social Climbers. The companies making waves this morning. And first up, Brinker International, the parent company of Chili's Bar and Grill and Maggiano's Little Italy, missing profit expectations and giving a downbeat outlook for the next year. The casual dining space, of course, has been hit by a decline in demand from cash-strapped patrons, and you're absolutely seeing that in shares today. Next up, FanDuel parent Flutter Entertainment reporting soaring sales in the second quarter. Remember, the company recently moved its stock listing to the NYSE from London and as such benefiting from a surge in new U.S. customers. And finally, Donald Trump's appearance on X earlier this week, creating yet another headwind for his own competing social media platform. We're talking, of course, about Trump Media and Technology. Of course, this is the latest blow that's wiped out $3 billion in market value from the stock just in the last month. DJT, of course, struggling with mounting losses and stagnant user numbers. Of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal, Matt.
All right, let's get a quick check at what's going on in terms of the stock market futures. We're looking at gains of about 0.2% on S&P and NASDAQ futures. Don't forget, yesterday we had a massive rally. The NASDAQ was up, I think, 2.5% yesterday, and it's been the longest or the best four-day stretch for the S&P. Here you can see the two-year yield as well. Me and Shanali keeping a very close eye on two-year yields. Up almost 5 basis points, although we did see a little bit of a dip into the number. The CPI number looked to relieve some market participants in terms of the coming cut. This is Bloomberg.
2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is, we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like this, the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform?
1 minute remaining now till we get the market on open imbalance and the US cash equity open.
How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Morning from our world headquarters in New York. I'm Manus Cranny.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, we got about 20 seconds.
So looking now to the market on open imbalance. S&P 500, 40 million to the buy side. NASDAQ 100, 15 million to the buy side. Dow 30 stocks, 10 million to the sell side. Mag 7 stocks, 15 million to the buy side.
Rally yesterday. NASDAQ was up 2.5%. Now you see futures up about 0.2%. Opening bell ringing at the New York Stock Exchange. Realty Income celebrating its 30th anniversary of its listing. And you got blacks at Microsoft looking to advance people of color within the company, recruit talent, retain talent, ringing the bell over at the NASDAQ. In terms of where the indexes are trading, just a few seconds into the start of the cash trade, let's get over to Katie Greifeld. She's got the details. Katie?
All right, 22 seconds into the U.S. trading day. As you said, it's a little bit quieter than what we were looking at yesterday. Of course, that massive rally following softer than expected PPI. Yesterday, we got bang in line CPI at 8:30 today, so not too much of a reaction right now, but you can see the S&P 500 up by about 0.2%, a little bit more so if you take a look at big tech, up about 0.3%. Small caps in the lead right now, at least for right now. The Russell 2000 up about 0.4%. Let's take a look though at Victoria's Secret. Shares absolutely climbing right now on news that it hired the top executive from Rihanna's lingerie brand. Hillary Super will lead the turnaround plan for Victoria's Secret, which of course has struggled for years with added competition and a slowdown in demand. Super begins the new position next month, but of course traders not waiting. Shares currently up about 16%, Shanali.
Keeping an eye still here on Kellanova shares, up more than 7.3% this morning on the year's biggest deal. It's been talked about for some time, but this morning Mars said it would agree to buy Kellanova for $36 billion, and here's the catch: in cash. And Kellanova makes, of course, snacks like Pringles, Eggo's waffles. Analysts have said a Mars Kellanova tie-up wouldn't face major antitrust concerns, so the ARBs here have no reason to be all that concerned if you listen to the analysts, at least. Matt?
I feel like you're intentionally leaving out Pop-Tarts. Do you not like Pop-Tarts?
I don't. I'm more of a toaster strudel kind of girl myself.
All right, Shanali, thanks very much. Alphabet's Google. Bloomberg was the first to report that the U.S. Justice Department may soon attempt to break up Google after a landmark court ruling found the obvious. The company monopolized the online search market, as we all knew already. Let's discuss with Bloomberg Technology co-host Ed Ludlow out of San Francisco. And Ed, it's not, I guess, so important that they monopolize search or that they have a monopoly there. It's what they do with it, right? That's the problem.
Yeah, I think what we're learning through this reporting is that DOJ officials are looking at the entity as a whole, Alphabet, parent of Google, and saying, what action can we pursue? So the headline is that those DOJ officials and attorneys are considering a breakup bid, but there are many other options on the table. For what it's worth, Alphabet is down more modestly than it was in after hours when this story broke. I think we're down 0.8%, but so are some of the other mega caps. It's interesting in particular the divestment of the Android operating system. So we know that the concern about Google is that when it negotiates with a device maker, it contractually requires them to have preferable placement of, say, the Chrome application or Gmail application on a phone that has Android OS. So what about divesting Android OS? The other battleground is data. Either that Google is precluded from accessing data of the websites that it has access to through search, or its competitors get access to its data. So read the story. There's a number of options on the table here. A very thin sell-side reaction, and so it's hard to gauge the concern.
Yeah, well, that's what I wanted to go to, and I'm glad you brought up the pretty muted reaction right now. I mean, Alphabet shares currently down about, 0.7%? I mean, what to make of that? That the concern here isn't that great, that basically traders aren't seeing this as a very serious possibility?
What's that great Bloomberg expression at the moment? Context changes everything. Washington hasn't tried to do this for 20 years when it looked at Microsoft and wasn't really able to take that action. And so that's why the detail of the story is important. You know, a breakup bid of this size, factor in the political will needed to do it, the potential change of White House in November, particular focus on J.D. Vance and the continuity of policy around antitrust. But it's just really difficult to do because how ingrained search and Android OS is in devices and people's habits around the world. But the sell side is sanguine. I think I've seen one note from Dan Ives who's kind of shrugged it off. He's pretty bullish on tech, generally speaking. Right, so let's see how they act.
Yeah, and obviously after September, there's going to be a lot of discussion that will re-amp up about this exact matter. Bloomberg's Ed Ludlow, we thank you so very much. We know we're going to cover it much more on Bloomberg Technology at 11 o'clock. We're going to broaden out the conversation now about the markets with Lazard Chief Market Strategist Ron Temple, because of course, elsewhere, in addition to all of this news about big tech and about deals, we also had CPI this morning. The data has still been driving the narrative. We have retail sales tomorrow. We have jobless claims. So you take it all together, and where are you still looking for the most clues on the path forward to that next rate cut?
Well, I think the evidence is definitely in that inflation is largely back under control. If you look at the CPI over the last 3 months, at a headline level, it's annualizing at 0.4%. On a core basis, 1.6%. Again, 3 months is kind of short. But if we extrapolate back, you see a clear trend lower in inflation. And then the big debate is this because the economy is weakening too rapidly? You just mentioned retail sales tomorrow. On Friday, we'll get the preliminary Michigan sentiment, although that one's a little questionable because it tends to inversely relate purely to inflation. And then really the next data points are early September when we get the jobs data and JOLTS. So I think the evidence to me is the economy is still strong, inflation is decelerating, and full steam ahead for the first rate cut on September 18th. But I don't think anyone should hold their breath for 50 basis points.
As the consumer weakens, do you consider that gradual? I mean, they're not buying the big ticket items, not making holiday bookings. I even have been reading Bloomberg Intelligence research that marijuana buyers are looking for smaller ticket purchases. They're going down market a little bit. So clearly, wallets are tight.
Those were really the big spenders, Matt.
No. The point is, I mean,
that might go back to your Pop-Tart conversation.
Right?
Yeah. Anyway, I don't think we should extrapolate from cannabis, but I do think there are signs of the consumer basically seeing more fragility. I was encouraged last week. The New York Fed put out their quarterly household debt survey. The prior quarter, I was pretty worried because we saw significant increases in 90-plus day delinquencies on mortgages, on auto loans, credit cards. This quarter, it was stable. So 1.83% serious delinquencies, same as last quarter. Consumer debt went up very little in the quarter. So this says to me, yes, there are again signs of some moderation. And I'm always careful to say, by the way, let's remember, the economy started from a very strong position. So it's a deceleration of a strong economy. It's not a weak economy.
And I mean, if you take a look at the sector level, I mean, I hear what you're saying, and we're talking about the weakening consumer. And I mean, for some people, that would scream staples. I mean, invest in the companies where people need to spend money. But then you take a look at the sector level going back a month, 3 months, year to date, and that's kind of been mid-pack. It really feels like it's just been tech that's dominated up until, what, the past month or so. I mean, how do you put that together into a portfolio view?
Yeah, so I think what's really been interesting, again, is every day I tend to look and say, okay, what percentage of the year-to-date gain has been the top 10 stocks, top 20? It's still nearly 70% 10 stocks year-to-date. It's 80% from the top 20. But what's really interesting, if you look at the earnings trajectory and what the market is expecting as we move toward year-end, is the gap between the big 6 tech companies and the rest of the market narrows substantially. So I believe this quarter, if you look at the top 6 companies, it's around 38% year-on-year earnings growth. Rest of the market, 3%. And so by the time you get to the fourth quarter, those numbers go to 18 and 9. So I think that's what's going to be interesting, is this broadening out within the market, not necessarily to staples. It might not exclude staples, but I think you're going to see more beneficiaries of this spending on tech as we move into next year. We're also going to see the beneficiaries of lower interest rates. I mean, if you think about small cap stocks, are one of the biggest beneficiaries. The Russell 2000 has twice the debt to cap of the S&P 500, and 45% of that debt is floating rate versus only 10% for the S&P 500. So I think you're going to see some benefits there, and actually might be one of the better opportunities in the market right now.
One of the moves this morning that I was most interested in was the way the yield curve moved. There was a further steepening of the yield curve, and I've got to say, this week a lot of investors aren't watching CPI as much as maybe they're watching jobless claims, which in a prior world, that wasn't the case very recently. Are you worried about a landing that could be a little harder than what most people are prepared for right now?
I mean, we always have to contemplate the range of outcomes that could occur, but I'm quite confident that we are not going to have a hard landing. Again, this is an economy decelerating from strength to less strength, but I look at the yield curve right now, a 10-year yield at 385 this morning. To me, that's too low. I think the 10-year yield should probably be between 4 and 4.5%, and so that steepening makes sense. I think you're going to get the short end of the curve is going to come down. I think the market, by the way, is expecting too much at that end of the curve, and I think the market is pricing in too much in terms of how low Fed funds will go in the easing cycle. So if you look at Fed funds futures, use WIRP on your Bloomberg terminal, you can see by July of next year, the markets are saying 200 basis points of rate cuts. I don't see that. And I don't see 100 basis points by year end. I think basically the market's overreacting to 1 month of bad data from the jobs report.
And of course, that steepening trade, it's been breaking hearts for like a year. I feel like people have been trying to make it work to little success. But Ron, we're just getting started. You're sticking with us. That, of course, is Lazard Chief Market Strategist Ron Temple. Meanwhile, let's take a check on these markets. Of course, a couple minutes into the cash trade, you can see the S&P 500, small gains. We're talking about 0.1% after that in-line CPI print. Of course, all the big moves were yesterday after PPI. We're going to continue to keep an eye on markets next. This is Bloomberg.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg, Context changes everything.
What's more frustrating, playing golf or being CEO of Goldman Sachs?
Oh, definitely playing golf. But one of the great things about golf is when you have a good day and you're hitting the ball and you're making pars, I mean, that's what brings you back.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, Deutsche Bank says that Starbucks is now a buy, thanks to news, of course, that the coffee chain has tapped Chipotle CEO Brian Nichols to take the reins. Deutsche Bank says that this is a home run hire for Starbucks. Deutsche Bank's just one of the handful of banks upgrading the stock in the wake of that announcement. Next up, Argus Research says stop buying Hershey. The maker of Reese's Pieces slashing sales and earnings outlook for the year as shoppers really cut back on purchases of higher-priced chocolates and candies. Goldman rating the company a sell earlier this week as well. And finally, Cantor Fitzgerald telling investors to turn up the sound on SoundHound, recommending the stock as a buy and raising its price target. The company, of course, announced robust second quarter results along with the acquisition of an AI software company. The analyst over at Cantor says that the deal could be, quote, transformative, Matt.
All right, interesting stuff. We are back now with Lazard Chief Market Strategist Ron Temple, and I wonder what your take is on stocks. You know, it seems like everything we were freaked out about the last few weeks has passed us, right? The carry trade has been largely unwound, or maybe doesn't matter as much as we thought. The earnings are really solid. Inflation is coming down. The Fed looks like it's on track for one rate cut, but not, you know, an emergency rate cut of 75 basis points. Can we head back to 56, 57, 5,800 on the S&P at year end?
I think we can. I'm optimistic on the market more broadly. I do think, again, the dynamics are going to shift within the market away from being largely driven by 6 stocks to a broader base as earnings accelerate for the rest of the market. But, you know, I don't want to go too far in terms of valuation. S&P 500's at 21.7 times forward earnings as we speak. That's not cheap.
Is it priced to perfection? I mean, do we risk a drop if we disappoint on earnings?
No, I think there definitely is risk in certain individual stocks, as there always is. But when I look at equal weighted S&P, it's materially cheaper. If I look at other indices outside of the U.S., I think there's some real opportunities there. So I'm optimistic we still have upside, again, based largely on my scenario, the base case scenario of no recession, easing of interest rates. Importantly, when the Fed does ease, I don't think we're going to get 200 basis points of easing. You know, that would be the maximum I think we get out of the Fed. So maybe discount rates are a bit of an issue. Maybe we get 100 to 150 basis points of easing in the next year. So a little less optimistic on the Fed front, but that's because I think they're easing because of lower inflation, not economic weakness.
I also think one really important aspect of this is that inflation isn't a monolith. And if you looked at the data this morning, it was housing, it was insurance, it was kind of these important areas that people really need that would potentially, and this is according to Bloomberg Intelligence's Stuart Paul, crowd out the discretionary spending that you would see from the consumer. How much do you buy that theory and start to worry about stagflation under the surface?
Well, I'm glad you brought this up because when you look at the moving parts, all of the inflation this month, so core inflation 16.5 basis points, 23 of that was housing, right? So core goods went further into deflation. So it's really interesting. If you go back through the history of this inflation cycle globally, it really is largely a story of the pandemic, right? We had the surge in demand for goods. At the same time, you had supply shortfalls because of semiconductor shortages, shipping disruptions, et cetera. You had a big increase in goods prices. That's unwinding now. And so what's really driving inflation is housing and, frankly, auto insurance. If you look at auto insurance prices up 18.5% year over year in July, that contributed over 4 basis points of the 16 basis points, of course.
Mine is off the hook. I mean, it's like ridiculous.
It is consistent. And by the way, the range of factors, if, minor repairs that used to cost you $100, there's so many electronics embedded in cars now. Getting a new mirror on the side door could cost you $800 to $1,000 because their camera in the mirror is so expensive. And so there's partly that, but then there's also this concept of social inflation, which if you want to nerd out with some insurance analysts, go for it. But bottom line is there's more litigation, and juries are seeming to be more sympathetic to the litigants.
This is so my home turf, Ron, I've got to say. This is the nerd in me.
How's your auto insurance? You just got into a new car.
Not great.
No.
But that's got a long history to it.
All right, let's go back to earnings because we are in earnings season, and I don't know, you think about expectations, especially, you think about the broadening out that everyone told us was going to happen in earnings. Hasn't necessarily happened, and it feels like just overall this has kind of been a mediocre reporting season. And I mean, you translate that into what we're seeing in the macroeconomic picture with expected Fed rate cuts beginning in September. I mean, what does that translate to going forward through the end of the year?
I mean, you're right that it's been mediocre relative to the last 2 quarters where you had bigger beats on average relative to expectations. But let's just keep in mind, earnings this quarter are still likely to grow 11% on 5% revenue growth. That's good. I mean, on average over time, I think we should be expecting more like 8 to 9% earnings growth out of the S&P 500. So again, not so bad. The composition is the bigger issue that we've already talked about. And again, that's where I get optimistic about the ability of the market to rally from here, is when you have more companies delivering better earnings growth, that should lead to a healthier market. It's really interesting, by the way, back to the 80% of the rally year to date from 20 stocks. If you look in European markets and other non-US markets, it's a much healthier rally that we've seen. For example, looking in Europe, you've got banks, you've got tech, you've got healthcare. In the US, it's tech, right? Yeah. And so I'm looking forward to seeing that transition as we move toward year end, and I think that's a positive sign for the market in general. And I don't want to miss this, by the way. I do think people should look beyond the U.S. because the big sell-off in the last 2 weeks, Japan is the glaring sell-off. And a lot of the clients I talk to have been saying for the last year, every strategist is telling me own Japan, but when you ask them, well, do you own Japan? The answer is no. Well, if you've been waiting for your opportunity, now's a good time to do your homework on Japan as well.
Ron, great having you in. I'm going to try and get you back in here when we get the non-farm payrolls number, or before the Fed, let's say, in September. Ron Temple, their chief market strategist from Lazard. Coming up, some investors say credit investors should be listening more closely to what the VIX is saying. We'll explore in our Wall Street Beat next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg News Now. News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The bond market is definitely pricing a higher risk of a hard landing. I mean, that's what the yield curve's telling you. That's what the 2-year yield versus the Fed funds is telling you. As an equity person, you should pay attention. I mean, the bond market has probably a better look at, okay, what is the risk here?
NASDAQ turns negative now, lost down 0.3%.
Of a recession has gone up in the last 2 months, which makes sense.
That was Mike Wilson, Morgan Stanley chief U.S. equity strategist, joining us yesterday on a hard landing signal that might be coming out of the bond market. And for today's Wall Street Beat, we're taking a look at what bonds and equities are saying about the likelihood of a U.S. recession. Here to help us more is Bloomberg's Olivia Raimonde, who wrote this story, and it was interesting. Just a day ago, we were talking about Boaz Weinstein and his campaign against closed-end funds, but really he benefits in times like this, of volatile times, volatile stock and bond markets. What is he saying? What are other people saying about the mixed signals here being seen between the credit spreads and where they are right now and what the VIX has been doing?
Yeah, absolutely. Boaz put out a really interesting tweet last week during the market volatility that showed the correlation between VIX moves and moves in credit spreads. And essentially, he said that we've never seen a VIX this high and credit spreads widen out so little. So he said one or both must be wrong. The question is, what's the answer to that? And Boaz says that credit spreads are underpricing in the risk of a recession. We've seen weak labor data, weak housing data, weak manufacturing data. And yes, spreads widened out last week, but not nearly as much as the VIX did. And now they've come back down, and some investors say that spreads will widen again, but there are others that are firmly in the soft landing camp.
I mean, I thought that was an interesting tweet as well, because how much can you trust the VIX? I mean, I know we got to, 40 on the VIX last
64.
week?
65 almost,
Well, the intraday, I'm just looking at, the closing. I guess that doesn't quite matter. But now we're back at 17. The point being, we went up and now we're down. So, I mean, is the VIX the true signal here, or is it credit spreads?
Well, to be clear, they both went up and they both went back down. So it was the magnitude of the move. I think what Boaz and TCW as well is trying to say is that even though the VIX probably overshot and there was a lot of technical factors that had to play into there, the move itself still reflected real concern about the recession going forward, whereas the widening that we saw in credit spreads and just where we see them sit now and even last week compared to historical averages is way too low and not pricing in nearly as much recession risk as Boaz and TCW and other funds think should be priced in.
All right, Olivia, great story. Thanks so much for joining us. We're going to keep an eye on both of those things, the VIX and credit spreads. I want to get to the trading diary right now, what you need to be watching for the rest of the week. Tomorrow, we get retail sales data. Plus, of course, we get earnings from Walmart tomorrow, as well as Deere. On Friday, U.S. housing starts are released, and the University of Michigan consumer sentiment data, although Ron Temple doubts the importance of that. We're also going to hear from Chicago Fed President Austin Goolsbee this afternoon. You've had some Fed speakers pushing back against the necessity of a rate cut in September. This is Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Shonali Basak.
And I'm Katie Greitfeld.
And coming up, core U.S. inflation eases for a fourth month, keeping the Fed on track for a rate cut in September.
As investors digest the inflation data, we'll look ahead to retail sales. We speak with the CEO of Shark Ninja, a consumer goods company that's accelerating growth.
And it's the biggest deal of the year. Mars scoops up snack maker Kellanova for $36 billion. We're going to talk about all of that and more, but let's take a check of where we are on the markets 30 minutes after markets opened. You can see taking a dip lower right now. The S&P 500 actually falling in the red, down 0.2%, even more so on big tech, of course, down 0.5%. We had that big rally after softer than expected PPI yesterday. We got inline CPI today, and now you're seeing some of that enthusiasm come out. The bond market, a little bit of a rally on our hand. 10-year yields currently down about 2 basis points, Shonali.
Absolutely fascinating. You have about half the sectors in the red. This morning, most sectors were in the green. A bit of a rotation also. Energy was down, now up. Interesting trading day. We're also going to get a look at stocks moving this hour with Bloomberg's Jess Menton joining us here on set. What are you looking at?
So many different movers today, but of course the big thing was the biggest deal of the year that y'all have been talking about all morning. So when you are talking about Kellanova, the ticker symbol's K on this. This is actually the top performing stock in the S&P 500 right now. So if you look over at this, up more than 7%, so on pace for its best day, not since that long ago, August 5th, but we did have some reporting from the Wall Street Journal where we did have a heads up that something like this could be happening, though. If you look at the S&P 500's food and beverage companies, though, it's actually performing flat as a group today. But on a year-to-date basis, they're both up actually about 14%. So that's actually in line where the S&P 500 is year-to-date. Normally, those companies have been underperforming the broader S&P 500. But another one I'm looking at is in the retail space. Of course, Victoria's Secret. Wanted to point this out. Seeing a huge pop here. So up almost 17%. So on pace for its best day since August of 2021. So, of course, this retailer, as we know, has struggled. It's actually down 15% still year to date when you're looking at this. But it actually had a preliminary profit beat for the second quarter. Also naming a new CEO, Hillary Super, who's actually the chief executive. And you're actually looking at Rihanna's Savage X Fenty line.
I feel like Victoria's Secret has really, there was a time when I would go to every Victoria's Secret show. As a journalist,
right? Oh, I'm shocked.
Reporting
for
necessary disclaimer.
Reporting for Bloomberg. No, I would bring a camera crew and everything. Like we would do something on it because it was such a hot stock. It was such a hot industry, and they have since, I mean, I don't even know when the show is anymore.
Right. That's been a big thing.
It?
They canceled it, but then I heard, I think they're trying to bring it back.
Yeah, well, it was popular. It is interesting, though, that that's one of the themes that has emerged this week. Of course, management changes. I feel like it says a lot about the environment that we're in, that management really matters. Traders, investors, shareholders, super focused on the C-suite right now.
They definitely are, and especially when it comes to not even just an industry perspective, but company by company perspective. And then lastly, wanted to bring up what's going on in the sports betting type scene. I'm sure, I don't know, if Matt, if you get into that kind of space or not.
I only lose.
But you only lose Flutter. So this is actually the FanDuel parent here. It's actually up almost 10%, on pace for its best day since January 18th of earlier this year. So did report second quarter results for sales and profit, actually beat those expectations, also raising its full year guidance here. But if you look over at DraftKings, it's actually interesting because they both said they're not going to add a surge charge when it comes to high tax states. So you're seeing DraftKings also getting a pop this morning as well on the back of that.
Football season just starting too.
Yeah.
Just in time, right?
Coming up.
Exactly.
All right, Jess, thanks very much. Jess Menton there. She covers stocks for us on the BN side. Let's discuss these markets now with Edward Jones, Senior Investment Strategist, Mona Mahajan. And Mona, we did see, you know, initially stocks rise after the CPI number. It came in bang in line with expectations. But we now see stocks falling a little bit, and there's been some debate. I think, Chanel, you were talking about earlier, you know, is this a soft 0.2% or a hard 0.2%? So what's your take, Mona?
Yeah, you know, look, I think some of the good news from inflation this week got priced in yesterday with a positive PPI result as well. We saw the NASDAQ up almost 2% on the day. And if you look
so noting German 10-year bond yield now lower on the day, down 0.4 basis points at 2.177%.
For these inflation prints, and we got exactly that. Now, to your point, today's inflation number will take the 2.9% headline CPI. I think it's great to see a two-handle there, but we did see still some stickier shelter and rent inflation. We'd still like to see that part of the equation moderate over time, and we do think, you know, the lag from what we're seeing in real-time data will show up in the months ahead. We're also watching wage growth carefully, as that is a huge factor in services inflation. We'd like to see services overall continue to moderate, but we think we're moving in the right direction. When you look at the Fed's dual mandate inflation and PCE inflation, certainly below their 2024 forecast. And of course, the other side of the dual mandate is what everyone's watching even more closely. Will that labor market hold in? We've seen some softness recently, but thus far on track for a good September 18th FOMC meeting as well.
You know, all those people out there that were banking on a 50 basis point cut, you do see expectations truly changing when you look at Fed swaps right now. The reality of the situation, if the Fed cuts rates 25 or 50 basis points, what happens
So US natural gas futures are up nearly 5%.
Rise when you see rates come down?
Yes, it's a great point. First of all, we think if they do a 50 basis point cut, it will probably spark an unnecessary concern in markets that they know something that we don't know, or something's happening in the economy. So our base case remains for a 25 basis point rate cut in September. To your point, as mortgage rates start to move lower, there is a case to be made that we'll start seeing some movement in the housing market finally. Those folks that had not been willing to put their homes up for sale might start doing so because they can lock in better mortgages on a new purchase. And that opening up of the market, adding supply to the market, may actually have the impact over time of bringing prices down, or at least moderating to some extent. So it is an interesting conundrum, but I think net, what we will see with mortgage rates potentially moving lower is more housing activity, and that will create some halo effects around industries across the housing space, and that's what we want to see. So I think net it will be a positive for the housing market to see those mortgage rates come in a bit.
Well, we were having that conversation yesterday too. I mean, on the other side of lower mortgage rates, what are you going to see in terms of pent-up demand, and what will that ultimately mean for housing prices? But I actually want to bring up this note that actually just came out from Bank of America. We've been talking so much about this rotation trade in terms of size of company, big to small, which is kind of petered out. But they actually say that you should fade small, mid, and mega cap stocks and go straight into the S&P 500 equal weight. Basically, take out that as a factor. How are you thinking about what the size tiers mean when it comes to this market?
Yeah, it's an interesting conundrum because, of course, we still think within large cap, and exactly to your point on the equal weight, we could get a more diversified set of leadership going forward. So we certainly think if the theme for the last 6 months, the last year and a half really has been narrow leadership is winning, and we've seen that with the mega cap tech space, we think the theme as the Fed starts cutting rates and as we head to the next 12 to 18 months will certainly be a broadening in market leadership. And so that equal weight S&P, and the S&P 500 broadly makes a lot of sense to us. It's about 50% growth parts of the market. Now it's about 50% cyclical and value parts of the market. And so you really do get that broad exposure. And to your point on what part of the cap space to play in, we still kind of remain favorable on large and mid. Keep in mind, small cap, while it does have some, it does tend to perform well in an early cyclical part of the market, early cycle part of the market, it does also have generally that space is more leveraged, and it tends to have more negative earners or zombie companies. So we remain cautious there as a long-term investor. We'd still say we think there's opportunities in the mid-cap space and certainly in the large-cap space. So those are the two parts of the market that we would start to look at more carefully in that broadening theme too.
What do you expect from the Fed here? As Shanali points out, WIRP is above 25, right? So markets are pricing in more than one rate cut, not quite two yet, but at the same time, you've got an election coming up in November. This is a Fed that isn't just extremely, cautious and conservative, but also really doesn't want to be seen as political. Wouldn't it be a step too far if they cut 50 basis points right before an election?
Yeah, I think right now the data doesn't seem to warrant a 50 basis point rate cut. There was a lot of concern when that labor market report came out last Friday that we are heading into some imminent recession. But since then, we've gotten a set of economic data points that have actually kind of stabilized that market and at least provided a bit of optimism there. We got an ISM services that was above expectations. We, of course, got jobless claims that were below expectations, and we're getting this nice set of inflation data. So, in our view, we think in September, certainly it warrants them starting the rate cutting cycle. I think both sides of their dual mandate are calling for that. But we think 25 basis points. If you look historically, the Fed actually has moved in election years and around election day, and it hasn't really created any sort of market implications other than what's happening in the broader economic backdrop. So we do think they could move in September. Our original thought was that they may do a quarterly cadence just to keep it a little bit more systematic, maybe September and then December. But if the data warrants them to continue at a faster pace, we certainly think September, November, and December may be on the table this year. So 2 to 3 rate cuts in the back half of the year remain our base case, regardless of what's happening in the political sphere.
Mona, we're talking so much about what to really lean into in the stock market. People excited about a broadening, but some sectors still really iffy. Consumers is what I want to talk about with you, given we have retail sales data tomorrow, and this idea that we've been talking about here, that if people are spending more still when it comes to shelter and insurance, if certain parts of inflation remain sticky, how much does that crowd out other forms of spending here that could really crimp the consumer sector moving forward?
Yeah, we've certainly seen a little bit of downward pressure on the consumer. And, we've talked about how a lot of, especially the low-end consumer, has worked down that post-pandemic savings. We are now seeing credit card absolute levels move higher, but of course delinquencies start to tick up in areas like credit cards and auto delinquencies as well. But keep in mind, still the majority of consumption comes from this mid to higher end consumer. It's about 80% of the consumption base. And that consumer has seen a nice appreciation in their net worth from the stock market expanding, and even in some cases from their home prices moving higher in the last 18 months or so. And so that part of the market continues to remain intact. They continue to spend still, especially more on services, but still the good side of the equation is holding up pretty well. And so generally speaking, while we do see the consumer kind of coming off, normalizing from an outsized level of strength after the pandemic period, we don't see a collapse. So a cooling, not a collapsing in consumption. Similarly with the labor market, those trends are intact as well. And we'd say broadly, if the labor market holds up, consumers tend to spend most when they feel comfortable with their jobs and they feel comfortable with the prospects of the job market overall. And so if that environment holds up okay, we think consumption holds up okay, but just keep in mind, it's the mid and higher end consumer that's really driving most of consumption here in the U.S.
Well, we'll get a great look at maybe the mid and lower tier when we get Walmart earnings tomorrow. Mona, thanks so much for joining us. Great to get your take. Edward Jones, Senior Investment Strategist, Mona Mahajan. Coming up, Elliott pushes for sweeping changes at Southwest as it tries to save the struggling airline. We'll give you the details on that proposal next. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Next week, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all next week on Bloomberg Television.
All right, let's get to high interest to look at what's making headlines around the world. Norway's $1.7 trillion sovereign wealth fund returned $138 billion in the first half thanks to a surge in tech stocks, although those returns were restrained by weak performance in bonds, real estate, and renewable energy infrastructure. The investment arm of Norges Bank also increasing its stake in big oil while trimming its stake in Meta, ASML, and Novo Nordisk. Germany's public prosecutor has issued an arrest warrant for a Ukrainian diving instructor who is suspected of being one of the perpetrators of the 2022 attack on Nord Stream 2's gas pipelines, according to local German newspaper Süddeutsche Zeitung. The warrant was activated in Poland 2 months ago, but authorities there have not yet arrested the instructor. And Americans are refinancing their mortgages more than they have since the early days of the pandemic. The Mortgage Bankers Association refinancing index jumped to 2-year highs last week. The surge comes as borrowing costs drift lower, even as the Fed leaves its key rate unchanged for now. But why don't they just wait? They should just wait, right?
Perhaps. We're going to switch gears here because there is one fund in particular that you are hearing a lot about this week. That is Elliott. And remember, from the shakeups at Starbucks to the wins that it's making on the board of Southwest, Elliott is actually by far, and it usually is, but this is just how much by far it is leading the activist universe this year. It has 11 campaigns in the first half, according to an analysis by Lazard, the investment bank. And the second most campaigns you've seen is 6 campaigns by Oasis. So it's a significant lead over there by Elliott. Elliott was also the only activist to have multiple campaigns in every major jurisdiction around the world, 6 being in North America alone. Boy, guys, would I love to get my paws on Elliott returns this year when you saw Starbucks's surge alone yesterday and the wins that they have been trying to ink, Katie.
Well, speaking of Elliott, they're trying to land some board seats over at Southwest Airlines, the activist firm nominating 10 candidates to the board, of course, in efforts to turn around the struggling airline. Here with more, I'm pleased to say we have Bloomberg Global Aviation reporter Benedict Kamal. And in addition to trying to oust the CEO, of course, what other changes does Elliott think that Southwest should put in place here?
Well, you mentioned it there. You know, they came out yesterday and said we'd like to nominate 10 new board members. This is a board composed of 15 people, so a pretty comprehensive switch that they're looking for here. And really, it comes off the back of the company, the fund saying this is an airline that is stubbornly resisting change. They should really upgrade their strategy, and that's not happening fast enough. And therefore, they came out yesterday with a statement. And interestingly, it came out on the same day that they had that win over at Starbucks, where they did manage to oust the CEO. So if you look at those two campaigns sort of split screen, you can see, okay, they succeeded on the Starbucks side. How far will they get it at Southwest? The company came out today, the airline, saying, well, we'd like to stick with our strategy for now. We are willing to listen, but on our terms, and replacing 10 board members doesn't seem to be what they want to do at this point.
Benny, take us up to the 35,000-foot view of what's going on in the airline industry, because last year we were just talking about the fact that they couldn't get enough planes, right? And the wait lists or the order books are just so monstrous, you can't even believe it. On the other hand, it looks like now there's just too much capacity, at least in terms of American Airlines. So what's the deal?
Yeah, it's not just the American airlines, it's really across the globe. You know, the much talked about revenge travel, that is sort of coming off its sugar high. People have consumed most of their savings. They are a little bit more frugal when it comes to their expenses. The whole notion of spending on experience, that's sort of come down a little bit, and we've seen it really across the board. It's not just the airlines.
At 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast a draw of 2 million on the prior draw of 3.728 million, with a range of a build of 2 million to a draw of 3.18 million. Gasoline inventories forecast a draw of 1.42 million on the prior build of 1.34 million. Distillate inventories forecast a build of 0.25 million on the prior build of 0.949 million. And crude Cushing inventories, prior a build of 0.579 million.
12%. Management wants one thing, Elliott wants another. And of course, plans to really consolidate in this industry have not gone well. How much leverage does Southwest have against a major activist investor?
Well, that's a good question. It's unclear at this point how it'll sort of play out. At this point, the two sides seem to have sort of locked horns. Southwest did say, yes, we're willing to listen. They said we put out an offer to meet in early September, and we wanted to sort of bring some ideas to the table. And then before we could even engage with you guys, being Elliott, you came out with this rather aggressive foray saying we want 10 people replaced on the board. So at this point, it looks like, especially given the win that they had yesterday with Starbucks, that Elliott sort of has the wind in the sails, and it's going to be an increasingly hard battle for Southwest to get this over the line. At the moment, investors seem to think, yes, they're making some changes. Let's see how that plays out. So maybe the pressure isn't quite as high as it was on the Starbucks side, but one way or the other, something will have to happen.
Benny, thanks so much. Bloomberg's Benedict Campbell covers the airlines and the plane makers for us as well from Berlin. Still ahead, bottoms up for Tilray, the cannabis company buying some brew brands from Molson Coors. We'll give you the details next in today's Social Climbers. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere, somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that we'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
All right, it's time now for Social Climbers. The company's making waves this morning. And first up, Google's Fitbit partnering with Peloton in a deal that would let some users access fitness content. Fitbit premium members would have access to Pilates, boxing, and spin classes. Peloton members, meanwhile, would receive offers on Google Pixel watches and Fitbit devices. Now, this partnership comes at a time when Peloton is trying to outrun sagging demand for its stationary bikes and its treadmills. Next up, Donald Trump's appearance on X earlier this week created yet another headwind for his own competing social media platform, Trump Media and Technology Group. It's the latest blow that's wiped out $3 billion in market value from the stock in the last month. DJT struggling with mounting losses and stagnant user numbers. And finally, a match made in Matt Miller's heaven. Tilray agreeing to buy 4 craft breweries.
At 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast a draw of 2 million on the prior draw of 3.728 million, with a range of a build of 2 million to a draw of 3.18 million. Gasoline inventories forecast a draw of 1.42 million on the prior build of 1.34 million. Distiller inventories forecast a build of 0.25 million on the prior build of 0.949 million. And crude Cushing inventories prior a build of 0.579 million.
And recreational, but only in Canada. So they don't sell weed here in the U.S. Actually, they do in Europe as well, but nothing here in the U.S. And they've diversified into craft beers so much that I think they're the 5th, maybe now 4th biggest craft brewer in America. So
is it like mixed cannabis beer situation?
Well,
like
no. There's no weed in the beer.
But that's the next move, isn't it?
It may be the next step.
Infused.
Exactly.
I feel like that's out there.
Yeah,
right?
well, there are THC-infused beverages, but I'm not sure how strong the public acceptance has been of them yet. It's hard to dose, right? How many do you drink? How do you know how high you are? Anyway,
ask him about it.
We'll talk to the CEO of Tilray about that. Catch my interview with Erman Simon coming at 12:20 p.m. Eastern. We're going to talk about Shark Ninja next, which makes a product that you may have and not even know about it. Stay with us for Mark Baracus. This is Bloomberg.
reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45.
1 minute remaining. I'll lead with EIA crude oil inventories.
There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with. Right? So all of a sudden, we're seeing these data points coming out going, my gosh, why haven't we're owning this space?
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
10 seconds.
You're faced with a challenge.
Build 1 spot 357 million. Build 1 spot 357 million, higher than the expected draw of 2 million. Gasoline inventories draw 2 spot 894 million. Draw 2 spot 894 million, lower than the expected draw of 1 spot 42 million. Distiller inventories draw 1 spot 673 million. Draw 1 spot 673 million, lower than the expected 0 spot 25 million. And crude Cushing inventories draw 1 spot 665 million, draw 1 spot 665 million. Seeing some slight downside in WTI oil.
One consumer name that's having a very strong year is Shark Ninja. The stock continues to climb, up nearly 80% year to date, as consumers are still buying their kitchen appliances, vacuum cleaners, smoothie blenders, and apparently hair care products too. Joining us now is the CEO of Shark Ninja, Mark Barocas. Mark, it's fascinating how many products you have and how successful these products, become so quickly. How do you avoid the pitfalls of a weakening consumer and high rates?
Well, thanks for having me. And as you said, we're in 34 different product categories, our Shark and Ninja brands. We sell them in 27 different countries. I mean, we're the largest vacuum brand in the United States. We're the largest cooking appliance brand. We're the fastest growing outdoor cooking brand. We're the fastest growing hair tools company. And the consumer is under a lot of stress and pressure, but I think our playbook of market-leading performance, high quality, and extraordinary value has been a recipe that's worked very well for today's consumer environment.
On the other hand, you do have a brand that has just gone viral on social media. We were showing some of the videos a little earlier. And I wonder what it means for you ultimately in terms of your own costs. I mean, is it cheaper to market on TikTok? Do you hire influencers to help do that? Or is it harder now to market on more traditional streams?
Well, look, everything starts with these proprietary consumer insights. We're trying to identify known or unknown consumer problems, and we're trying to turn those problems into disruptive innovation that solves consumer problems. And we market that through lots of different ways. I mean, if you go back in our company's history 15 years ago, that was through long-form infomercials. And then it went to TV commercials, and then it went to Facebook. And then it started really with 1 5-star review at a time. And today it's on social media. And social media is one of the largest forms of advertising for us. But what's amazing is that if you think about a product like our Ninja Creamy that has over 1 billion impressions on social media, Last month, 99.6% of those impressions were generated having nothing to do with Shark Ninja. It was just organic, user-generated content that bought our products, had a great experience in the home, and went and told lots of their friends about it.
Well, let's talk about the different product categories, because you brought up the creamy, for example. You're in all these different lines. And I want to specifically talk about your cleaning category, because I was reading through your earnings report. I saw that cleaning grew 20%. You haven't seen that kind of performance since COVID, which makes me a little bit nervous. I mean, where is that coming from, do you think?
Well, to start off with, I mean, we grew our revenue 38% in the quarter, and the growth was really broad-based. I mean, our international business grew over 45%, our domestic business grew over 30%, and as you said, cleaning, our largest category, which makes up nearly 40% of our business, grew 20% year on year, and that's really coming from three things. We entered into new categories in cleaning. Our products like the Shark Carpet Expert and the Shark Stain Striker are doing great in the carpet cleaning segment. We've grown in SKU productivity. We've refreshed a lot of our legacy SKUs with new technology and improved productivity of those SKUs. And we've launched a lot of new products in our existing categories. We just launched a new upright vacuum called the Shark Power Detect. That is a new top-of-the-line technology that we've done in that category. So it's really through a combination of things, and you put all of that together, and it's driven the 20% growth that you're talking about.
Are there price points you like to hit? I mean, do you find a certain entry point that makes it easier for consumers to buy, or do you use, for example, buy now, pay later programs to make it easier?
Well, look, we're not the highest priced products in the market. We're not the lowest price. But I think when you look at Shark Ninja, we deliver affordable, accessible innovation. We move the opening price consumer up into our brands, but we're also the brand of choice for premium consumers. We sell everyone from Walmart all the way up to Sephora and Ulta and everyone in between. So there are accessible price points for the consumer to get into, like, for example, our $59 Ninja Blast cordless blender. And that runs all the way up to what we just launched was our Ninja Cafe Luxe, which is a coffee espresso machine at $499 that's doing really well right now. So it's across a really broad breadth of price points.
Let's talk a little bit about the future here, because you spun off a little over a year ago. You were really starting trading around $30. Around that time, your stock has nearly tripled since you started as a standalone company. That means you also have currency for a whole lot of things, Mark. Do you look at acquisition as a way to expand here? Can you go out and buy a maker of goods in anything from ice cream to home cleaners to hair tools?
In the last 16 years, the company's grown at a compounded annual growth rate of 20% a year during that period of time. We've never acquired a dollar of revenue in the company's history. It's all been organic growth, and today we do over $4.5 billion on a trailing 12-month basis. Now, that's not to say we don't look at opportunities. Opportunities come our way all the time. It's just that we have a strong competency of growing organically. We think there's a lot of white space for new categories for us to enter into. Our international business is growing significantly. We're continuing to take market share in the existing categories. So I wouldn't rule it out, but I would say that right now we've got a really great playbook of organic growth.
And Mark, of course, we're just a couple months away from the U.S. presidential election, and it was interesting to see the comments on tariffs in your earnings call. One thing that stuck out to me was that you have the capacity and you're on track to move almost all of your U.S. volume outside of China by the end of 2025. How should we read that? I mean, is that basically a hedge for if Donald Trump resumes his presidency, actually wins the presidency again, or could actually Kamala Harris taking the office in November change your plans there?
Well, we started diversifying our supply chain really 5 years ago, and we started making our first products outside of China almost 4.5 years ago. Today, we make nearly all of our 301 tariffs currently outside of China. By the end of this year, about 60% of our U.S. production will be made outside of China. And as you said, we publicly stated that 100% of our U.S. production will be made outside of China by the end of 2025. China remains a very strong manufacturing base for us. We have nearly 1,000 associates, engineers, product developers that are based in China. So we think there'll still be a very strong presence in China, but we think that diversification of our supply chain is really what will help minimize any of the geopolitical challenges that might exist.
And I want to wrap this conversation into basically your plans for international expansion as well, because you think about Elon Musk, for example, even though, him and Donald Trump had that very cozy X session earlier this week, Elon Musk said recently that he was pausing a Mexico investment because of Trump, basically. And when you think about areas around the globe that you would like to expand into, I mean, how much of a factor is potential U.S. political risk there?
We've got a tremendous focus on expanding our brands and bringing our products to more homes around the world. That includes Latin America, that includes Europe, that includes the Middle East. Our business outside of North America is well over $1 billion in revenue, and it's growing at over 45%. So we think our products appeal to consumers globally. We think that consumers are really engaging with our brands, both the Shark and Ninja brands. And so we've really got our foot on the gas as it relates to international expansion and bringing our products, anywhere and everywhere around the world.
One thing that I think is pretty wild is the extended demand for your products. So Slushy, for example, you had recently told investors that you have a wait list of more than 100,000 units for the Slushy alone, and it will take some time to get those products into the hands of consumers. With wait lists this long, are you worried about your inventory at all? I mean, at what point do consumers drop off from having to wait?
Well, look, as you said, we launched our Ninja Slushy product, and today we have over 100,000 people on the wait list. We think that that product really hit a nerve of something that will create tremendous excitement in the consumer's home. Everything from, children, making juice slushies, all the way up to retirees, putting rosé wine into their slushy machine. Our supply chain will take some time to be able to catch up to that. I mean, it's very challenging to forecast the demand that we've seen from this. But we think as we get to the holiday season, we will catch up. We will be able to support the demand that we're seeing, and we're expecting a great holiday season on that product.
All right, Mark, really great to get some time with you. Appreciate you stopping by. That, of course, is Mark Baracus. He is the CEO of Shark Ninja. Shark Ninja shares up 75% year to date. Let's get a check on these broader markets now with Bloomberg's Jess Menton.
Well, Katie, looking at the S&P 500, taking a dip lower here, down about 0.2%. Got close to that 50-day moving average, around 54, but nonetheless still trading above that 100-day moving average, above and around 5,300 here. If you're looking at some of the individual movers that are weighing on the broader index, it's chip stocks. If you look at stocks like NVIDIA and AMD, those are lower. But if you want to look at a bright spot in the chip component type space, Micron Technology still actually higher today after it got that upgrade, and still reiterating a buy rating from New Street Research as far as that, and looking at a $150 price target. But when you do have heavyweights like this that are weighing on the S&P 500, probably not surprisingly, it's going to pull a little bit lower here. Tesla actually rallied over 5% yesterday, so you're seeing it give back some of those gains. And we talked about Alphabet earlier today, and especially when it comes to the Department of Justice kind of mulling this idea with this landmark antitrust case about whether or not to potentially break up the company. So you're seeing that stock extending some of those declines, getting closer to about more than 3% at this point. But y'all just had this great interview with the Shark Ninja CEO, but we're going to have another update on the consumer and retail tomorrow, so keeping a close eye at 8:30 a.m. Washington time tomorrow when we get those retail sales numbers. Looking at the month over month, about 0.4% gain if you're looking at the July reading here. But then also can't forget, when it comes to earnings, we're going to have Walmart, the world's largest retailer, reporting those results. And if you look back to May, actually this company and the stock in general has been on a strong run this year, up over 40%. So back in May, it actually talked about how more wealthier shoppers were flocking to this particular retailer. So it's going to be interesting to see what they're going to tell on the consumer, because we'll have more retailers coming up next week when it comes to Macy's as well as Target, guys.
Jess, thank you so much for keeping it all eyes on the economic and consumer data out there, and of course those company stories. And coming up, candy giant Mars forking up $36 billion to buy the maker of Pop-Tarts and Pringles, Kellanova. We're going to discuss consolidation across the food industry here and exactly what's driving it. Stick with us. This is Bloomberg.
principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very, very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
All right, a stock that we have our eyes on this morning is Cisco. The communications equipment giant is set to report earnings after the bell today. The results will provide data into if the companies that we're watching are back to investing in computer networks. Here are the preview is Woo Jin Ho of Bloomberg Intelligence. And Woo Jin, I would think, with the AI craze, they better do well or they'll be punished by this market. Is that how it looks?
Yeah. Well, quite the contrary, Matt. If you think about Cisco, they're actually a business in transition right now. Right now they're still customers are still digesting excess inventory. I do expect the fourth quarter to be the bottom. They've already got it to 2025, and I do expect them to have a steady recovery. With respect to the AI business, look, they have $1 billion in AI orders. In the books. The issue is that $1 billion on a $54 billion revenue stream, it's pretty small.
Let's talk also about the bottom line, because ultimately the ability of Cisco to really improve margins here and improve expenses is really in part contingent on their headcount, and there have been recent reports of headcount reductions. How do you see that playing out?
Yeah, that's a fantastic question. Look, the reports are that they will have about another 4,000 headcount reduction. That's about 5% of the total workforce. That would be the second round of headcounts. Now, when they announced their first round of headcounts a couple of quarters back, we didn't think it was enough. I do think that this round would be enough. That would raise the operating margins by about another 100 basis points to about 33 to 34% if they're able to realize all of those cuts. So it's in the right direction.
All right, gotta leave it there. Really appreciate the time. That, of course, is Woo Jin Ho of Bloomberg Intelligence. Another stock, of course, we're keeping an eye on. We've been talking about it all morning. It's Kellanova. Mars buying the Snap brand for $36 billion, bringing together two major food companies into one. The deal set to be the biggest of this year, and joining us now is Jennifer Bartashas. She is Bloomberg Intelligence Senior Analyst for Retail, Staples, and Packaged Food. And Jennifer, I mean, it makes sense fundamentally, of course, diversifying away from just those chocolate products, but tell us about what this could mean for the global reach of Mars.
Yeah, so this actually will help Mars with its global reach. They already have sort of a top 3 market share position in most major geographies. But what Kellanova brings are growth brands, especially in emerging markets. And that should really help Mars penetrate those markets a little bit further and raise its overall global share. At the moment, the combined entity would in snack foods would bring it to about 6.2% of global share, and that would be the 3rd largest in the world. So, Mars is certainly going to benefit from a consolidation of that market share.
They want to diversify away from cocoa, and I guess prices have been at historic highs right now. What's going on in that market?
Well, with cocoa, there are some structural issues that we've been calling out within Bloomberg Intelligence, where we think that although cocoa prices have started to come down, they're going to remain elevated for quite some time, and that has to do with tree disease. It has to do with the perception about labor with the cocoa market and things like that. So this move actually does really help Mars diversify away from just being so much of a confectionery-focused player. But it is worth noting that when you look at Mars and their total sales, confectionery and snacking is a smaller part of their portfolio. They actually have a very large portion of their sales, almost 60% coming from pet food, because they are the owners of Pedigree and Whiskas brands as well. So this just furthers that diversification and then helps them bolster the size of the snack part of their portfolio.
Another question I have about this is who the winners and losers are. At the end of the day, Kellanova was a company that was previously associated with Kellogg, and they had separated these two businesses. You're at a moment now where Mars is just gaining not only global scale, but expanding into businesses not traditionally known to them. So who is the biggest loser, let's say, in this scenario? Who will have to compete more with Mars?
So I think when, the combination of these two entities is, certainly something that Mondelez has to watch out for, just because that is a global snacking company. They've done a lot with regards to biscuits and confectionery, as everyone knows. It's also competing more directly with Hershey, which has been investing in salty snacks over the last few years. And you can't forget the dominant player of PepsiCo, where we estimate globally between 40 and 45% of their sales come from snacks. So, those are the companies that really need to keep an eye on what's happening with this new combined entity.
So, of course, a big shakeup there in the competitive landscape of the snacking business. Before we let you go, just quickly, of course, we're looking forward to Walmart earnings as well coming tomorrow. You think about all the consternation over the state of the consumer right now. Walmart really a bellwether. What are you expecting?
Well, we're expecting that Walmart will actually have a pretty good quarter. They have, continued to drive share in essentials. So when you're talking about grocery and household supplies, they've been taking share from other players in that space. We heard them talk in May about attracting more higher income households into Walmart. We think that those trends are going to continue and that they should have a solid quarter. Companies like Walmart do very, very well when consumers are under pressure and they're looking for value. And so there's nothing that we are seeing that would disrupt that trajectory that they're on.
Jennifer Bartashis of Bloomberg Intelligence, we thank you very much for keeping an eye, of course, on the year's biggest deal, as well as some very critical earnings this week. Coming up, the market-moving events that you need to be watching. That's next in our Trading Diary. Stick with us. This is Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get to your trading diary for you, what you need to be watching this week, the rest of the week, I guess. Tomorrow we get retail sales data plus earnings from Walmart and Deere, and those two companies will tell us a lot about this economy. Friday we get U.S. housing starts, plus we get University of Michigan consumer sentiment data, and then we hear from Chicago Fed President Austin Goolsbee in the afternoon.
All right, let's take a check on these markets, of course. It's interesting. You wouldn't necessarily know it by looking at the S&P 500, which is just about flat right now, but an interesting reversal, of course, after we saw those huge gains yesterday. That index was up 1.7% after that softer than expected PPI. And of course, we heard from Mona Mahajan earlier today that that's when all the good news for the CPI print that we got this morning was priced in. Of course, that came in bang in line, but that just wasn't enough to continue that momentum that we saw from
Fun fact, biggest decliner today in the NASDAQ. Starbucks.
Oh, there you
down
go.
more than 3.8%. Really just giving up some of that exuberance yesterday.
I would have shorted that yesterday.
Oh, God.
Just from hiring one guy, it's not going to bring a lot of people back to expensive coffee.
Intraday key man risk.
And maybe even if he does work magic, though, it's going to take time, right? It's not something that happens overnight.
Chipotle, though, holding its losses.
Chipotle.
Fun fact.
I went into Chipotle yesterday and told the employees that their CEO was quitting.
I'm going into Chipotle today.
No.
Well, that's a whole other story. But anyways.
All right, so I think it's very interesting that we got some Fed speakers come out the last couple of days and say, you know what, we don't necessarily need to cut rates at this meeting. Bostic, for example, Mickey Bowman. So we're really needing to see some more data, at least for those Fed speakers, before they are willing to go even 25 basis points.
Is king in this market. But stick with us through this week. Of course, Matt and Katie, I'm off this week, but they'll be joined by Priceline CEO Brett Keller and Evite CEO later in the week. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo Pet Products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that you know most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Google, it's in the crosshairs. Bloomberg reports Washington is thinking about breaking up the search giant after that landmark antitrust win.
Big tech, Nvidia, and Bitcoin ETFs in focus as the 13F filings hit insight on the secretive world of hedge funds tech holdings.
An earnings season, it continues. We push ahead to Cisco as the company cuts costs and jobs amid a shift to AI. But Ed?
Yeah, let's get right to Alphabet, the parent of Google. Shares are down 3.5% after a slow start at the open, within 2 standard deviations. The headline that Bloomberg's reporting is that DOJ officials and attorneys are assessing a bid to break up the search giant. And as you know, Caro, there are many other options being discussed, actions that could be taken. We also are going in later in the show to talk about the Pixel event, right? The hardware game from Google. Is that a part of the stock story this morning? Not really clear, but it's a big headline where the nuance is important.
And it's a big market cap erosion, $71 billion on the day. And of course, yesterday, the Department of Justice, well, we were understanding from Bloomberg's own reporting, are potentially considering a bid to break up Google following the landmark court ruling that found that the company monopolized the online search market. Let's get into it. Bloomberg's Leah Nyland has been bringing us scoop after scoop in Washington, D.C. And just how likely, how realistic is that we go back to 2 decades ago in the Microsoft fight?
Yeah, so the Justice Department is considering recommending a breakup. They have a couple options on the table to see if they could require that Google sell off the Android operating system. That's the hardware that you guys were talking about. The Chrome web browser, or potentially AdWords, which is the platform it uses to sell the text ads that appear at the top of the search results page. It's all going to be up to the judge, though. He's the one who gets to choose the remedy. And, they had proposed breaking up Microsoft back in the day, and the courts just didn't go for it. And instead, Microsoft ended up being under a consent decree that went on for more than 10 years. So that's sort of what they're mulling. Should they try and propose a breakup that's sort of like paying a lot up front and then it's over? Or should they do something that goes along for, oversight for many, many years?
Leah, the stock is down more significantly in this moment than it was in after hours when the story broke. There are many factors behind that. There's not much research out in response. What's interesting about the reporting is sources are giving us into an insight how the DOJ works, right? So tell us who they're speaking to, who they're soliciting information from, and kind of the things on the table, so to speak, and where they might go next.
Yeah, so the Justice Department doesn't make this decision in a vacuum. They're consulting with a lot of third parties who've been impacted by Google's behavior. So obviously other search engines, but also like advertisers, people who advertise on Google, lots of other websites that could be impacted by this. One thing that they're very interested in is Google's move into AI. They're a little bit concerned that Google could use some of its dominance in the search area sort of to leapfrog other companies in AI. So that's one thing they're also looking at. Are there any sort of restrictions they need to put on Google's development there? One possibility is sort of requiring that any information that they collect for the purposes of search is not allowed to be used for purposes of AI. This is just the beginning. There's going to be a hearing next month to sort of set up the procedure for how this remedy gets put into place. But, these are some of the initial thoughts that they have been thinking.
As you say, it's just the beginning, and Alphabet and Google itself are going to fight this. How open to political persuasions is this going to be? Look, we're looking at an election in November. Would anything change on the back of that?
That's the other possibility. If there is a Trump administration next year, there'll be all new folks. They might have different ideas about what they should pursue here. But the one thing you do need to remember is this case actually started in the Trump administration. It was the Trump administration's folks on antitrust in 2020 who brought the original case. The Trump administration, a second Trump administration, would probably want to continue pursuing a remedy against Google. They might just have different ideas about how to go about it.
Bloomberg's Leah Nyland reporting out of Washington, D.C. Thank you very much. That was the reporting. Let's get the reaction. Sell side first. Dan Ives from Wedbush writing this on the subject. A breakup of the big tech business models is highly unlikely down the road, although business model tweaks and heavier scrutiny of M&A will be front and center. There's also the sort of industry and academic perspective. Christina Kafara is the co-founder and vice chair at Competition Research Policy Network. You're an expert in this field, so let's start with the likelihood that the DOJ launches an initiative or bid to break up Google.
Thank you, Ed and Caroline. It's a pleasure to be here. The likelihood reflects the view inside the DOJ and more broadly held outside, that fundamentally the purpose of all of these actions needs to be to restore or to induce competition. It is pointless to have just an opinion or a judgment that tells us that Google is a monopolist. We have a number of those in Europe. We have failed, however, in Europe to follow that through and implement measures, remedies that were really capable of increasing competition. So the question is, to what extent will the judge, as Leah was saying just earlier, feel the appetite and the opportunity to push the remedy following his decision into a realm that can create that competition?
So, Christina, on the word appetite, you forget that there are people behind this story. Our reporting's based on anonymous sources, but we're trying to infer the thinking of DOJ officials and attorneys. Why in this moment might they feel this is realistic as a course of action, if not a breakup, but the other potential actions that Leah reported on just a moment ago?
The reason why it is now a salient moment for this kind of action is that there is a global sense that antitrust action against big tech, and Google in particular, has not delivered. And fundamentally because the reaction has been too timid. We haven't adopted measures that were capable of inducing competition. So the Department of Justice follow what Jonathan Kanter said. He called his decision a Mount Rushmore of antitrust, historic, monumental. This is the time when we need to get serious about whether we use antitrust as a real industrial policy tool to create competition in sectors where we have failed so far with half-witted measures, and or we continue to do something which is marginal, targeted, and very prescriptive, but at the same time does not deliver competition, which is the goal here. So the Department of Justice will feel that this is the salient moment at which to pursue this kind of aggressive
Christina,
and ambitious agenda.
3.5% fall in market cap and share price. It's a big move on the day.
but it certainly doesn't reflect the idea that it will be broken up. So is this in any way realistic, and what do you anticipate will actually be the real souls here?
The markets never really anticipate that antitrust is going to do very much, and this is the test. Is the outcome of this case, in which the judge has delivered a very thoughtful, very well thought through opinion, is it going to be serious, or is it going to be again nibbling at the margin of the problem? So I think markets are just waiting to see. Of course, the prospect of breaking up Google is very ambitious. On the other hand, if we don't do it now, then when? How are we going to create competition? A judge that just simply mandates that Google can no longer pay for exclusivity on Apple or Samsung should know that this kind of measure is going to be performative. Is not going to deliver anything of substance.
What would be substantive from your perspective, Christina? Is it about going into all the which ways that Google basically impacts the ecosystem and trying to unravel it? Because that's a Herculean task.
It is Herculean, and in fact, I fear that we might end up with proposals that are a Rube Goldberg machine of various little measures or various attempts to deal with the control points that Google has. There is no question that the tentacles have gone deep in multiple control points, and unless we address those choke points, then we are not finding a solution. Redlining a contract prohibiting exclusivity is not an answer. So breakup is difficult, but there are precedents in the US. Of course, you have done ATT, the most significant precedent there. And it unleashed competition and innovation. Of course, there will be massive challenges because Google will not take this line down. There will be possibly years of challenge. But fundamentally, you have an ecosystem in which you have YouTube and Google Search, which are the two most important websites that people actually use. And then you have the same company owning the most important browser, Chrome. And if you allow all of that to be under the same umbrella, the incentive of this company are continually to use all of these pieces of the technology to favor itself, to drive revenues to itself in ways that cement their monopoly continually forevermore without allowing anyone to come in. Microsoft offered $20 billion over 5 years to be able to be on Safari instead of Google Search, and Christina, it wasn't enough to sway Apple.
We have to leave it here, but we really appreciate the nuanced perspective. Christina Cafara, co-founder and vice chair of the Competition Research Policy Network. We thank her. Meanwhile, coming up, 13F filing season. We'll discuss the latest on what those hedge funds have been up to. This is Bloomberg Technology.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
It is so-called 13F filing season or moment. What does that mean? It's where investment managers, where hedge funds are forced to disclose what their US equity holdings have been in the previous quarters. It's a snapshot, but it's an interesting one, and we break it down with Bloomberg's Hema Palmer. Much is being made of some holdings of Bitcoin ETFs.
Yes.
What do you make of the reporting there?
Yeah, so it's kind of interesting. The SEC, if you recall, approved spot ETFs with Bitcoins earlier this year. And so we have seen some buying. It looks like Goldman Sachs bought about 400 million of it. Now, the thing to keep in mind with 13Fs is it gives us some clarity, but not full clarity. So we don't know which part of the bank necessarily bought it. We also don't know intentionality behind trades. So is it a bullish bet fundamentally on these ETFs and Bitcoin, or is it an opportunity to capitalize on volatility of the trade, or is it a short against longer hedges, a long bet against shorts you might hold? But it is interesting to see, some significant buying in that space.
Lindsay in New York's going to bring up the NVIDIA chart. I think it's an interesting case study, right? Because the data is backward looking. You want to go into the dark world of hedge funds and particularly stock picking funds, right? So the headlines I see is that a number of funds increased their position in NVIDIA. It's interesting because it's the period ending June 30th. And as you see on the chart, we hit a high on, I think, June 18th. What have you learned so far through the wire?
Yes, so that's one of the key themes we're looking at for this 13F season is how were funds, especially stock pickers, positioned just ahead of the decline that we then saw in July and then got worse in August. So we did see some nominal buying of NVIDIA. Wisconsin's pension bought a little bit. UBS Asset Management bought a bit. Co2 trimmed their position in NVIDIA slightly. So it's interesting to see how funds were positioning their books ahead of what was a very tumultuous several weeks.
What else are you managing to peel back in terms of some of the key players when it comes to technology names, the Co2s, the D1s?
Precisely. So Co2, some interesting movement there. They slashed their Alphabet position by 38%.
That'd be prescient.
Exactly. And they also slashed their Salesforce position by about 60%. So two prescient moves ahead of this downturn. They ditched their Instacart position entirely, trimmed Meta, trimmed NVIDIA. So some really interesting moves ahead of this volatility that we saw. They started about 6 new positions. One of them is in GE Vernova, which is a company we're hearing a little bit more about. That's the spin out from GE. That's more energy focused. So they started a new position in that company. That stock is up about 37%.
Hema, you've done a really brilliant job of explaining the basics, to the audience around the world on Bloomberg Technology. Many of them will not understand 13F. So we went over stock picking and directional bets. There's a lot more to come, right? We can't in aggregate say this is what the story was. Just explain basically how it will play out over the next couple of days.
Yes, so hedge funds are required to file these 13F positions, which shows their positions as of the end of the second quarter. And so what that means is we get a bit of a backwards-looking view into these funds. They have to file it by the end of day today. Oftentimes we see these filings coming in later in the day, as maybe some funds procrastinate till or later in the day. So we get more of an aggregate sense of how funds were positioned later in the afternoon. So tomorrow we'll have a little bit more clarity in whole as to what the positions were, with what the popular buys and the more popular selling trends were. But keep in mind, even though this data is backwards looking, it's still helpful because hedge funds are notoriously secretive about what stocks they're in. And so this gives us some insights into what and how their thinking might be. Across the sector, but especially in tech, which is precisely interesting these days.
And interesting on this program. Bloomberg's Hema Palmer, thank you very much. Let's talk about markets more broadly. Core US inflation eased for a 4th month on an annual basis in July, keeping the Fed on track to lower interest rates next month. How's that going to impact the technology sector and technology stocks? Joining us now is Rob Howarth, Senior Investment Strategist at US Bank Asset Management. It feels there's been some anxiety of late in the markets. I think back to that fateful Monday after the BOJ. We talked a lot about the yen carry trade. But what, to your mind, is the principal driver in financial markets right now, particularly when you focus on technology and the equities market? Good morning.
Yeah, good morning. In the end, it is spending, right? What we've seen really drive tech stocks, I think, for the bulk of this year is much higher investment in technology infrastructure to support artificial intelligence. I think the question before us as we look ahead is not, is that going to continue, but does it broaden out? Is the consumer still healthy enough to increase goods spending, which puts further pressure on technology infrastructure or
Right.
not? Right? We've seen fairly light auto sales. We've seen the consumer weakening, I think, and they've been focused this year so much on services. Some of the news we're seeing indicates a lack of clarity on services spending into year end. And does that pivot into goods spending like on autos or other durable goods that we know have lots of chips in them as well? So does that put more pressure on technology infrastructure as we look into year end? That's not clear to us, but it's a question we have.
Well, there are many days until August 28th, a notable date because NVIDIA reports earnings, and that may answer some of your questions. What's your approach to that? It's a single name that's driving the entire market at the moment.
It's a single name that remains important to be in portfolios and at a market weight, we would say. But our approach is we think this rally really has to broaden out a little more. We're looking more towards an equal weight S&P 500 position because we think that there needs to be more beneficiaries than just technology if this economy is really holding up as well as the data would indicate, right? We're seeing softer inflation, but we're seeing still low unemployment, still good wage growth, still good GDP growth. And so we need to see more beneficiaries of this economic activity beyond technology as we look into the year end.
Rob, go across asset class for us as well. Should you be only thinking of equities in the tech space? What about fixed income? What about their corporate bonds?
Fixed income is certainly extremely attractive. We're looking a little more at getting more credit exposure in our fixed income portfolios, whether it's high yield municipal bonds for taxable investors or below investment grade corporate credit. I think the interesting thing in the technology space is often they're so cash rich that you're getting high quality bonds there as well. So we would look to get some credit exposure at this point in portfolios because the economy is holding up fairly well. The interesting thing is investor sentiment is still very robust in credit compared to equity, right? We've seen softness in the equity market here of late, but that credit sentiment has stayed very strong. So there's not a lot of expectations there yet that this is a slowing economy.
Rob Hayworth, so good to catch up with you. Thank you very much indeed. Senior Investment Strategist of US Bank Asset Management across the asset classes for us. Meanwhile, coming
US crude oil futures fall by more than $1 to $77.32 per barrel.
Our story next, this is Bloomberg Technology.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
Good
morning from our world headquarters in New York. I'm Menace Crenny.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Time for AI in action. How is artificial intelligence being implemented right now? We can speak to a founder about it. Mina Song, co-founder and CEO of Elise AI, who's just announced that you're raising money. You've got $1 billion valuation, and it's all about helping renters. Am I correct? How are you helping renters with AI?
Yes, that's exactly correct. So Elise AI is an AI technology company based in New York City that serves the housing and healthcare industries. Both of these industries experience significant operational challenges because the day-to-day operations are largely managed by arcane and manual processes. So we provide AI technology that allows our customers to automate the most important and business-critical functions. So in the housing industry, for example, we provide an AI that helps renters with all of their needs, from looking for an apartment to touring to handling their maintenance requests to even renewing their leases. And this helps housing providers be able to serve more renters faster and better, and also at a lower cost. And today, our AI is already used by over 70% of the largest property management companies in the US. And we've also expanded into the healthcare market. So in the healthcare industry, our AI similarly automates the day-to-day workflows, like scheduling appointments, that allow our customers to manage their businesses more effectively.
Mina, $75 million, $1 billion valuation. Congrats. There's a lot of people sitting behind you. Who are they? What are they working on? And what are you going to use those funds for? Because you seem pretty busy already.
We are extremely busy. So we're at our office headquartered here in New York City. And behind me are a bunch of really, really talented engineers, product, and many people that are supporting new customers every day in transforming their businesses using AI. So we're using the funding to expand our team and help more customers and build more innovative products to create efficiencies in their operations.
We've got about 30 seconds. Sapphire Ventures led the round, others Point72, Divco West. How was it like there, raising funds?
It was surprisingly really easy. I think there's a lot of funding available for great businesses solving really important problems, and we're really excited to have partnered with people who understand how the industry should be.
Mina Song, co-founder and CEO of Elise AI. Thank you very much. Now, coming up here on Bloomberg Technology, we're going to look at Google's product announcements, a focus on the hardware side of the AI story. Bloomberg's Mark Gurman was on location. I wonder what he made of it. This is Bloomberg Technology.
speed or even that it'll be easy, but at least there's a theory of change.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Quick check on these markets, Ed, because, well, the whipsawing of NVIDIA means that we're now currently flat on the NASDAQ 100 index. It had been trading lower. Now NVIDIA pushes up higher. Also, Broadcom doing some heavy lifting at the moment. Basically, we are seeing a flat day, calm, after the CPI anticipation, and we do get a print that basically shows the Federal Reserve is still likely to be able to cut as the market had anticipated. 10-year yield just dies down a little bit, 2 basis points, so we're seeing buying of bonds. Bitcoin, though, just off by 2.5%. We're now at about 59,000. We seem to be trading in that range of about 60,000 of late. Move on, have a look at what's happening on some individual names, and as I mentioned, NVIDIA has been dictating sort of the way that the benchmark has been going, and we're up more than a percentage point. We are, though, seeing Tencent interestingly doing Tencent music here. Maybe I gave the wrong particular focus, but Tencent has been giving us its earnings. We're going to delve into that in a little bit, but really thinking about how this juggernaut when it comes to gaming, when it comes to chat, when it comes to overall, well, fintech as well, has been managing to push up its overall revenue. We're seeing Alphabet, though, really the drag on the market today. And we're going to delve into not only what has been a DOJ discussion. We understand from reporting at Bloomberg that maybe they're anticipating breaking up Alphabet, that what weighs down 3.5%. But this is after some important announcements yesterday, Ed, that really showed off its AI prowess, which in many ways is what regulators are worried about.
Yeah, this is the hardware story. Google announced that they're rolling out upgraded smartphones ahead of Apple's new iPhone release in a push to sell AI. Joining us to break it all down from yesterday's event, fresh off location, is Bloomberg's Mark Gurman. It's a simple story where we have updated line of Pixel phones and One Pixel Fold phones. But what Google is trying to convince us of is we need that hardware for the best integration of Gemini and use of Gemini, the generative AI tool, in the real world. What did you make of it all?
That's right. I mean, these Google launches, they've been happening since 2016, are so interesting, right? These phones, they announce parts of the phones, they post pictures of them on their website, they tweet them out. There are so many leaks of these devices, people go hands-on with them before they're announced. So by the time that they actually announce these or hold a formal event, the phone has already essentially been announced, right? So we had long anticipated what these AI features are going to be. There's some interesting things here, and why I think it's so interesting is how tightly they've integrated everything. And the timing obviously couldn't be better. We had the news about the DOJ looking to break up the company. How do you break up a company that is now so tightly integrated? And it's so interesting that they made the decision to fold their devices group and Android group together just a few months ago.
Mark, that is exactly also the push ahead from regulators, is worrying that the amount of the web, the ecosystem that Alphabet and Google controls allows the AI offering to be that much better than anyone else's. Is it? How much are we likely to see that Google can now go head-to-head in a smartphone arena where they only have 5% of the market in the US?
You know, it is their competitive advantage, right? They've built Google Search. They built it, Sergey Brin and Larry Page, they built it from the ground up 20, 30 years ago. And they built this network, this web crawling system, this amazing search engine that can now power these really incredible artificial intelligence features. And now that prowess, that technology that they spent decades building up is now being held against them, right? And so I don't think that the government should be holding that against them, their ability to build a better product because of how many decades and how many billions or more they've spent to develop this technology. And to your point, Caroline, this is much more advanced than what Apple has. Apple is very new to this AI game, using similar models to what Google is doing now.
Well, let's compare and contrast, right? Because the market's important. There are roughly a couple billion monthly active users of all of the Google applications. But they're only shipping, I think, 10 third-party data, 10 million handsets a year. Nothing, really, compared to the scale of iPhone. You cover Apple better than anyone on the planet is it going to be a real competition on the handset side based on what you saw?
Well, it depends how you look at it. The features, 10 times better if you're using the Google platform. If you're using AI on a Pixel, your AI experience, how much embedded AI you're getting, is going to be far, far better. But if you really think about it, Apple is going to become the biggest mobile AI player overnight, right, in October when Apple Intelligence launches as part of iOS 18.1 a few weeks after the iPhone 16 launches. But I've been using Apple Intelligence for weeks now as part of the 18.1 betas. There's not a lot there. You're getting summaries of text messages, you're getting summaries of emails, you're getting some notification prioritization. But there were some pretty cool demos from Google. You can have the phone answer phone calls on your behalf. It can go through trees when you make a phone call. It can re-edit images for you. It can place you in a completely different environment. It can do things on your behalf. It can create research reports. It's really day and night what you're getting between Apple and Google.
Bloomberg's chief correspondent for Everything Consumer Electronics, Mark Gurman, thank you so much. Another story we're tracking is gaming. Tencent's revenue growth accelerated after the release of their blockbuster game this summer. Joining us to take a closer look is Bloomberg's Henry Wren. I mean, basically it's an earnings beat, but specific performance of one title has us very optimistic about a rebound for the gaming industry at large in China. Good afternoon to you in London, Henry.
Yes, indeed. So Tencent's gaming revenue has definitely been a highlight for the quarter. The domestic gaming revenue grew by 8% in the second quarter, and that's the fastest growth pace that Tencent has seen for the segment in at least 2 years. The key catalyst, as you said, has been the Dungeon and Fighter mobile game, which was released in May. However, Tencent is also saying that it's seeing stronger growth, stronger momentum across its evergreen games. So namely the Peacekeeper Elite as well as Honor of Kings. So it's not just one game outperforming, but in the meantime, some other older titles have been seeing stronger tractions as well.
Tencent is such a juggernaut, though, and the fact that it has so many people using WeChat and still manages to add to that is extraordinary. Did we get any sort of detail on how they're betting on AI and how that's going to revolutionize some of its products other than the gaming side?
Yeah, interestingly, actually, in this press conference that we've had with Tencent, the details with AI has been pretty scarce. The company has said that it's using its Hunyuan model for its new AI assistant. However, apart from that, we actually haven't got too much details. It seems that the company's mindset has been rolling slowly with AI to get ready for its AI tools instead of rolling rapidly like, Alphabet that we have just discussed.
Henry Wren, what would we do without you? We appreciate the sum up of what is a massive story today. Meanwhile, let's just talk a little about edtech startup Baiju. It's back facing a potential insolvency after India's top court ordered a stay on a ruling that allowed it to avert bankruptcy. Now that means the startup's insolvency proceedings can restart at least until the Supreme Court further decides on the case next week. Coming up, we're going to deep dive in the world of VC. CRV's Max Gazor is with us to talk about artificial intelligence valuations. Are they too heady? We're also talking the economy and more. This is Bloomberg Technology.
What's more frustrating, playing golf or being CEO of Goldman Sachs?
Oh, definitely playing golf. But one of the great things about golf is when you have a good day and you're hitting the ball and you're making pars, I mean, that's what brings you back.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
CodeRabbit, an AI-powered platform focusing on the code review process, just announced it's completed a $16 million Series A funding round led by CRV. The round also included participation from Flex Capital, Engineering Capital, and prominent angel investors, including Olivier Pommel, CEO of Datadog, another CRV-backed business. Let's bring in Max Gazor, General Partner of CRV, for more in today's VC Spotlight. We can get into CodeRabbit, but I just want to reflect in the first instance, while we try and make sense of what's happening in private markets, that on the one hand, $16 million might have been quite a large Series A in periods gone by, but at the application layer, foundation model layer, otherwise, it's not that big in this context of the last year. Good morning, and what do you make of that?
Great to see you, Ed. Well, we've had a very busy summer. CodeRabbit was an investment we announced this morning. We've also announced a deal called Napkin last week, and it's been one of our busiest summers on record. So the early stage private investment market for startups is very active. Most of that's concentrated in AI. It is completely independent of what you see in with the volatility in the public markets. So we're still very active investing across a number of different categories. I'd say one of the more interesting themes is that the investment shift has focused slightly from infrastructure into applications, and we're seeing a wide breadth of domains that we're funding these days.
CodeRabbit, AI-powered code review, there are some things that are out there that are sort of analogous with that. But would you mind going into the round itself, like how competitive it was, what it was like getting something done this summer relative to last summer, for example?
Yeah, my partner Reed Christian led that deal. CodeRabbit is a repeat founder. They're focused on AI, using AI for improving code quality and code reviews. It was a competitive round, and like many other deals that we see, we have to show up with very strong conviction, do work, and get to conviction on a category. It helps to have a prepared mind, which we do, and I think our portfolio in the developer tools and developer ecosystem space helps us win those deals. So we were an early investor in companies like Datadog, like Vercel, and a number of other high-flying companies that I think helped to seal that deal.
How many of those high-flying companies in your portfolio are going to be able to exit in the next year or so, do you think, Max?
Caroline, it's a very good question. Last time I was on the show, I was very enthusiastic about the prospects for IPOs this year. I think the reality is that in the first half of the year, we had a situation where tech was ripping, it was low volatility, we had some moderately to very successful IPOs, and we still didn't see a lot of activity. Now, with the second half of the year, with all this volatility in the backdrop and an election cycle, I think it would be challenging to expect a lot more activity with the IPO window opening. And so our expectations are a little bit tempered. We think that these are very high quality companies, and if it's not a public offering, we are seeing very creative deal making going on behind the scenes. So we expect that, our focus is on building great companies, and we expect that the exit opportunities will emerge if we focus on building very durable companies. And so we're very patient and very resilient.
Creative, to say the least. There was just a graphic showing that some of the customers of your portfolio companies are character AI, and that's been a relatively creative exit of late. I'm interested, though, Max, like this rather gross acronym I keep coming across at the moment is ROAI. Basically, what is the return on investment of artificial intelligence? Everyone's trying to understand it in the public market. What do you think it is in the private market?
Well, the reality is if you listen to what public markets or public companies are saying, they're saying that the demand is there. We don't quite understand the return profile yet, which is, I think, a fair place to be. What we are seeing is the return on investment is much, much higher in the application domain, and that's why a lot of the activity that you've seen has shifted into that domain versus infrastructure, which is sort of a picks and shovels business and much harder to measure ROI. You had a previous guest on in solving problems in the real estate domain. CodeRabbit is solving code review problems. The breadth of application use cases and the ability to solve those quickly and deliver customer value is much stronger there.
You're an early stage investor in part, and actually I was really curious by Caro bringing up character AI. There are new methods of exit, so to speak, acqui-hire. And you can then either transfer IP or you don't. Like in Inflection's case, the IP was fully transferred to Microsoft. In Character's case, I don't think that it was. But do you then think differently about your 10-year time horizon when you invest in a startup if you see a potential to do something creative?
It's a very good observation. It's an interesting time. Let me just give you some anecdotes. We've seen just in the last couple of weeks, there's 4 acquisition discussions. There's discussions of direct secondaries. There's discussions of tender offers. There's discussions of continuity funds for venture firms seeking liquidity. And I'm even going through a situation now where there might be a merger of equals, which is the first time I've seen something at that scale in a private company. So it just gives you a visibility into what's going on in our world. There's a lot of creative deal-making discussions going on behind the scenes. I think some of this is in part due to the lack of IPO window being open. But the good news is that these are all very good companies, and the founders, for the most part, are very patient, exploring things opportunistically.
Can you tell us who the merger of equals is?
I would love to. That's for a different time on set.
Well, come on back when it happens, Max Gazor. We thank you, General Partner at CRV. Now, still in the world of artificial intelligence, McKinsey says it's seeing an increase in the number of clients seeking AI-linked projects, reporting that 40% of their client work now involves AI. The firm says that, banking and insurance sectors are integrating the tech most rapidly. Meanwhile, coming up, we'll discuss what to expect from Cisco's earnings after the closing bell. That's all going to be about AI as well. Plus, we take a deep dive into the rivalry between Snowflake and Databricks and why they both fear Microsoft. This is Bloomberg Technology.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Intel is slashing jobs, its expenses in a bid to turn around the business, and has just sold its holdings in chip technology creator ARM during the second quarter. Now, the company reported it in a regulatory filing Tuesday, and it no longer owns the 1.18 million shares it held 3 months earlier. This, as Intel, of course, has been struggling to regain its footing in an industry it once dominated. Ed, more on companies cutting jobs.
Yeah, there's a lot to discuss in the landscape. Cisco plans to report its fiscal fourth quarter performance, providing fresh insight into whether corporations are back to investing in their computer networks. Joining us to discuss, Bloomberg's Ian King. And you take those two stories in aggregate, right? It's a landscape and environment thing, the winners and losers of what's happening. Cisco's interesting because they would say, we're relevant, we're a part of this. Earnings will tell us whether they are or not.
Yeah, I mean, it's a transition story for Cisco. They're kind of promising that as an organization that they're transitioning into more sort of relevant for today technology and less focused on what they used to be good at. So kind of a wait and see. It's not going to be a one-day thing for them. Intel probably less so.
Yeah, just go into Intel for a moment, because just the fact that they're having to sell off such holdings, that they're trying to cut costs to such an extent, this seems very painful. We were just talking the other day about how they're cutting their marketing spend, axing an event.
Yeah, I mean, it doesn't, I mean, we don't know the precise details because Intel wouldn't comment other than outside of the filings, but it's not a good look, right? I mean, this is not something that they bought as a massive investment to make a huge amount of money on. Given the nature of the company, it's probably going to have been a sort of strategic purchase. The fact that they decided to sell that, and the fact that if you look on their balance sheet that they actually made losses on some of their equity investments, not a good look, and it seems to indicate that they really need any cash wherever they can get it right now.
Could we end on that, just the basics of the balance sheet? You know, Pat Gelsinger's approach has been what he calls smart capital, partnering with strategics, taking public or government money, and then the balance sheet to fund what he's trying to do. How's that part going?
Well, I mean, it depends on who you speak to. Some of the analysts are talking about Intel and its access to capital. Moody's, as you know, downgraded them last week. They're a couple of rungs above junk now, unfortunately for them, so that's obviously going to raise their cost of capital. But in general, to be talking about Intel and its access to capital is new territory for the chip industry. I mean, this is a company that just was awash with cash for so many decades, and now it's a concern.
Ian King, with a fascinating beat, we thank you so much. Meanwhile, secret code names, billboards, deal drama. This is just a window into the kind of competition for data supremacy between Databricks and Snowflake. Joining us now, Bloomberg's Brody Ford, who has a fascinating deep dive into a rivalry. They started as frenemies, not so much anymore.
In the tech industry, we love a good old-fashioned rivalry, and we haven't seen one like this in a while. I mean, two companies that are really just going after each other, right? I mean, they each kind of have cute nicknames for each other when they go and try to steal each other's business. They incentivize sellers to go after each other, right? I mean, and what really underlines all this is these are companies that maybe aren't household names, but they are required when you want to get your data in order to go use it for AI, right? And so, I mean, pretty much name any company you can, and they're going to be customers of one or two, and most likely both of these vendors.
Brody, remember in March, long time ago, but you and I did that story about Ali Ghodsi basically saying that Frank Slootman left because of the competition, which was kind of wild at the time. Right. There are some pretty scoopy bits within the feature, valuations, deal making. Just give us the rest of that stuff.
Yeah, I mean, one interesting one is that Snowflake was ready to purchase a startup for $600 million, and then, you know, Databricks comes in and ends up spending almost nearly $2 billion to buy it, and that's an unreported detail. Another interesting element is that while everybody understands on some level these two companies are a threat to one another, what isn't quite understood is the looming risk of the hyperscalers. Microsoft is, you know, their cloud infrastructure is what a significant chunk of Databricks revenue is coming from, customers on there. And Microsoft just said last month, hey, Databricks is a competitor now. And Databricks has spent a lot of time and energy recently, quietly, toughening that competitive stance.
It's interesting, again and again in the story, there's this fighting among what is the cheapest offering.
Yeah, right.
But will price come into it when you've got Microsoft as the juggernaut that's just so easy to integrate with, probably for every company?
Yeah. Well, what's funny is most will say that IT purchasers don't fully spend on price. They do want functionality, but at the end of the day, yeah, the easiest thing to ding your competitor on is, hey, look how expensive they are. That's an easy bit of FUD you could throw at the wall, and so it's not surprising that every single company involved is saying this.
Bloomberg's Brody Ford. Check out that deep dive and that feature on Bloomberg.com.
Thank you.
Wednesday, Caro, completed it, in the bag.
How can that be done for this edition of Bloomberg Technology? So much to digest. The fact that we're still in earnings season, that we brace for Cisco, says it all.
Yeah, for August news flow, things going pretty well. Don't forget to recap on the podcast. You know where to find it. Bloomberg Terminal, as well as on Apple, Spotify, and iHeart. Caro and the team in New York City, me and the team in San Francisco. This is Bloomberg Technology.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Inflation has eased for a 4th straight month, but how's the tamer report moving markets? S&P 500 is higher right now, and because investors had largely priced it in following yesterday's wholesale prices report. We saw stocks initially decline, but you can see it's now up 0.5%. And we have the NASDAQ in large part to thank for it. Mag 7 is pretty mixed at the moment, but the NASDAQ is certainly keeping pace with the broader market. Now, little change in bond yields right now, but definitely more buying at the long end of the curve that is pushing down yields, the 10-year at 3.82%, and the dollar drifting lower by about 0.2%. Let's get you some midday movers on the equity side here. We're going to start with Alphabet. The shares sliding today after Bloomberg News reported that the U.S. Department of Justice is considering a breakup of Google. And of course, this comes after a landmark court ruling found that the company monopolized the online search market. So the stock fell in after hours trading and has extended that decline into today's cash session. Another big mover is Kellanova, up today after Mars officially announced a deal to buy the company for almost $36 billion, bringing together 2 major food companies in what has been described as the biggest deal of the year. The price, by the way, represents a 33% premium over Kellanova's closing price on August 2nd, the last day before the talks were initially reported. Now, outside of individual company names, of course, the big headliner is the U.S. CPI report. Here's David Kelly from JP Morgan Asset Management from earlier today with his take on the latest read on inflation.
I think it's pretty good news in the actual transactions markets of the economy, where people are sort of bidding and asking for in terms of prices. Inflation is disappearing. So I think that overall, this very much confirms the idea that inflation is heading down.
So to continue this discussion, let's bring in Kelsey Barrow. She is fixed income portfolio manager at JP Morgan Investment Management. Kelsey, good to speak with you. Give us your overall read on inflation, the picture following today's CPI release and yesterday's PPI release.
Right. So I think in general, the inflation genie is back in the bottle at this point. And I feel like that is really the key message that I would want to get across. So when I think about where is inflation still above trend, it's really just concentrated to 2 primary categories. That is shelter and auto insurance. Outside that, there actually isn't that much inflation. Things have really returned back to normal. So, for example, if you look at core CPI excluding shelter, month over month, it's been negative for the last 3 months in a row. So I think this is definitely the inflation report that the Fed is looking for. And essentially what this does, it removes the tail risk of inflation reaccelerating and allows the Fed to have quite a lot of flexibility as it relates to responding to any downside risks to growth or labor markets.
So if we take a step back for a moment here, because I just want to understand how we got here. The disinflation story has definitely evolved over the past year. Before it was goods-based, now it's more services-based. Is that how it's supposed to unfold?
Well, I think it makes sense that that's the way it's unfolded, because the low-hanging fruit was the goods inflation. That was related to the supply chains.
Right.
The tougher inflation to take down has been the services. And so I think the Fed should feel more confident with the inflation that we've received in the last 3 months than the inflation we received in the last 3 months of 2023. Because it is more broad-based disinflation than it was back then.
You mentioned shelter and auto insurance. Those are the sticky parts in terms of categories that are still showing elevated pricing. What would lower rates from the Fed do for those two categories?
So the things that are driving those two categories, the auto insurance, they're both essentially lagged categories. So if you look at where they are right now, it's telling you about where those markets were 12 months ago. So it's not really particularly helpful from a forward-looking perspective, which is why I think the Fed should be comfortable starting the easing cycle, despite the fact that those categories on a year-over-year basis are still elevated.
Have they run their course, though? I mean, if it's a lagging indicator, do they still have more room to go up?
They still have more room to come down at this point, right?
Okay.
So they're starting to decelerate, but they still have more room to move lower. So for example, shelter, it's come down about 300 basis points on a year-over-year basis. That could probably still normalize and not calling for anything materially weaker than we had pre-COVID. But if you look at rental rates are back to where they were pre-COVID in terms of rent growth, around 4 to 5%. That's the type of numbers that we probably should be seeing over time as the data evolves.
Okay, so let's get your take on what you're doing in terms of portfolios. You see a soft landing as the most likely outcome here. How are you positioning for that, and how are you hedging against that, protecting against that possibility?
Right, so right now, the market has kind of two things to contend with. One is the risk of acceleration on inflation. So that's the one where we definitely have been able to bring that probability significantly down. That supports the soft landing narrative. Now, the risk, on the other hand, is that we see more weakness in the labor market. That's what determines not just the start of the cutting cycle, but also if it will be more aggressive going forward. So the things that I'm really watching looking forward, retail sales tomorrow, claims tomorrow, also the earnings from Walmart, these are the indications that we're looking for to determine, are we still in the soft landing or is it something more difficult? Now, how am I adjusting portfolios for that outlook? One thing we find really attractive right now is a hedge against that risk that the landing is harder, are curve steepeners. So you've seen the curve steepen as the Fed has approached the start of the easing cycle. The 2s-10s curve, though, is still inverted.
Right. Although briefly, it was uninverted on Monday.
Very briefly, but we should start to see that, fully disinvert.
Okay.
And the aggressive steepening tends to happen, when the labor market is weakening and when you have those more aggressive rate cuts.
So, quick final question for you. Last week's global market meltdown turned bonds into a hedge against risk assets, right? We saw stocks tumble, we saw bond prices rise, pushing yields lower. Is this a regime change where we are back to an inverse relationship between stocks and bonds, or is this temporary?
No, I think we are kind of returning to the more traditional correlations between bonds and equities. So bonds, high quality fixed income, has proven this month to be a good hedge to your risk assets. And the reason that the correlations are shifting back towards diversification working in your portfolio between bonds and equities is because inflation has come back to a more normal range. So if you look at the correlations, the rolling correlations, and you plot them against inflation, once core CPI tends to fall below 3%, that's when the correlations turn right way again.
Okay, so basically inflation needs to cooperate for this 60-40 portfolio to make a lot of sense.
Exactly.
We've been in a higher for longer mode since 2022. Institutional and retail investors have gotten really comfortable just sitting in cash and collecting, some pretty fat yields on that. It'd be a big psychological shift for investors to then change course and add to duration. Do you see them doing so in any kind of meaningful way yet?
Well, we are encouraging them to do so because we don't want, people to be complacent with their money in cash at 5% because that is a temporary rate and you're faced with a lot of reinvestment risk if you do that, which feels good in the moment, but the environment can shift quickly. We are starting to see that demand for duration pick up. And I think you're seeing it not only, though, in treasuries, but also when you look at credit. So, for example, this week has been another blockbuster week for supply, and it's been met by a lot of demand. People aren't scared to extend duration as it relates to credit. So I think we are seeing that demand for high-quality fixed income across the board right now.
All right, Kelsey, really appreciate your joining us today. Kelsey Barrow is Fixed Income Portfolio Manager at JP Morgan Investment Management. Coming up on Bloomberg Markets, we're going to look closer at that move by Mars to buy Kellanova. It is the largest packaged food deal since Kraft Heinz, but will this drive more consumer brand deals? We're going to discuss all of that next. You can see Kellanova up almost 8%. This is Bloomberg.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg.
We are faced with a challenging U.S. environment, just like many other consumer-facing companies.
We do see some pressure on the consumer's overall financials.
What we see happening more than anything is the lower-income consumers are a little bit stressed.
Consumers have the income they have, and they're making choices in the everyday basket.
The U.S. economy is a little bit stronger than people are giving it credit for, and the consumer will come back as the economy continues to strengthen.
Some C-suite executives speaking to Bloomberg this earnings season on the pressures that consumers are facing in a slowing economy. And it is against that backdrop that Mars is buying snack brand Kellanova for $36 billion, bringing together a pair of major food companies. This deal is set to be the biggest of the year. Joining us for more is Jennifer Bartashis. She is Bloomberg Intelligence Senior Analyst for Retail Staples and Packaged Food. Jennifer, is this a defensive move or an offensive move on Mars's part?
Well, it's really a combination of both. From a defensive perspective, Mars is part of their portfolio that is in snacking is heavily reliant on cocoa. And that is a commodity where prices have been very high and are going to continue to be high for some time. So adding some diversity on the snacking side of the business is definitely a defensive move. From an offensive perspective, this is really going to allow them to expand more quickly, especially into emerging markets, which is an area of great opportunity. And so it really is a combination of the two that helps make this deal make sense.
So tell us a little bit more about that. How does buying Kellanova increase Mars's reach into new markets? Perhaps markets that it doesn't have any exposure to at the moment, or markets where it has a little bit of a toehold, but not much in terms of actual depth?
Right. So Kellanova has actually had some very strong performance results in the last couple of quarters, and those have been driven, especially in Latin America, is an area that has been particularly strong. That's an area where Mars has got a slightly weaker market share, and so the momentum that Kellanova has in Latin America is an example of where there could be some great synergies for Mars. It's also worth mentioning that Kellanova has operations in Africa, especially through distribution, and so there may be an opportunity there to broaden distribution of Mars products in Africa as well.
Yeah, good point, especially with Mars contending with those cocoa prices. Will this deal trigger more consolidation, Jennifer?
Well, so this, when we look at this deal, there are a couple of things. We see that, it will help Mars with their market share. We don't think there's going to be a lot of pushback from the FTC in looking at this deal, simply because the portfolios are very diverse. But it does look like it's checking a lot of boxes for both companies.
Okay, checking a lot of boxes for both companies. We talked about the defensive and offensive nature of the deal for Mars. Who are likely buyers and who are likely targets across the food industry right now as we look at possible knock-on effects from this deal going through?
So right now, there's a lot of effort to consolidate into what are considered higher growth areas in the industry. Snacking has been an area where the consumer has held up well. They continue to spend. So everyone is sort of pursuing some opportunities there. And we've seen companies go into snacking more heavily over the past couple of years. So, for example, Hershey, which was traditionally mostly chocolate, now has some salty snack sales as well. In terms of opportunity for future M&A, I would say that there are companies where there are areas where there is weakness and opportunity to then solidify operations to by through acquisition. So that would be companies like potentially a Beyond Meat, which is in the alternative protein space but has been struggling.
Yeah.
And that's a category where consumers just haven't been as robustly active. In other areas, anything that is driven by convenience, that's something we heard Kraft Heinz talk a lot about in their earnings call. Consumers are looking for solutions, and so companies are out on the hunt for things that will help shore up their portfolios to meet those consumer needs.
Well, they're spending on other companies or other brands. That's your traditional M&A. There's also spending on innovation. Do you see any of these food companies spending a lot on innovation in a way that will pay off, that will increase their ROI?
Yeah, most of these companies are increasing their innovation spend this year. Now, it may not be exponentially, but they are increasing their spend. The idea is that right now, consumers are hard to tempt into purchases, and that innovation is one way that you can get consumers excited and re-engaged with your brands. They're also, increasing their marketing spend because, again, one of the big issues for these companies this year is to increase volumes sold. They've lost their ability to really raise prices, and so if they want to sustain top-line growth, that needs to come from higher volumes being sold. And so the combination of innovation and marketing and promotions are what they're investing in at the moment to try to achieve those results.
Yeah, as they wait for the consumer to come around and for these falling volumes to turn around as well. Jennifer, really appreciate your joining us. Jennifer Bartashis of Bloomberg Intelligence giving us her perspective on what's to come in the food industry. Coming up, there's more M&A developments as cannabis company Tilray Brands brews a deal to expand its growing portfolio. We're going to be speaking with its president and CEO, Irwin Simon, next. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. There's quite a bit of buzz around Tilray today. Can't get my words out, and you'll see why as it continues to branch out from cannabis into beverages. It agreed this week to buy 4 craft beer brands from Molson Coors. They are Hop Valley Brewing, Terrapin Beer, Revolver Brewing, and Atwater Brewery. This is a move that further diversifies Tilray's portfolio following last year's acquisition of 8 brands from Anheuser-Busch. I'm pleased to say here now to explain Tilray's larger strategy is CEO and President Irwin Simon, along with Bloomberg Open Interest co-host Matt Miller. So, Irwin, let me just start with you here. Why these 4 craft beer brands? How do they move the needle on your long-term diversification plan?
Hi, Scarlett. Hi, Matt. Nice to see you. Listen, we were started as a cannabis company. We're the largest cannabis company in Canada in recreational medical. And looking for legalization to happen in the U.S., and not seeing it happen, I knew we had to diversify this company. So what other fun area and what other adjacency was the spirits and beer industry? In 2020, I acquired Sweetwater Brewery, which had a brand called 420. We all know what 420 means. And that was doing about 2.5 million cases. With this acquisition, we'll do about 15 million cases of beer, over 1 million barrels. And why beer? I saw the beer category declining. And I saw an opportunity within craft beer to make beer fun again, to make beer unique. And I saw that there was not a lot of innovation that came out with beer. And with Tilray's beverages, we've come out with, 50, 75 new products over the past year. We've gained lots of distribution. And now we're the 5th largest craft brewer within the U.S. So, and I think, as you think about millennials, you think about, Gen Z, how do we get them to drink beer? And if one day cannabis does legalize in the U.S., hey, THC-infused beer is something that's going to be pretty exciting.
Although maybe difficult to dose, I think there's some issues around THC-infused drinks. And, Irwin, a lot of people in this country have quit drinking beer because they can legally use cannabis, for example, here in New York. And I think 26 states allow for legal cannabis use. Why can't you operate in those states that have legal cannabis dealers?
Well, Matt, great question. Because we're a NASDAQ-traded company, we cannot partake and we cannot sell any cannabis products within the U.S. Now, let me tell you something. I'm watching this election pretty closely, and I think both candidates have come out and talked about, legalization. If, when Biden and Harris got elected 4 years ago, I didn't think I'd be standing here today still talking about legalization or rescheduling. Something's got to happen. To your point, 27 states it's legal recreational, about 35 states it's legal from a medical standpoint. So over 75% of the country today has cannabis legalized in their state, but it's not legal, from a federal standpoint. If that happens from a rescheduling, and it's crazy out there today that cannabis is scheduled the same as a heroin and cocaine. and it's not a Schedule 3 and it's Schedule 1. So I think something's going to happen, and Tilray is ready to go. I mean, we're ready to go with drinks. We're ready to go with infused drink.
That scheduling looks like it's about to change. At least it's been recommended now that it's changed. And we've got the Safe Banking Act, written and ready to go. Is Tilray taking part in any kind of push for Congress, for the Senate, in order to pass that Safe Banking Act and allow the financial side, the back office of weed sales in the U.S.?
Listen, we've been a part of it for a long time, and today is one of the largest cannabis growers in the world. We have over 5 million square feet of cannabis grow in Canada, and we have 2 major facilities in Europe. And you saw just recently what happened with Germany in regards to medical cannabis, that every doctor can write a prescription. So yes, but listen, our politicians got to listen to what consumers want, what the voters want today. You know, we pay about $150 million in excise tax in Canada. There's probably $1 billion paid in Canada in excise tax. And that is, if you take the 10 times, there's probably $10 billion of tax dollars being missed here because of cannabis not legalized from a federal standpoint. So ultimately, something will and got to happen, and that will allow us to come out with drinks. That will allow us to sell medical cannabis, as that's what ultimately legalizes here. And that's what, citizens want out there.
Sounds like Matt was asking you how much you spend on lobbying. Matt, that sounded like another way of asking that. Erwin, over the past 3 years, Tilray has expanded.
I'm not going to answer that.
We'll scour through your financial releases. Over the past 3 years, Tilray has expanded into beverage and alcohol in a big way. I was just looking at this, from 5% of revenue in 2021 to 25% now. Cannabis's share of revenue has gone from 39% to 34% over the same period. Distribution is the third leg, and then you also have wellness mixed in there as well. What do you want the breakdown to look like in the next 5 years?
Listen, as I come back and say, and we gave projections this year to between $950 to $1 billion. A few years ago, when I thought legalization could happen in the U.S., I thought we ultimately can be a $3-4 billion business. What I want Tilray to be is a lifestyle company. Recreational cannabis, medical cannabis, beverages, and wellness foods or other wellness products. And a lot will change depending upon legalization. If it doesn't happen, Tilray is well situated today to grow in the U.S. in regards to our beverage businesses. We're not just beer, we're spirits, we're, energy drinks, and we're beer. But again, I think something will happen. And also, I'm pretty excited, we didn't touch on Europe. In regards to rescheduling happened in Germany, the largest, country within Europe, to the 80 million people. From a medical standpoint, and medical cannabis is for sale in about 20 different countries throughout the world, that ultimately in Germany, every doctor today can write a prescription for cannabis, and through a drugstore, you can obtain it. And we have a major grow facility in Portugal and a major grow facility in Germany today that can supply that. So if cannabis was rescheduled in the U.S. with our grow facilities in Canada, we think we could ultimately sell medical cannabis within the U.S. in regards to export it in here with NAFTA.
Erwin, quick question to you. Yes or no, is federal legalization inevitable in 4 years' time?
I think ultimately you're going to get some announcements that will happen from either candidate that is running for president. And I absolutely thought I would not be standing here 4 years ago from the last election not talking about
Erwin,
it. So I think something will happen.
Erwin Simon of Tilray.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Let's get you a quick check on where things stand in the financial markets right now. Stocks and bonds, at least on the long end of the yield curve, are higher, although we have seen them pair some of their advances, especially in equities, with the NASDAQ currently lower by about 0.1%. So big tech, still kind of the wobbly part of equities here. We have higher bond prices on the long end, so that means lower yields. The 10-year right now at 3.8201%, and the dollar falling about 0.1% to the lowest since March. As for some equity movers here at midday, we're looking at Progressive. The shares are gaining, reporting strong growth and margin performance in its latest earnings report. The insurance company reported premiums earned for July of $6 billion. The shares of Progressive are actually up 85% in the past year. We're also looking at Cardinal Health. The medical products company is up after posting an earnings beat. Revenue rose 12% to almost $60 billion. Cardinal also raising its 2025 profit outlook. Now, when we go back to the big picture, which is, of course, the economy, we spoke with Mona Mahajan earlier today, and she says things are looking up for not just the Fed, but also markets.
We're moving in the right direction when you look at the Fed's dual mandate. Inflation and PCE inflation certainly below their 2024 forecast. And of course, the other side of the dual mandate is what everyone's watching even more closely. Will that labor market hold in? We've seen some softness recently, but thus far on track for a good September 18th FOMC meeting as well.
BMO senior economist Jennifer Lee joins us now. So, Jennifer, we got the kind of inflation report that didn't do much to change the market's wagers on what the Fed is going to do next, which is likely a rate cut. Are you comfortable with what the market is pricing in right now?
Good afternoon, and thanks for having me on the show. And yes, I am, and I'm going to totally date myself right now. When one of the first songs that came in my head when I saw the CPI numbers this morning was this 80s band called Platinum Blonde. They had a song called "Standing in the Dark." At the beginning, there's this woman that says, "Are you sitting comfortably? Then we shall begin, or we will begin." So I feel like Fed Chair Powell is probably quite comfortable with what he's seen. This is like the fourth straight CPI report in a row that has been encouraging, and I think it puts him and the rest of the Fed in a much more comfortable position to start cutting rates in September. And this is what has been the call for some time now, and I'm very anxious to see what he's going to say at the Jackson Hole Confab and later on this month. But hopefully we hear some confirmation that that this rate cut will be coming in September.
Yeah, I'm always, by the way, up for any kind of music references, no matter from what era. The upcoming labor market data, though, will be pretty critical in determining the speed and the size of rate cuts. Which specific data points will you be paying the most attention to? Will Jay Powell be paying the most attention to? Is it jobless claims? Is it the August non-farm payroll or the unemployment rate?
Of those three, I'm going to point to the unemployment rate, just given that, it's based off the household survey, and that has shown very little movement, which has been a little bit concerning over the past year. And so, of course, we saw the jobless rate tick higher to 4.3%. Of course, the headline payroll report will also be of interest, just given that it's undergoing always so many revisions in previous months. And so I'm curious to see whether or not we're going to see a bounce back from what we saw in the latest month, which was 114,000. But I think the jobless rate itself and, of course, earnings as well will be top of mind, I think, for the Federal Reserve if they had to pinpoint it to just one or just a couple of components. But, of course, the entire report is always going to be watched very carefully and parsed through for little tidbits on how weak the labor market is becoming or how maybe resilient it still is. Again, we're going to have to see.
Yeah, I mean, I'm sure he's going to include the totality of the data in his Jackson Hole speech when he does speak. I want to get your take on the latest data when it comes to mortgage apps as well. This is a weekly release, and what was surprising was how much it rebounded this past week. Kind of surprising that refinancings jumped 34% to the highest in more than 2 years. We know the 10-year yield dropped, but the Fed hasn't even cut rates. So what does that tell you that there is that much pent-up demand?
I think it's just more an anticipation of what is going to come. Before it's almost like getting in before the cuts. But again, we have to sort of take those weekly numbers with a grain of salt because there can be so much volatility on a week-to-week basis. It could be like weather-related things that could impact it as well. So, but overall, I mean, I think with what we're seeing so far in terms of slower economic growth, the totality of the data, as you point out, has been pointing to that, slower economic momentum, easing inflation, cooler job demand, and all paving the way and giving the Fed the comfort to start cutting rates. And I think, it's not coming a moment too soon. They've been waiting for a while. They're probably being accused of being behind the curve a little bit. But I think this has been a very reasonable time overall, just making sure that inflation is coming back down to target. Now we're seeing labor demand cooling as well. So again, all paves way for that long-awaited cut coming in September.
Yeah, and you mentioned slowing economic momentum. I'm looking at the calendar for data releases for the rest of this week, and we've got another big one tomorrow, and that is retail sales for the month of July. They surprised to the downside the previous month due to the cyber attack on auto dealers. To what extent will the July report show a catch-up spending by car buyers as a result?
We're probably going to see some catch up, just because again, when something drops so quickly, and for a special factor like that, you're going to see some rebound in the coming months. But I think it's more looking at not just the headline, and you try to stay away from the headline because there's so much, again, volatility that could go with it. It's more like looking at what consumers were spending on, especially on discretionary items. And that sort of gives them an idea of how comfortable consumers are to continue spending on how their own economic situation is. If they continue to buy more recreational goods and services or spend more in that category, and which they have been doing, is again points to still confidence within the U.S. consumer that they will continue to spend and that they are still comfortable with their job situation. But in terms of like dining out, that's another one I love looking at. That's been showing a little bit more of a decline lately, some weaker numbers coming from that component. So it's almost like offsetting. But overall, as long as they're still spending on discretionary items like the recreational goods and services or recreational vehicles, for example, I think it still gives us a lot more confidence in the U.S. consumer going forward.
So Jennifer, we started with the Fed. I want to end with the Fed. In retrospect, what was the freak out over the emergency rate cut that was priced in last Monday? I ask because I wonder how easy it is for that to flare up again.
I was wondering that myself because I looked at the markets. I'm like, what the heck is going on here? What did I miss? But I think it was a combination of number of factors. We had one tech company, that was announcing big layoffs, or a couple of tech companies are announcing big layoffs and missing earnings results. Of course, the Bank of Japan and the rate hike, which shouldn't have been too much of a shock. I guess it was more like the size of the increase came as a shock, and then you saw the subsequent rebound in the yen, which of course has retraced some of those gains since then. And interestingly, I'm thinking that perhaps when the Fed chair was sounding a bit more dovish at the last FOMC meeting, maybe freaked out people because they're thinking, what does he know that we don't know? And maybe it seems like the economy is coming to a grinding halt. But this is what we've been waiting for him to sound more confident that he is going to cut rates, and he's finally saying it. And again, I was a bit surprised that the market had that bit of an overreaction. But you never know. I mean, it's thin markets as well with the summertime, so anything could happen that could cause markets to flare up or down again.
All right, so perhaps the freak out period is not yet over. BMO senior economist Jennifer Lee, thank you so much. Coming up on Bloomberg Markets, shares of UBS up 5% in Zurich and in the U.S. on its latest earnings report, and its CEO telling Bloomberg that the company is gaining market share in the U.S. We've got highlights from that conversation. This is Bloomberg.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with. Right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. It's time now for our stock of the hour, and it is UBS. The shares are higher in both Zurich and New York, trading by about 5% after the Swiss bank beat estimates last quarter, posting higher than expected profit thanks to investment banking revenue. UBS has also made progress in its integration of Credit Suisse. CEO Sergio Amati doubled down on efforts to return capital to shareholders through a $1 billion share buyback this year. Here's what he told Bloomberg earlier today.
I guess for the markets and for many investors, what happened early on this month has been a wake-up call, right? So, I mean, you look at the magnitude of the movements should make people think carefully about having a proper diversification and being very thoughtful about the way you invest money. So in that sense, the fact that we have basically made back everything within 1 week or two cannot be taken as a temporary issues. In my point of view, one has to really think that probably is a sign of some elements of fragility in the system.
But does it get easier as maybe we get a Fed cut, or does it get more complicated as we go to the U.S. election?
But look, when central bank cuts, it depends how they cut and why they cut. So if of course, there is now capacity probably to accommodate cuts based on lower inflation, but it's also, we need to watch exactly also what are the underlying economic drivers, and to the extent that the Fed is forced to cut more aggressively because of economic downturns, that would not really be good for the market. So we need to really watch why rates would come down and how quickly they come down. In general, we do expect and we see room for a potential rate cuts in the foreseeable future, but I wouldn't really be in the camp of predicting that the Fed will go as far as the market wants the Fed to go.
Why is that?
Well, because I think that probably the market is used to see central banks stepping in every time and being very accommodative in the previous cycles. And I think right now it's quite clear that central banks are focused also on inflation, and therefore they don't have so much capacity to go as far as the market may want to see.
That was UBS CEO Sergio Ermotti speaking with our Francine Lacqua. Now, another stock that's on the move is Victoria's Secret, gaining after the company poached the CEO of Rihanna's lingerie brand to help in its turnaround efforts. Hillary Super will replace the current CEO on September 9th. Victoria's Secret has been struggling for years thanks to falling demand and increasing competition. Bloomberg Intelligence senior analyst Mary Ross Gilbert has more on this. And Mary, it's clear that investors like the news because the stock is up almost 13%. What can you tell us about Hillary Super and what she's accomplished at Savage X Fenty?
Yeah, so Scarlett, thank you so much for that question. So with Savage X Fenty, she was just there for a little over a year. We don't really have any insight on how much revenues have grown. It's a very small business. Her beauty business is much larger. It's probably over $500 million, the beauty business, but from what we've seen and what we could find on the lingerie business, which is the Savage X Fenty, that's very small, probably under $100 million in revenues. But Super really has over 3 decades of experience. She was at the helm of the Anthropologie brand that's under Urban Outfitters. That's one, when she was there, it was over $1.6 billion. She's also worked at American Eagle Outfitters. That business is over $5 billion in revenues, and she was responsible for, she was an executive there, but she was not at the helm at that brand. But she has tremendous experience, and here Victoria's Secret is the largest in lingerie with a 20% market share, and has been really making great progress on their turnaround, and now I think we can get it back to growth.
Yeah, when we talk about CEOs coming in and really turning things around, I feel like Fran Horowitz over at Abercrombie & Fitch is kind of setting the bar on how to refresh tired 90s brands. What have you seen what will you look for from Super to see if she can do that for Victoria's Secret? Because she now needs to do what she did at Fenty, but at scale.
Yes, that's right, at scale. And she has that experience, and so that's the reason why they brought her in. So I think what we're going to see is, first of all, it's a woman-focused business, so it's really nice to see somebody come in like Hillary, Hillary Super. And Martin Waters, who's the CEO who's exiting, he really has done a great job resetting the brand. It's highly inclusive brand, whereas it wasn't before. The business probably peaked around 2015 to 2018, and then it just really, it lost market share, 10 percentage points. So it was over 30% in 2015, and now, like I said, closer to that 20%. But now it seems to be stabilizing, and given that they've just reported earnings for the second quarter that are above consensus, and that happened also in the when they reported their first quarter preliminary figures, we're seeing improvement there. So I think she's going to really be able to take it to the next level and actually restore growth to the brand, because we've been seeing revenues declining, and it looks like market share is starting to stabilize. And of course, the fashion show is back. So we're going to have a new fashion show that was on a hiatus. They did do something different last year, more of a documentary type style. So it's going to be, I think it's very exciting. And when you think about it, Victoria's Secret has 76 million followers on Instagram.
Yeah.
And if you look at the Savage X Fenty brand, that has more like 5 million. So that just kind of gives you the difference in terms of the magnitude.
Yeah, that's really interesting that you compare it like that, because certainly that's the way that a CEO now needs to think. In terms of price points, and we're looking at images of the Savage X Fenty website, you know, if you just take an ordinary bra from Rihanna's brand, it's about $59. Sure, it's lower if it's on sale, 2 for $29 here. But you look at Victoria's Secret's pricing, and it's about $15 or $16. What does that mean? How is she going to make that transition from something that's more high-end to something that's more mass market?
Yeah, so it's interesting because Victoria's Secret, the brand itself, is really considered more of a premium brand. So when you look at more of their fashion bras, like the Dream bras, Body by Victoria, those price points are probably more aligned. And then again, they will have promotions, but you know, so when you look at that, it's really more of a premium orientation. However, Victoria's Secret did acquire Adore Me, which is the value-oriented brand.
Oh, okay.
And yes, and that is a digitally native brand, but it also comes with tremendous technology. This technology is a big opportunity for Victoria's Secret, and this is something I think Super will also be able to really take and accelerate that transformation in terms of bringing subscription services to the Victoria's Secret brand, and also try on at home, something that's in test mode right now and expected to be rolled out, you know, within the next few quarters.
Yeah.
So I think that's where the opportunity lies. So they do have, you know, different brands, and they also have a marketplace. So they'll bring in, Victoria's Secret will feature clothing lines, so, and then bathing suits, and it'll be like different brands that they have there, and you can look online and you'll see them, so that there's a marketplace opportunity that could even go further. So when you think about the global relevance and how sizable this brand, and internationally, of course, they're growing in the double digits.
Yeah, I think you hit it on the nail, though, when you said the social following on Instagram was 79 million, and that's something that she can definitely focus on monetizing off of. Mary, thank you so much. Mary Ross Gilbert from Bloomberg Intelligence on the CEO change over at Victoria's Secret. The stock is up about 13%. Coming up, why the world's largest steel producer is now worried about a potential crisis that could be bigger than the 2008 housing bubble. We've got the details next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that, you know, have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution We think that there's a lot of opportunity with those businesses.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Scarlett Fu. The world's biggest steel producer is sounding the alarm about a crisis in China with the potential to send shockwaves across the globe. The chairman of Baowu Steel Group is warning of a deeper industry downturn for the metal than the trauma seen in, say, 2008 and 2015, with conditions in China proving to be, in his words, longer, colder, and more difficult than expected. He described it as a harsh winter. Bloomberg Intelligence senior analyst Richard Burke is here. Richard, was this surprising to hear such frank comments, such a frank description?
I mean, it's probably surprising that there was a frank description, but I think the market kind of expected, given what we've seen over the last few, really the last year or so. You've seen exports from China go up markedly than it had in the past from previous levels. So I think the market may not have been that surprised. What may be surprised was the frankness of the chairman's comments.
Absolutely, especially from a company that's state-owned, owned by the central government. So he says the challenge will be worse than in 2008 and 2015. How do you read that? What's different about it this time?
Well, what's different is there's probably not a stimulus that the government can come in the past and stimulate the property sector. You know, the Chinese policy has changed to let's move more towards infrastructure, away from the property sector. And what has happened is in the past, in 2008, 2009, 2015, 2016, they launched a huge stimulus projects that stimulate the property sector. Yeah. And what happens is now we have an excess of property and buildings.
Yep.
Landowners aren't buying land, which finance the local Chinese governments, so local Chinese governments don't have money then to pump it into infrastructure and things along those lines. So that's the big difference.
Right, and it goes on, the ripples go on.
Right.
So in terms of ramifications for the global steel industry, and in particular the U.S. steel industry, how are you thinking about this? The U.S. Steel and Nippon Steel are still trying to get their merger approved. You talked earlier about rising Chinese steel exports. Is that what we're going to be contending with? How should the U.S. steel industry brace itself?
Well, the U.S. steel industry is probably one of the most protected markets there is in the world. That being said, we do have indirect consequences. For example, we've heard steel makers complain lately about imports or exports from Mexico coming into the country. Mexico is part of our trade agreement, so why would that be a problem? Well, what the problem is it's not Mexican steel, it's imported from Vietnam.
Oh, I see.
That then
got redirected.
Has been redirected, but has originally started in China. So China has, basically transshipped steel to Vietnam. Vietnam ships it to Mexico, and now we have that. So the U.S., like I said, is probably the most protected market, but we've still seen implications flow through.
Yeah.
Where we're probably going to see worse impact is with Europe. Europe is probably the most susceptible to these imports coming out of China.
Yeah, we heard from ThyssenKrupp on Wednesday highlighting the challenges by reporting a big slump in earnings. Richard Burke, Bloomberg Intelligence analyst covering the steel industry. Thank you.
Okay, thank you.
And I'm Scarlett Fu. That does it for Bloomberg Markets.
times in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Inflation eases for a fourth month, but both campaigns can find grist in today's CPI. Welcome to the fastest show in politics as the economy once again crosses over into politics. I'm Joe Matthew alongside Kaylee Lines in Washington. The data hitting today, Kaylee, as the candidates begin rolling out their economic plans. And first up today is Donald Trump.
Yep, he'll be in Asheville, North Carolina, giving his speech about economic policy, followed 2 days later on Friday by Vice President Harris, who will also be in North Carolina talking about the economy, not to mention the fact that she'll appear in Maryland tomorrow alongside President Biden in their first joint campaign appearance, in which they will be focusing on their administration's efforts to lower costs for the American people. Basically, Joe, they're planning to talk about inflation.
Yeah, which has been kind of a losing issue for the Biden administration, the Biden campaign, and now Kamala Harris is tasked with appearing on stage with him the day before she tries to draw distinctions between their own approaches. She's got good news to talk about, though. Michael McKee is going to join us to get into the data. Then again, Donald Trump can point to a lot of things in here as well, like the cost of shelter.
Exactly. Shelter costs comprising 90% of the inflation that we did see. And those sticky housing costs, definitely a problem for voters as they consider their own costs of living as they get ready to head to the polls in November. So we'll have you fully covered on that coming up this hour. We have to talk about geopolitics as well. But first, though, as always, a check on the markets. Amy Morris has that for us today from here in Washington. Hey, Amy.
Hi, Kaylee. Year-over-year inflation, as you mentioned, reaching its lowest level in more than 3 years in July. The latest sign that the worst price spike in 4 decades is fading, setting up the Federal Reserve for an interest rate cut in September. We check markets for you all day long here at Bloomberg. S&P 500 up 0.2%. NASDAQ is down 0.3%. We're going to talk about that. And the Dow up 0.5%. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.94%. So NVIDIA has pulled back after a 2-day rebound, and shares of Google parent Alphabet fell on the stock market today. This is because of talk about an antitrust action. NVIDIA shares little changed. Shares of Alphabet, though, down more than 3%. Candy company Mars buying food company Kellanova in a deal worth nearly $30 billion. Kellanova brands includes Cheez-Its, Pop-Tarts, and Eggo, with the net sales of more than $13 billion last year. Mars says it'll pay $83.50 per share in cash. The company put the total value of the transaction at $35.9 billion. The deal is expected to close in the first half of the year. Shares of Kellanova now 7.7% higher. Victoria's Secret is poaching the top executive from Rihanna's lingerie brand to lead the retailer's turnaround. The company says Hillary Super will replace Martin Waters. He was terminated as CEO and resigned from the board. Tim Johnson is the chain's chief financial and administrative officer and will serve as interim CEO. Shares of Victoria's Secret now up 13%. And that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. Taking a look at how markets are reacting to the data today, and certainly we're seeing political reaction to the data as well, including a statement from President Biden. Talked about how today's report shows progress being made on inflation, though once again, he mentions, as we've seen him do for a few months now, even when he was still running for re-election, prices are still too high. And therein lies the rub. If you're specifically the Harris campaign, who is attached to this administration, yes, inflation's getting closer to that 2% target. The problem is when prices are still more elevated than they were before this administration came into the picture in early 2021. It's a difficulty.
It's like every month are they just copying the same statement here? Because that second graph
I think so.
always begins with, but prices are still too high. And that's where we start with Michael McKee, who joins us, of course, Bloomberg economics editor, with us live from New York. He's had some time to dig through the data here. And I don't know, Michael, it does look like both campaigns have a story to tell, whether your name's Kamala Harris or Donald Trump. Who's got a more convincing story when it comes to talking about an actual attempt to lower prices here in time for November?
Well, that's almost two different questions, because in terms of talking about lowering prices, Kamala Harris can point to the fact that the inflation rate has dropped tremendously over the last year, coming down from around 9% to now 2.9% for headline CPI, certainly within hailing distance of the Fed's 2% target. But prices are too high, and the American people look at what they're paying now, not the change in what they're paying now. And if you look at a chart of where we are with this, I mean, you can the overall price level is starting to level out, but it is still much, much higher than it was pre-pandemic and way off of the trend line from the pandemic. So the Trump people have a good story to tell as well.
Well, of course, it becomes the story that is being told, or at least understood, by the Federal Reserve that comes into question here, Mike, especially when we consider that a lot of the stickiness is still coming from shelter. It's owner's equivalent rent and rent prices themselves that we're considering here. And we've heard from a lot of, I guess, left-leaning economists on this program who suggest that actually the Fed's interest rates at this point, as elevated as they are actually stoking inflation because they're contributing to those higher housing costs. How should we be thinking about that here, and as we look toward a rate cut of some size in September?
Well, that is a really key point, but the housing industry is very complex, and so it's not as simple as just saying the Fed has pushed up interest rates. Now, that's a reason that houses, and maybe you could say condos, are not selling as well as they used to, because people don't want to pay mortgages that are this high. About 80% of Americans have mortgages that are under 5%, so why would you be paying 6 or 7? That's set up a lot of pent-up demand if we ever get mortgage rates down, and hopefully if the Fed starts cutting rates, we will. But the other problems are that there's not enough houses, there's not enough supply, and that's a zoning issue in most cities around the nation. And then there has been apartments, put it this way, are very cyclical. When there's not enough apartments, they build a lot of apartments, and then they have too many apartments and prices go down, and that's what happened. And now we're building fewer apartments, and so that's leading to a shortage as well. So there's a lot of things in there, and it's going to be interesting to see what both sides say about this and about bringing prices down, because there's really no great federal way to do it. Zoning is local. Apartment developers are going to develop based on what they think the business conditions are, and the Fed, at the moment at least, is still independent. So there isn't much they can say that would really be convincing, at least to any economist, that a particular president could bring down inflation, as it were.
Well, we recall the messaging, Michael McKee, of Jimmy McMillan, who, of course, chaired the Rent is Too Damn High party, ran for mayor in your city, ran for governor in your state. Remember, he actually was going to run for president at one point until he endorsed Donald Trump, knowing that Kamala Harris and Joe Biden are not likely going to fix this problem when it comes to housing costs before November. Yeah. Isn't that the winning message for Donald Trump? The rent is too damn high. He should have Jimmy McMillan join him on the stump here for the next 3 or 4 months and continue driving that message home, no?
Well, you see, we're way ahead of the game in New York here. People were way out in front of that. We are seeing some declines in housing prices now. We have for a couple of months in the numbers like the Case-Shiller report and things like that. And we have seen around the nation some drops in rents, but it is not the case here in New York. New York is always a sort of a special case because you get a lot more people who are coming in here and a constrained supply. And so we see prices higher than most parts of the country. But it is certainly an argument. Now, whether or not it's a winning argument politically, you don't buy a house every day. So it's not quite the same. You want your winning argument, you can talk about the price of meat or the price of gasoline or something like that, which, though they've come down a lot, are still higher than they used to be.
You think about all those young people, though, trying to crack the housing market, Kaylee.
Mike says you don't buy a house every day. I'm still waiting for my single day to come where I do buy a house, Mike. Looking at the rates picture here. On that note, we've got PPI and CPI in the bag now. Jackson Hole's next week. Does this data that we've gotten over the course of the last 2 days actually materially likely change anything that will happen?
No, Jay Powell is going to come out. It keeps it from changing, put it that way. He can deliver the same message he's been delivering, that inflation's coming down, we're becoming more confident, and it will soon be appropriate for us to consider adjusting the rate. They do get the PCE inflation report at the end of the month, and they get another CPI report. And then, of course, in terms of the economy, we get another jobs report before their next meeting. So a lot of data still to come that could maybe change minds, but it does look like we're in train for a rate cut, probably only 25 basis points, but he's not going to go beyond that at this point.
All right, Michael McKee, Bloomberg International Economics and Policy Correspondent. Thank you so much, as always, joining us from New York. And of course, as we watch the inflation picture unfolding before our eyes, think about how we are talking a lot about shelter, maybe less so about other volatile components like energy now. It does speak to the not stasis, but the relative more calm that seems to be in energy markets now. For now, though, as we still are on watch to see whether or not there is actually an escalation in conflict in the Middle East, as we are still waiting to see if and when Iran and Hezbollah will actually retaliate against
kind of incredible.
Israel.
It was crude oil, WTI, still just sitting there at $77 a barrel. Like none of this is happening.
Well, because right now, frankly, nothing really is happening. The question is that by design, or does that signal that actually maybe nothing will come for all of the talk and warning of it? So it's on this note now that we turn to Ambassador Thomas Pickering. He is former U.S. ambassador to the UN, former ambassador to Russia as well, U.S. ambassador to Russia, that is. Sir, it's always great to have you here. We would like to get your thoughts on Russia and Ukraine as well. But if we could just begin with what's happening in the Middle East, given that we have seen nothing yet from Iran or its proxies, does that just signal that they're delaying for what could be a larger attack than we saw in April, or that maybe they're considering not doing anything at all?
It's quite possible, and we've seen some statements on their part that they may, for reasons that are not yet clear, be holding off for any particular reason. It is certainly clear that the U.S. has sent a very stern and very tough message and wishes to avoid the outbreak of a conflict that begins to escalate and cascade in the region for very, very good reasons, having to do with, obviously, the safety and security of Israel on the one hand, to which the U.S. is committed, but also to the galloping death toll of Palestinians in Gaza, about which Vice President Harris has spoken out quite firmly recently.
Ambassador, we've seen the biggest mobilization of F-22 fighter jets into an area of combat that we have ever seen here. And I wonder if you're concerned or it gives you comfort to know that American airmen, sailors, and Marines will likely be directly involved in knocking down whatever Iran throws at Israel.
Joe, it has to be both. Obviously, anything that can deter, damp down any enthusiasm on the part of either party to launch a series of military actions which have the potential of cascading into a much broader conflict is very much in our interest. At the same time, obviously, any actions taken which precipitate that particular kind of activity are going to be clearly steps not in our interest, not in the region's interest, and not in the workout of the problems in the region, in the interest of those people who believe, as I do, that a ceasefire and hostage exchange are very much important questions, and that will come up tomorrow in the resumed talks. I wish I could tell you I would greet that with more confidence, but it remains a very, very conflictive, very contentious set of problems that does not appear at this stage from the outside to be on the edge of settlement as much as the U.S., Qatar, Egypt, and others are engaged in seeking to push it in that direction.
Well, on that note, Ambassador, if Hamas is not at the table tomorrow, do you believe that they will get there, or is this kind of the last chance to really get this done? If it doesn't happen this week, why would we have any faith that it will happen ever?
Kayleigh, the process of seeking peace in a place like the Middle East is not based on auguries of hope driving us on, but alternatives that are worse, that manufacture what I would call the impulsion to move ahead. And it's been arguable that in the Middle East conflict, despite the very high casualty rates and the massive range of destruction and the problems on both sides, we have not reached the point where the parties feel there is enough disadvantage to continuing the conflict to precipitate the beginning of a serious look to see whether they can gain more from negotiations than they can gain from further shooting.
Ambassador, of course, you were also ambassador to a number of other nations here that give you expertise on what's happening in the world, including Russia. And we're looking at Ukraine continue its incursion into Russian territory, an offensive that appears to be taking hold. Now about 2 weeks old, Russia last night had to knock down 117 drones from Ukraine. Is this
shortly expecting the results of the Federal Reserve repo operation?
I think that we're in a situation in which many of us remain skeptical that there is a battlefield victory in sight, but intrigued by the notion that the Ukrainians have launched a set of military activities into Russian territory, which the Russians, with all of their undoubted strength and superiority, have not been able to dislodge. And that is the kind of setup one would expect to see, if it continues, become a potential basis for convincing one side or another that they have more to gain in negotiations than they have to gain
66 counterparties take $328.472 billion at the Federal Reserve repo operation.
Netanyahu, and perhaps politicians in this country as well, are very much engaged in the idea that in these conflicts, they have more to gain from avoiding things like prosecution and so on, either for international criminal courts or for domestic courts, by continuing the conflict than by moving it into the negotiating process. And we have to be careful of that and watch that as one of the determining factors.
Well, so, Ambassador, do you see this Ukrainian incursion into Russian territory as something ultimately that does bring the war closer to its end than it was before, because either it makes Ukraine more likely to have victory outright, or at the very least, may bring negotiators to the table?
Kayleigh, that interpretation is not totally excluded, if I can be very cautious in saying it, but it is not something that I think is inevitable. But we have been looking in the Russia-Ukraine war for the idea that there does not seem to be at hand a military victory on the part of either side, despite both Russian larger capacity as a power on the one hand, and world continued support for Ukraine in the main on the other hand, to tip the balance. But a Ukrainian success which can be sustained, may begin to open the door to thinking on the other side, do I have more to lose by continuing the conflict or more to gain by negotiating a solution? And it is that set of capacities, if I could put it that way, of changes that often precede a negotiated outcome. But it is not certain, and it is not based on any estimation of how the parties and their leaders have acted up until now to expect that a negotiated solution is around the corner. It is potentially a slightly greater possibility than a few weeks ago, but far from a certain.
Okay.
He was ambassador to Russia and U.S. ambassador to Israel. Thomas Pickering, we thank you so much for the insights today. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
It's 1:21 on Wall Street. I'm Amy Morris. Underlying U.S. inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to lower interest rates next month. The so-called Core Consumer Price Index, which does not include food and energy costs, increased 3.2% in July from a year ago, still the slowest pace since early 2021. And we check markets for you all day long here at Bloomberg. The S&P 500 up 0.2%. NASDAQ down 0.2%. The Dow up 0.5%. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.95%. Mars, whose brands include M&M, Snickers, and Skittles, is buying food company Kellanova in a nearly $30 billion deal, giving access to brands like Cheez-Its, Eggos, Pop-Tarts. Kellanova came about when Kellogg split into 3 companies. It's based in Chicago and houses brands including Pringles, Townhouse, Morningstar Farms, and Rice Krispie Treats. It had a 2023 net sales of more than $13 billion, and now shares of Kellanova are up 7.7%. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris with a check on the markets on this CPI day. Thank you so much. I'm Kaylee Lines alongside Joe Matthew here in Washington. Welcome back to Balance of Power, where, of course, the inflation data, all the economic data always has political implications as we think about the impact it will have on voters and on workers, of course. And it is workers, union workers specifically, who have been in focus in the presidential campaign this week, as we saw earlier this week in Los Angeles. Governor Tim Walz of Minnesota, of course, the Democratic vice presidential nominee, made his first solo campaign appearance specifically talking to a union, talking about his role as a pro-union candidate. This is a little taste of what he had to say.
The only thing those two guys knows about working people is how to work to take advantage of them. That's what they know about it. Every single chance they've gotten, they've waged war on workers and their ability to collectively bargain to take that away from them. All we're asking for is better wages, better benefits, better lives, and dignity in the work that we do.
Okay, so when you get back to the Elon Musk interview with Donald Trump the other night, there was a conversation about whether Elon Musk, he was suggesting maybe play a role in the administration to help direct where tax dollars are going. And Donald Trump indulged him in some compliments about being the king of cutting, the greatest cutter, I think, and talked about how he would fire people at will for trying to leave the job to organize a union. That got the Teamsters really upset. Sean O'Brien was asked about this, the head of the Teamsters Union, who, of course, spoke at the Republican National Convention in Milwaukee, and he issued a statement to Politico, quote, "Firing workers for organizing, striking, and exercising their rights as Americans is economic terrorism," unquote. Now, the Teamsters, Kelly, have not endorsed yet.
No.
Looked like they were turning to Trump. And he says he's not been invited to the DNC in Chicago.
The question is that invitation now potentially forthcoming as we look ahead to next week, knowing as well that the Black Caucus within the Teamsters has come out to endorse Harris. So what kind of pressure does that put on the union's leader?
Let's see what the panel thinks. Jeannie Shanzano is with us, of course, Bloomberg Politics contributor and political science professor at Iona University, alongside Brittany Martinez, founder of Espina & Company, Republican strategist. Great to see you both. Jeannie, this is an opportunity. Is Kamala Harris on the phone with Sean O'Brien right now?
Gosh, I hope so. I mean, that's my big question. Why haven't we heard an announcement that he is speaking yet? He requested speaking slots at both the RNC and DNC. So that one should be forthcoming. They should announce it in the next day or so when she's on the stump. And of course, they should take that clip about economic terrorism and blast it everywhere, because his interview with Musk and those statements about cutting and firing people who dare to protest, that is the kind of thing that turns unions and union workers away from the Republicans. So that's what they need to be blasting out there. And I'm surprised we haven't seen that yet.
Well, I guess it raises the question, Brittany, whether or not Republicans really truly want the endorsement of union leadership, or does it mostly just mean trying to bring alongside the union rank and file, knowing that many union members in the United Auto Workers, for example, were supporters of Donald Trump, even though the UAW president, Sean Fain, has come out and endorsed the Harris-Walz campaign. Is the Trump-Vance ticket really seeking the union vote here, as we hear J.D. Vance talking often about not just union workers, but union and non-union workers when he talks about the working man?
I mean, apparently not, because he called the president of the auto workers stupid. So, he's not really doing a great job of winning those people over. And he said sort of kind of to what you were just saying now is that, okay, well, it doesn't matter what the leaders are doing. The members are going to be voting for me. But when you go out and criticize their president, when you go out and criticize Governor Kemp, when you go out and criticize all of these people, you're not winning over additional voters. You're probably going to make them upset, particularly if they're on board with what these leaders are doing. And I don't think that he's done a great job of doing that. And I think that, it would be extremely important to bring in the president next week to speak at the DNC convention. So I hope that Harris campaign and Walz are trying to get him there if possible.
Jeannie, there's new polling out today from the Cook Political Report that confirms what we've been seeing in a lot of cases. Kamala Harris closing the gap and in some cases actually taking a slight lead over Donald Trump. As an expert on polling, I'd love for you to weigh in on what we got from the Cook Political Report today, the Swing State Project Survey. This is all 7 swing states that we track here at Bloomberg as well. Find Harris leading or tied with Donald Trump in all but one of the 7. A narrow lead, 48 to 47% in those states in the head-to-head. We've got a couple of issues here. The Trump still holds a slim lead in Nevada, for instance, if you're looking at this from the perspective of Kamala Harris. But what does the pollster inside you say at a time of uncertainty and a lot of noise before the Harris campaign starts to detail policy proposals when you look at these numbers?
Well, they're moving in the right direction, obviously, for the Harris campaign. This is quite a shift from where Cook had the race in May. It is, a neck and neck race at this point, I think. As you mentioned, most of these states are within the margin of error. I think the change in North Carolina is particularly important, and I think helps explain why Donald Trump is down there today, why Harris will be down there later this week, why the Republicans have a big ad buy now in North Carolina. This is what is happening when we talk about momentum, is from when Joe Biden was candidate, they have now opened up this map, forcing Republicans to play in places they quite frankly don't want to spend time and money in, but now they have to. So very good news for the Kamala Harris campaign, but there are warning signs here. They are in a dead, locked, heated race. This is not a winning race. It is a lock now. And so she needs to move this forward. And that's why this week on the economy is so critically important, because he still wins big, even in this Cook report survey release on the issue of the economy and immigration. So she's got to start to make movement there.
And what does the Trump campaign need to do, Brittany? You're looking at your lead, if you're Donald Trump, diminishing. How does he get his own momentum back? Is it through press conferences, understanding he's going to do another one tomorrow after Mar-a-Lago last week, or does he need to start hitting the swing state trail to the extent that Harris and Walz have?
Oh, he needs to mount an aggressive swing state trial campaign right now. I don't think the press conferences are ever too helpful. I mean, even when the thing he did with Elon the other day, when we're talking about, you're great at firing people. I mean, we have a strong labor market right now, but it's also one of the toughest times to find a job for people who are unemployed. So I think that was definitely out of touch messaging. When you get him for an extended period of time, that's when he seems to go off script. And I think that if he is able to stick to teleprompter, stick to a talking point, and then go to those swing states, particularly the ones right now that Harris is only up a couple points, I think that's going to make a world of a difference, especially if we look at a month ago when Biden was still in the race. Trump was up in all of those swing states, basically. He was up 5 and Biden was up 2. And so now that sort of flipped. And I think in order to get back on track, he needs to really hit those states.
Well, it's interesting. As we've learned today, Kamala Harris and Tim Walz are going to be going to one of those states, Milwaukee, Wisconsin, Jeannie. They're going to actually be using the same hall that Donald Trump held his convention in a couple of weeks ago, as Democrats are preparing for Kamala Harris's arrival in Chicago. It looks like this is going to happen on Tuesday, the second day of the Democratic National Convention. Is this time well spent when all the delegates are in the hall?
Absolutely. They need to spend as much time in these states as they can, particularly Wisconsin, Michigan, Pennsylvania, and the rest of the swing states. So it is good use of their time, taking it to the same venue where Donald Trump was, of course. And 3 weeks ago, the Republicans really felt like they had this in the bag, not so much today. But what they really need to be focused on is, number one, defining Kamala Harris before Donald Trump gets on message and does it, because trust me, he will. He's a very good campaigner. And number two, they need to define what this race is about. They cannot let this race be in a look at Joe Biden's economy or his record on the border, because if it's about that, she's going to have a tougher time. So that's where they need to work, and they need to work it in these swing states as they are. So, things look good, but, many people not paying attention until after this convention. So they've got a ways to go here.
Well, and so it raises the question of the ad buys. Once we are out of the convention and the media coverage that comes along with it, then we're going to be in more of the final sprint through Labor Day and beyond. We understand now that the Harris campaign is planning another $90 million in ad buys. Donald Trump's campaign, or at least a PAC affiliated, is going to be spending $100 million between the convention and Labor Day. How expensive is this going to get when all is said and done, Jeannie?
Oh, it's going to be very expensive. The most expensive in history. It has been modern history every 4 years. And the spending is going to, surpass anything we've seen both in the U.S. and abroad. That said, paid media, as important as it is, doesn't work if it's out of line with the earned media. And that's the problem Trump is having. His paid media is on message. His earned media is not. You've got to get those messages together. So the spending matters, but it's got to be joined with that earned media, because social media, critically important for the voters they are trying to reach. People don't unsee social media. So that's where Trump has a challenge getting back on message.
Brittany, there's a question about, to the extent Donald Trump will try to counter-program the DNC. There's also a lot of reporting that there will be tens of thousands of protesters next week in Chicago. This is something that's been looked at as a Democratic problem here since long before Joe Biden left the race. How can Republicans seize on that discord, use those optics against Democrats?
Yeah, I definitely think that there is an opportunity for counter-programming. I know that we talked about it also might be in his best interest to sort of sit this one out for a little bit and sort of get back on messaging. But absolutely, I can already envision a campaign ad about that. And look at all these people who are upset at Democrats who are ruining our cities and the crime is up, and use all of those typical talking points Republicans use when talking about Democrats. But another thing that I really want to point out here is that he's already sort of laying the groundwork of saying that this election is stolen. He said that Kamala Harris was part of, staging a coup, and this is unconstitutional, what happened to Joe Biden. And so we already kind of see him doing that as it is, and I can see that going into next week as well.
All right, Brittany Martinez and Jeannie Shanzano, our political panel on this Wednesday. Thank you both so much for joining us. We have much more still ahead here on Balance of Power, including Bharat Ramamurthy, formerly of this administration, on CPI. This is Bloomberg.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China, all of that is in our interests. And whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. Annual inflation has fallen to a 3-year low, the latest sign that the worst price spike in 4 decades is fading and clearing the way for the Fed to begin cutting rates. We check markets for you all day long here at Bloomberg. The S&P 500 is up 0.2%. The NASDAQ is down 0.2%, and the Dow is up 0.6%. The 10-year Treasury yield at 3.82% and the 2-year yield at 3.95%. What's going on with NASDAQ? Shares of Google parent Alphabet have fallen on the stock market today amid talk of an antitrust action. Shares of Alphabet right now down about 3%. Mars, whose brands include M&M, Snickers, and Skittles, buying food company Kellanova, a nearly $30 billion deal giving it access to brands like Cheez-It, Eggo, and Pop-Tarts. Kellanova houses brands like Pringles, Townhouse, and Rice Krispie Treats. It had 2023 net sales of more than $13 billion. Kellanova shares are 7.7% higher. Victoria's Secret has been struggling for years, in part because of competition like Rihanna's Savage X Fenty lingerie brand. So Victoria's Secret says it has now hired the top executive from Savage X to lead the retailer's turnaround. The company says Hillary Super will replace Martin Waters, who was terminated as CEO. Shares of Victoria's Secret now 14% higher. And that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
Amy, thanks, and thanks for being with us on the Wednesday edition of Balance of Power here on Bloomberg TV and radio. Kaylee, CPI Day, which has more to do with politics than ever as we get closer to Chicago and, of course, November, with a couple of important speeches happening this week on the campaign trail. We got a lot of speeches, Kaylee, but these are ones we actually listen to for details. Today it's Donald Trump. Yep. Friday it's Kamala Harris. Actual economic plans that both owe voters, so we can tell how much difference there is here and whether there is a plan to lower prices.
Yeah, and both of these speeches will be given from the swing state of North Carolina, which is interesting. They're just 2 days apart, of course. But the question really is going to be, how specific do they get on the policy that they want to pursue? And frankly, how much overlap might there be? As we know, on at least two issues, the child tax credit, which J.D. Vance is now out saying he is in favor of expanding, and taxing, or not taxing rather, tipped income.
Yes, right.
They agree. So where exactly, knowing that this administration Harris has been part of also has kept intact many of the tariffs from the Trump administration, where are the differences here?
You might get a little squinty-eyed, as Kaylee likes to say, trying to tell the difference here. Look, it's not just the difference between these campaigns, Kaylee. It's going to be the difference between Kamala Harris and Joe Biden.
Surely.
When she speaks on Friday. And now we're really splitting hairs. Potentially, we have a lot to hear from them.
And of course, before we hear from Harris on Friday, she will be sharing a stage with President Biden in Maryland tomorrow, where they will be talking about their administration's efforts to lower costs for the American people in the aftermath of today's inflation data. So it's a lot that we're looking forward to, and I'm pleased to say joining us to talk about it as we look ahead is Bharat Ramamurthy. He is Senior Advisor for Economic Strategy at the American Economic Liberties Project, also formerly Deputy Director of the National Economic Council at the White House. Bharat, always great to have you here on Bloomberg TV and radio. If we could first begin with the data today, obviously we heard some similar words from Joe Biden about it, that it does show progress, that prices are still too high. When you see, looking at the data, still stickiness in shelter costs, for example, are you confident that prices can get materially lower between now and November?
Yeah, look, I think that CPI is on a really good trajectory. If you look at over the last 3 months, headline CPI is up only 0.4%. That's obviously actually below the Fed's target for annual inflation. The housing number is obviously driving the vast majority of the inflation that we still have. Some of that is lagged data. Some of that is does not reflect disinflation that's in the pipeline. So I actually think that it's a sign of, should be a sign of optimism that housing is the overwhelming force here. But I think it's incumbent upon both candidates to explain what they plan to do on housing. I think on that front, the Biden administration and the Harris campaign has talked a lot about putting significant federal dollars into building new affordable housing supply, which is ultimately the medium-term and long-term solution to the housing cost problems that we have.
Of course, what Kamala Harris could really use at this point is lower interest rates, helping young people maybe get a foothold in this housing market as policies move forward to build more homes. Bharat, I wonder what you think about this idea. You've actually worked in the White House with both of the people we're talking about here, Joe Biden and Kamala Harris. The extent to which she needs to find her own message when she speaks to the economy on Friday, and maybe even find some sunlight between herself and Joe Biden to show a new approach at lowering prices. What could we hear on Friday?
I think ultimately what you're going to see is, to go to the point that you were making as we came into this segment, is to drive a contrast between the Harris economic agenda and the Trump economic agenda. Just to quibble with one thing you said on the child tax credit, it's great that J.D. Vance has nominally expressed some support for that. But if you look at when the bill that actually expanded the child tax credit was before the United States Senate, every single Republican senator voted against it. and denied us the ability to provide a little bit of tax relief to parents with children. So,
do we actually know if Donald Trump supports that? He's never said that.
I would suspect that he doesn't, to be totally honest, and that might be a bit of daylight between himself and his vice presidential nominee. And so, but I think what the Harris campaign is going to do, I suspect, is identify a few areas of emphasis where there's a really sharp contrast with the Trump economic agenda. Number one, on taxes. It's not just the child tax credit that we talked about. When it comes to fiscal responsibility and raising taxes on the very wealthy and large corporations, the Trump plan is clear. It's a $4.6 trillion tax cut that goes largely, primarily to households making well over $400,000 a year. The Harris economic agenda, which comes out of the Biden-Harris budget, is to raise some taxes on the very wealthy and large corporations, help bring down the deficit by $2 trillion over the next 10 years, and at the same time provide some middle-class tax relief, something that's absent from the Trump economic plan. And so whether it's on taxes, whether it's on a willingness to actually stand up to corporate actors who are squeezing American families, where the vice president has a track record of that as Attorney General of California, Trump as president bent over backwards to do the bidding of corporations. And so I think you'll see a few areas of sharp contrast, and I think ultimately a case made by the Harris campaign that they are being more responsive to the actual concerns of American voters.
So while you may see sharp contrast in some areas, Bharat, there are at least similarities in others, including this idea on the subject of taxes and the deficit about not taxing tipped income. The Committee for a Responsible Federal Budget estimates that not doing that would increase the deficit by $100 to $200 billion over 10 years. Is this actually good economic policy?
I think, again, you have to put all of this into the context of a broader fiscal plan, a broader budget. I think when you put that plan alongside a policy to raise substantially more tax revenue from the very wealthy and large corporations and to ultimately drive down the budget deficit, which is what the Harris plan, the Harris-Biden budget, it does, versus the Trump agenda, where this additional $100 or $200 billion in tax cuts comes on top of a $4.6 trillion tax cut that primarily goes to the wealthy. You can see how one is a reasonable set of policies that puts America on a better fiscal track, and one would massively blow out the deficit on top of, I should note, the $8 trillion of deficit increase that you saw in the first Trump term.
So on Friday, Kamala Harris gets on stage and says, look at the last 3 years of progress we've made. The Biden-Harris economic proposal moves forward if you elect me as president. Because if you look at the CPI today, 4 months straight of easing inflation, everybody expects rate cuts to start in September. This coincides pretty nicely with the November election, doesn't it?
Yeah, I've said before that I think you're hitting a patch of real economic momentum here with inflation clearly easing, where at this point I think the question for the Fed in September is not whether they will cut, but whether they cut by 25 basis points or 50 basis points. That's going to be an important moment where I think it will send a signal to the American public we've officially turned the page on inflation. And so there's a lot of momentum in the economy.
Can she say that, though? Can she say that? Because everyone's asking about drawing contrast with Joe Biden. What if she just gets up there and says, we won the war against inflation? Is that mission accomplished 2024?
I'm not sure if she's going to use that exact language, but I do think that she's going to be able to ride a lot of positive economic data into the fall and into November. If everything stays on the current trajectory, that's going to be another boost to a campaign that's already done very, very well over the last couple of weeks in building the case for it. And so I think what she has an opportunity to do is to try to explain to the American public how her economic agenda is going to be responsive to the concerns that they are feeling in their lives today. Obviously, the cost of living is a big one, the cost of housing, the cost of childcare, the cost of higher education. But I also think part of it is who can create a calm, predictable atmosphere for businesses to thrive in. And what we saw during the first Trump term was chaos and uncertainty that I think really put a toll on the ability of businesses to conduct, to do their work on a daily basis. And with the Harris administration, I think you'll see a lot of regulatory predictability, a lot of of working with the business community, especially the small business community, to make sure that they have the tools that they need to grow.
As we consider her economic policy, it is also pointing out she's been hit too on the border, specifically an issue with which Republicans are charging that as borders are, she essentially, to summarize, really messed things up. Can we separate migration, immigration policy from economic policy now, though, as Donald Trump is accusing her of taking a turn toward his kind of policy, hardening some of her language when it comes to migration, knowing the impact that it has had on growth on the labor market? Could that kind of more rightward shift, or at least harsher shift when it comes to the border and migration, actually be something that takes an economic toll?
Look, I think the president and the vice president from the very beginning of the administration have been talking about the need for comprehensive immigration reform that involves more border security, more funding for border patrol agents and so on, but also changes on legal immigration and a way of addressing all the folks, the dreamers that have been here in the United States, providing them with a pathway to citizenship. I think that's the right balance of steps to address some of the labor issues that you talked about, while at the same time making sure that we have a strong border and can enforce the rules that we have about crossing the border. I think that the vice president, if you look at the actual data, the administration has done a good job of addressing migration across the border. We saw that the steps that the president took a couple of months ago via executive order have led to a significant decrease in illegal crossings. But at the end of the day, this is an area where Congress needs to act. And we remember the Senate had a bipartisan proposal that the president and vice president supported, and that Donald Trump came in at the last second to urge Republicans to vote against it, in my view, because he would rather campaign on the issue than try to solve the problem.
Bharat, finally, before we let you go, and I do ask you this question knowing that you spent years working for Senator Elizabeth Warren, who certainly has thoughts about this industry, but Politico is reporting there is a Crypto for Harris event happening tonight in which a number of lawmakers are going to attend virtually, including Senate Majority Leader Chuck Schumer. I'm not sure you expect to hear the vice president talk about crypto policy specifically on Friday when she's outlining economic policy, but do you expect she'll be very different than Joe Biden on that front?
I honestly don't know the answer to that. It's not something that I've talked to her or her team about.
Would you encourage her to be?
I think generally speaking, we should have innovation in the United States, and that we should have regulatory policies that encourage responsible innovation. At the same time, my view on crypto has been that we need to address some of the scams that have been taking advantage of consumers and causing real financial harm. We also need to look at steps we can take to insulate the broader financial system from any issues that may arise in the crypto space. And we need to do something to address money laundering and other ways of using crypto to evade the rules that we have for the rest of the financial system. I think that there are ways of doing that while at the same time creating an atmosphere that allows innovation to proceed. Obviously, the devil's in the details on how you strike that balance, but I think ultimately that should be the goal.
Bharat, it's great to have you back. Bharat Ramamurti, now with the senior advisor, I should say, for economic strategy at the American Economic Liberties Project, formerly advising the Biden White House on the economy. Bharat Ramamurti, thank you. The CPI, of course, going to be followed, Kaylee, by a retail sales report.
Yeah.
That's going to have a lot of people wondering about the strength of the consumer, even as we keep our eyes on prices.
Yeah, as Bharat was indicating, he expects actually that the data will be improving as we get closer to the election. There are others, including the likes of JP Morgan and Goldman Sachs, who are actually raising their odds of a recession.
Correct.
Given that we are seeing some softening in the data as we are seeing inflation coming down. We always knew that there might be a trade-off when we consider the dual mandate. But it's not just inflation we have to contend with as we look forward to November. It's also whether or not the economy starts to struggle.
And so one of the most important political conversations this week will be the conference call after Walmart earnings this week, right? To really find out what the trade down is all about, what people are actually thinking. That anecdotal evidence goes a long way here in the world of polling and politics. Kaylee, I'll meet you at 5 o'clock, late edition of Balance of Power. That's coming up right here, of course. We'll meet you then on Bloomberg TV and radio.
covers earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, a very good afternoon. Live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Wednesday, August 14th. Carol Masser along with Tim Stenivek. Let's get to the setup for you on this Wednesday. And we've got stocks as measured by the S&P 500. Well, folks, they're headed toward their 5th consecutive day of gains. That's the longest winning streak in more than a month. And we did get that CPI report, a second inflation read this week.
Yeah, quote, does the job, you might say. We're going to have more with Michael McKee in just a minute. Also this hour, Carol, little quiz. What do you get when Pop-Tarts and Pringles meets Greenies and Ben's Original Rice? Maybe throw in some pet food there as well.
You get a really cool buffet.
Yeah, the biggest M&A deal of the year.
All right, we're going to talk about that one. It's been long in coming, folks, but finally we've got the terms and the details. Plus, Google's push to rival Apple and why you may not want to buy into all that hope around the iPhone 16. We're going to talk with our own Mark Gurman, check in with him.
Also, speaking of Google, is a breakup in the offing? Could that happen?
Yeah, that's a big one. And one more thing, a data point that takes us back to the days just after the pandemic. It's all coming up, Tim, in the next 60 minutes.
First up, though, a check on the day's trade and top business stories. Here's Amy Morris in for Charlie Pellet.
Hi, Tim. The World Health Organization has declared a fast-spreading Mpox outbreak in Africa a global health emergency. The agency seeking to contain the spread of the potentially deadly virus. This is a mutated strain of the virus. It causes unsightly, painful rashes and lesions. Again, the WHO declaring a global health emergency. Year-over-year inflation reached its lowest level in more than 3 years in July. The latest sign, the worst price spike in 4 decades, is fading, and it sets up the Fed for an interest rate cut in September. We check markets for you all day long here at Bloomberg. S&P 500 up 0.1%. NASDAQ now down 0.3%, and the Dow up 0.6%. The 10-year Treasury yield at 3.82%, and the 2-year yield at 3.95%. And you mentioned it, candy company Mars buying food company Kellanova, a deal worth nearly $30 billion. billion. Kellanova brands, that's stuff like Cheez-Its, Pop-Tarts, Eggo waffles. It had net sales of more than $13 billion last year. The company put the total value of the transaction at $35.9 billion. Shares of Kellanova now up 7.7%. And Victoria's Secret poaching the top executive from Rihanna's lingerie brand to help lead the retailer's turnaround. The company says Hillary Super will replace Martin Waters, who was terminated as CEO and resigned from the board. Shares of Victoria's Secret now 15% higher. And that's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovec.
We are all down into Pop-Tarts. I'm just going to say that.
I think Cheez-Its, too, is kind of what people are talking about today.
Food groups, right? Food staples.
Yeah, I guess
or
you could
something.
say that.
All right. So we've been waiting on this report, as has the Fed. I think it's safe to say underlying U.S. inflation eased for a fourth month on an annual basis in the month of July, keeping, Tim, the Fed on track to lower interest rates next month. I guess the question is, though, is it 25 basis points? Is it 50?
No, that's a good question to pose to Michael McKee, Bloomberg News International Economics and Policy Correspondent. He's here in the studio. Michael, okay, worth repeating some of these numbers for folks who haven't been tuning in all day. Core consumer CPI, core consumer price index, I should say, increased 3.2% in July from a year ago. It's still the slowest pace since early 2021. So what does it mean for Jay Powell and co? 25 basis points, kind of all but guaranteed?
Probably. There's another CPI report and another PCE inflation report, and we have another jobs report before the next Fed meeting. So in theory, something could go wrong. We could have the Boeing Starliner of, economic data or something like that.
Too
that will
soon?
keep the Feds, nobody got hurt, so put it that way.
Yeah, that's true.
But we could keep them from doing something. But right now, it does appear that they are on track to cut rates. I suspect next week we'll hear Jay Powell not be definitive about it, but basically say we're getting more confident and soon it will be appropriate to consider adjusting the policy rate, and try not to be specific because something else still could happen.
There's still some time, right? When we go through CPI, Mike, month versus year over year, headline versus core, I know we always talk about the importance of core. I mean, what is it that you care the most about? What does the Fed care the most about?
Well, the Fed doesn't care about a CPI in that sense. Their target is based on the PCE, which generally runs 4 to 5 basis points below what the CPI does. So, you can extrapolate from that. But basically, they have two things that they're watching. One is the core rate on both of these, because that's your better measure of inflation if you take out food and fuel. Obviously, drought has an effect on prices that nobody can do anything about, and the same thing with geopolitical tensions and oil prices. So to get a flavor of the underlying inflation rate, they look at the core. But they have made the headline rate of PCE their target. So when they say 2%, they're looking at the headline rate in terms of where they think inflation needs to go.
So we're not there yet.
So we're not there yet. We'll be probably 2.6, 2.5, maybe on the PCE at the end of the month. We should have a pretty good idea pretty soon because all the number crunchers are sticking in there.
White House economic advisor Bernstein says wages have outpaced prices for 17 months in a row.
We just keep getting closer, but the last mile, as they say, is very, very hard.
When you peel back the layers of today's CPI report, is there anything in there that surprises you, or was there anything in there that's indicative of a consumer that's getting a little more cautious about spending money?
Not so much on the consumer side, but we did see a surprise in that housing prices, shelter prices went up in terms of the rate of inflation to 0.4 from 0.3, and there was a lot of talk last month. Now we're down to 0.3, and it's finally happening. We expected housing prices to go down, and now they're doing it. And then in July they did not.
Not so much.
So, is this a reversal? Is it a blip? Do we have an ongoing housing problem? That's going to be an issue.
I mean, we've talked so much about housing, right? We know the issues, right? There's not a lot of supply out there. And then there's also been
And Bernstein says inflation is trending in the right direction.
Is it easily explained away by those two things?
Well, those are the primary reasons behind it. There's also, when you talk about apartment buildings, developers are very cyclical. When there's a lot of demand, there doesn't seem to be enough apartments, then they start building a lot of apartments, and then they build too many, and then we go through a down period. So that factors into it as well. But mortgage rates are the biggest things, and the fact that there are no houses available. But in terms of mortgage rates, 80% of people still have mortgages below 5%. So why are you going to buy a house and pay 7%? You know,
Right.
Today we went down to like 6.35 or something like that, but
we're
we're
gonna
still
talk
up.
about that later.
We're actually seeing some people refinance right now because rates have come down ever so slightly.
Yeah, and not a lot of people out there who would benefit from that. I mean, especially when you throw in fees. But if we get down into the 4s or something, below 5, you're going to start to see a lot of that activity.
Okay, speaking of the consumer, retail sales tomorrow. What are you looking for? What can we look for?
The analysts who look at this think that we're going to see kind of a rotation away from bigger ticket items, which might hurt some department stores, for example, and we might see more groceries, that sort of thing, staples go up. It wasn't back to school in July quite yet, so you're not going to probably see a lot of movement in apparel. But we'll look at some of the more indicative numbers like restaurants and bars. Are people still going out? That tells you something about how they feel about disposable income. And we'll see what they're doing on the internet. That's been very volatile lately. It's been a bit of a surprise that shopping there has been up and down, but you do know that July was Prime Days. So we may see a rise in that you can't.
It's not as exciting as it used to be.
It used to be, but maybe a rise that you
Prime
can't.
Days and not Prime Day.
Yeah.
Well, it's now because
Just
there's also the pre-Prime Days and the post-Prime Days.
Doesn't have the same oomph to it that
Just
it used
lower
to.
prices across the board, 365
buy
days,
stuff.
and then
You
we'll
like
keep.
Prime Days better than Singles Days? That's China.
I don't know. I just buy what I need, I guess. I don't know. Mike McKee, thank you so much. We'll watch for those retail sales. And speaking of the consumer, we'll also get Walmart earnings before the open tomorrow. All right, that is our look at the economy and what's to come when it comes to retail.
Okay, so from retail to, how about a little M&A news today? As the makers of Cheez-Its, Eggo, Pop-Tarts, Pringles, and Special K join the company
can't say these
behind
brands enough.
M&M's, Dove Bars, Ben's Original, Greenies, and Pedigree Original, not to mention some vet providers as well.
Oh, big time. My
Yeah.
vet is part of one of their,
So you can go to
groups.
the vet, get your Cheez-Its, get your M&Ms.
Yeah.
Get your dog, and
It's
get your dog
one-stop
fix.
shopping for the
Yeah.
family. Well, the actual deal that I got to say has been in the works. We've talked about this for a while. Ever since Kellogg, remember, said it would separate into Kellanova and WK Kellogg. That was more than 1 year ago. That separation was completed in early October of last year. So let's get to the specifics on the deal. Again, Mars agreeing to buy Kellanova for nearly $36 billion. It does include debt, bringing together two major food companies in the biggest deal of the year. We've been saying this all day, all long on Bloomberg. Let's get to it, what you need to know, and whether the deal maybe kicks off some others in this space. With us is Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst Jen Bartashis, with us from BI headquarters in Princeton, New Jersey. Also with us, Bloomberg News consumer reporter Dina Shanker. She also joins us on Zoom. Hey, Dina, walk us through the deal, why it does or doesn't make sense here.
So basically, Mars is a massive company. They are privately held. They have a number of divisions, as you guys just mentioned. And in their food department, they have snacking, but their snacking is very chocolate heavy. So buying up Kellanova gives it a little bit more balance for the salty snackers amongst us, because Kellanova owns Cheez-Its, Pringles, etc. So Kellanova used to be Kellogg, of course. They spun off the cereal side, the North American cereal side, which has been kind of an anchor for them, weighing them down. So now here they are. They're growing as they what they call reaching commercial. They're initiating all their commercial activity. They said in their last earnings release, meaning that they still have more room to grow, which a lot of the packaged food companies cannot say. They've been seeing volumes go down. So Mars, we can't say really how much they've been growing or not because they're private, but this gives them a lot more shelf space in the supermarket and a way to balance their offerings.
Hey, Jen, come on in here because you cover retail staples and packaged food over at Bloomberg Intelligence. I'm curious what we know about Mars, since it is a privately held company, in terms of revenue, in terms of its revenue mix. What can you tell us about what it's going to end up doing with the Kellanova brands?
Yeah, thank you for having me. So when we look at Mars, they have a little over $50 billion in revenue. Of 59% of that, so nearly 60%, is coming from pet. So that is the bulk of their portfolio. So if you strip that out, that the remaining $20 billion in revenue is really in that snacking category. And when you think about it, Kellanova has about $13 billion in snacking. So those two companies, like those two segments together, are much more comparable in size than people might assume when they hear about how big Mars is as a company. So when you bring those together, I think we're looking at potentially up to a little over $1 billion in synergies that they can realize through the procurement of raw ingredients, through manufacturing efficiencies, distribution gains, and things like that. So there really is a lot that is attractive about this deal for both companies, especially in that snacking segment.
Yeah, Jen, I was thinking about, in our write-through, and Dina, in your write-through, you note that the packaged food industry has been dealing with declining volume, slowing growth, weakening global consumers, and so they're looking for innovation. They're looking for new markets to bolster sales. So, Jen, does that check all the boxes by doing this deal?
It really does. For Mars, because they are very chocolate heavy, as Dina said, it helps mitigate some of the risk because there's kind of some long-term structural challenges with the cocoa market that Mars is certainly aware of. For Kellanova, they've been growing in places like Latin America. They have a distribution business in Africa and Nigeria. So they have good exposure to emerging markets, which are growth areas that I think both Mars and Kellanova can accelerate their sales in.
Dina, I found the timing of this really interesting, given that Kellanova is barely a standalone publicly traded company. I mean, it hasn't even been on its own for a year at this point.
Let it have a year to trade, kids,
or why not just carve it out before the spinoff? And a new publicly traded company and sell that part to Mars before going through all the public market rigmarole. What do we know about the timing, Dina?
I can't say what conversations they were having before they decided to split it up and when they were hoping to sell, or if this was a brand new idea. But the timing is good in that, they haven't completely filled out their commercial capabilities yet. They still have room to, Steve Cahillane, the CEO of Kellanova, told me that they're reaching their full commercial activity on Pringles, but not for all their brands. So it means that there's a lot of upside still for the company, which makes it a really good time to have another company swallow you up because they see more value than you've been able to realize yet yourself.
Jen, sounds like you want to come in on this in terms of the timing.
Yeah. What I would say is when we go back to when they were doing their original spinoff, part of Kellogg's original plan was to also sell off their Morningstar Farms brand. And ultimately, they retained it because they couldn't get the multiple that they thought that it deserved. So, part of the consideration certainly must have been about what kind of multiple could they have gotten at that time versus the multiple that they're getting now that they have a couple of quarters of strong growth in that streamlined snack business. So I think that that's part of the consideration as well.
Hey, Jen, in any of this, because I feel like we have talked pre-pandemic, post-pandemic, how important the pet business and everybody spending on pets and how big it's become. And, Mars, when you really thought about it, oh, candy, no, actually pet business. That was their big thing. Anything in this that says, as we know, nearly 60% of their sales, coming from that pet world, any sign that the pet business is slowing down?
Well, if you look at some of the comments that, for example, General Mills has made with regards to Blue Buffalo, there's certainly a slowdown in premium, and Mars does have exposure to premium. So it's not their entire pet portfolio, but it is part of their pet portfolio. In addition, we've seen slowing in snacks for pets and treats and that sort of thing.
One of mine is on a diet, to be quite fair. So yeah, there's no treats. Anyway, keep going.
Yeah, so we've seen a pullback in treating, especially because people aren't as home as much. People are back at work. People are on the move a lot more, and so that portion of sales has also slowed for these pet companies. So when you take that into consideration, growth in other parts of their overall portfolio is a very welcome thing.
Scout actually flings her bowl at us because she's like a little ticked off that we cut back on the food too.
Well, I hope she's not watching.
She's got to lose weight. She's a little older. We're a little worried about her.
Dina, I just want to end with you. As we mentioned, an absolutely massive deal here. Does it mean a return to M&A when it comes to the space?
I think we will see more M&A because we typically see M&A when companies are looking for growth and they have a lot of cash on their balance sheets. And right now that is a fair description of a lot of the packaged food companies.
Well, the bankers will be happy and the lawyers will be happy. We got to kind of do our
cheese a dog treat for Scout?
No, although they love cheese.
That's synergy.
Yeah, there's a few carrots I do toss to Scout. Keeping her in the greens. Guys, thank you so much. Important story. It's among our most read, and it's certainly been something we've been captivated with all day. Bloomberg Intelligence senior retail staples and packaged food analyst Jen Bartoshis and Bloomberg News consumer reporter Dina Shaker. Want to mention a story, though, crossing the Bloomberg terminal.
Yeah, Apple pushing ahead with a tabletop robot in search of new revenue. We're going to talk all about it with Mark Gurman coming up at 2:40 Wall Street time. The company is seeking more sources of revenue. It's moving forward with development of a pricey tabletop home device that combines an iPad-like display with a robotic limb.
Yeah, apparently the company now has a team of several hundred people working on the device, which uses a thin robotic arm to move around a large screen. This is creating people with knowledge of the matter. We're going to get actually the insight on this when Mark joins us because this story just crossed. So looking forward to that. Hey, coming up next, we're staying in the big tech world. A breakup of Alphabet's Google. Is it likely? What could it mean longer term for other players in the big tech space? And ultimately, could it lead to a breakup of the company? That story on the other side.
What's more frustrating, playing golf or being CEO of Goldman Sachs?
Oh, definitely playing golf. But one of the great things about golf is when you have a good day and you're hitting the ball and you're making pars, I mean, that's what brings you back.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
It's 2:21 on Wall Street. I'm Amy Morris. Some world news for you. The World Health Organization has declared the Mpox outbreaks in Congo and elsewhere in Africa a global emergency now. Cases are confirmed among children and adults in more than a dozen countries, and a new form of this virus is spreading. Few vaccine doses are available. Mpox causes nasty blisters and lesions and can give you a fever and swollen lymph nodes, muscle aches, and exhaustion. Underlying U.S. inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to lower interest rates next month. CPI increased 3.2% in July from a year ago, still the slowest pace since early 2021. And we check markets for you all day long at Bloomberg. The S&P 500 up 0.2%, NASDAQ down 0.2%, the Dow up 0.5%, and the 10-year Treasury yield at 3.82%, the 2-year yield at 3.95%. Mars, whose brands include M&M's, Snickers, and Skittles, is buying food company Kellanova in a nearly $30 billion deal, giving it access to brands like Cheez-Its, Eggos, and Pop-Tarts. Shares of Kellanova now 7.7% higher. And that's a Bloomberg Business Flash. Now we go back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
Amy Morris, thank you so much. You still have Skittles in my trick-or-treat bag.
Yeah. So, wait, did you say still?
Skittles. No, way back when.
Okay, because, it's almost October.
Getting ready for it, getting ready. Hey, let's get to a Bloomberg exclusive. We talked about this yesterday. It did break after the market closed yesterday about a bid to break up Alphabet's Google, one of the options being considered by the U.S. Justice Department after a landmark court ruling found that the company monopolized the online search market. This is according to people with knowledge of the deliberations.
The move would be Washington's first push to dismantle a company for illegal monopolization since unsuccessful efforts to break up Microsoft. That was 2 decades ago. So let's get to it. We got Bloomberg Intelligence senior antitrust litigation analyst in New York City, Jen Rhee, along with Bloomberg Television co-host of Bloomberg Technology, Ed Ludlow, in our San Francisco bureau. Jen, let's start with the legal case here and the potential implications of the outcome. Just explain from the legal side what's going on.
Well, there was a trial last September. The Department of Justice had sued Google over conduct that was maintaining its monopoly in search. And specifically what the DOJ was concerned about and where Google lost was that it was paying companies a lot of money, about $26 billion a year as of 2021, to place Google search as the default search option at all key sort of access search points. So behind Apple Safari or behind Mozilla's Firefox and on Android phones. And basically what this did is it just didn't provide an outlet for competitors in search, such as Bing and DuckDuckGo. And the judge said, look, first of all, this excluded your competitors because you're locking up all of these access points for search, and you're also depriving those competitors the data they need for scale to actually get to be better because they get that data via searches, and they're not getting a sufficient number of the searches.
So, Jen, harsh, fair, or likely in terms of a breakup?
In terms of a breakup, I think unlikely. I think expected that the Department of Justice would ask for that. As a matter of fact, they said so when they filed this lawsuit back in October of 2020. Right in their complaint, it says they may ask for structural relief. And I would expect them to. They won on liability pretty resoundingly, and why not go for that? I think it's very unlikely, though, in this case, that that is what will happen. I think there's some other options on the table for the judge that are a little bit more tailored and less drastic. He has shown himself to really be adhering to that opinion you mentioned at the start of this segment, the Microsoft case back in the 1990s, and that case actually cautioned against structural remedies like these under certain circumstances, and I think those certain circumstances apply here too.
Ed, can we talk just for a second about kind of the historical irony of
oh sure
of a potential breakup of Google? I mean, this is a company that I think it's fair to say many would argue emerged post antitrust efforts from the U.S. government against Microsoft, and maybe wouldn't even exist now had the U.S. government not gone after Microsoft in the 1990s.
You guys know, like, I'm a student of history and I always do the research, but I was single digits years old in June of 2000 when the United States looked at Microsoft. And, Jen makes her analytical point on the reality of a breakup of Google, but the point in the reporting, the detail of the reporting is there are actually many options of specific parts of Google being looked at by DOJ officials and attorneys, at least according to our sources. And it's worth trying to understand how Google's search business
Brent crude oil
works and the
futures
data
fall by
behind
more
it,
than
and how
$1
the
to
Android operating system for
$79.69 per
smartphones
barrel.
works. To kind of ask the question, how would this work in practice?
So how would it work in practice, Ed? I mean, how do you separate the Chrome browser from Google as a company?
Oh, Tim, I'm so glad that you asked. No, so well basically, Google, in simple terms, has what's called a web crawler, or let's call it a web scraper. And what that does, company websites allow Google to go in and use the crawler to get information. And as a result, those websites appear in searches. One of the options sources tell us is being considered is give third-party searches, just like Jen outlined, access to that data set, or divest the data set, which I don't quite understand. I guess maybe Jen can talk about if there's been past precedent for that, but you would incorporate an entity responsible for that data. On the Android side, it works quite simply. Google does deals with smartphone makers. They get Android operating systems on the smartphones, but in return, Google gets preferential placement of its key apps in key positions on that smartphone, on the OS. Good examples are the Gmail app or search. And it's those contracts that are being reviewed, a divestment, according to our sources, of Android. The easiest way of putting it is imagine if someone said to Apple, you make the iPhone, but you must divest iOS. This is the reporting. I don't know how that would work in practice.
Jen, come on in. Any thoughts?
Yeah, I'm thinking about this, and the thing about Android, and the reason DOJ might be thinking about that is because I said before, this judge seems to be really adhering to that Microsoft opinion from the year 2000. It was an appellate court within his circuit. And in that case, the court said it can be easier to divest an entity when it was once independent and it was acquired rather than developed internally. So Google developed Chrome internally, but it acquired Android. So the thought here by the DOJ may be we might have a judge that's more amenable to the idea of divesting Android rather than Chrome. I still don't think, though, that this judge is going to go that far. And the judge said these default agreements are illegal, and they're depriving the entities of data. So it seems to me to fix those two things, you prohibit those illegal agreements, and you force share the data. It seems to me those are the most straightforward fixes for what the judge found was wrong. And I should also say that what the Microsoft court said is you have to have what's called really significant causation to require a divestiture. And that means the judge has to be pretty convinced that but for Google's conduct, it would not have the position in the market it has today. And I don't know that this judge got there. This judge lauded Google's innovation and ingenuity in developing the best search engine that's out there. And he didn't say it was only because of these default agreements that Google has strong share in search and Bing and DuckDuckGo don't. He didn't make the determination that absent those agreements, Google would be much smaller. And I think that's where the decision he would have need to make in order to require a divestiture in this case.
So go ahead.
No, go ahead, please.
If a divestiture is not required, what ends up being some sort of remedy that the Justice Department demands or that the courts demand?
I think it has to be a variety of things. I think those default agreements that the judge deemed to be illegal have to be prohibited. It means the company cannot pay to have that default search access spot anymore. That's one thing. I think there may be some sharing of data. It may not be all data because there could be some privacy issues, but there's certainly search data that doesn't implicate privacy that Google could share with its competitors to help give them a leg up to try to compete in the future. And I also think that there could be something having to do with AI. Leah Nyland's excellent reporting mentioned that the DOJ doesn't want Google to use its dominance in search in order to get a leg up on AI on its competitors. So maybe something that has to do with AI there, and could repeat a decision like a choice thing.
That's what I wonder, Ed. Is this all about looking forward to AI, the next wave in terms of technology, and Google's or Alphabet's position in it?
Yeah, to go back to what we were talking about, I guess, web scraper or web crawler, the underlying focus on Alphabet is its work on AI, and that data, some of it is used in the training of the large language models that are powering Gemini. And that's what we're talking about here. You know, I find Jen is so smart, like it's such an honor to be on with Jen Reed. She was in San Francisco the other day, and we met each other in person, and it's just really cool. But I would look at the stock down, significantly in the session, but not draw a causal link directly necessarily. But the point there being that look at the brilliant equities team reporting. We are off 17% from the July 10th high on Google, and a big deliberation is AI. It all goes back to, will Google be able to or not continue with its rate of development and commercialization of AI? Because that's what the stock trading is predicated on.
One thing I think about, and I do remember the Microsoft case, which went on for about 5 years before all was said and done. Jen, how long does this lag, or how long does this go on? Because I do think how this can be an overhang on the stock. And just got about 30 seconds here.
This is going to take a long time. Google will appeal, and I think they'll seek to stay this remedies process pending that appeal. So you're tacking on at least another year to 2 years, and it may also appeal all the way to the Supreme Court. And I think it could get the remedy implementation stayed pending all of that.
Ed, back to what Jen said earlier about possible remedies when it comes to what Google can and can't do when it comes to search, what Apple can and can't do when it comes to search. What would this mean for consumers on the consumer end of things?
Well, I'm going to do my due diligence as a reporter and editor and say that Google will appeal anything that happens, and we don't know what's going to happen, but that is surely going to happen, the appeal. I think that this is the main point in the context of the handset market or smartphone market. It's a small player in a hardware perspective, but Android OS is so pervasive around the world. There are 2 billion monthly active users of the suite of Google apps. You can't just say to the world, the term Google, you're going to have to stop Googling, and I think that's the struggle here for investors and consumers alike. If the DOJ pursued on any
NYMEX diesel September futures settle at $2.36 a gallon. NYMEX gasoline September futures settle at $2.32 a gallon.
One last question to both of you.
NYMEX
Jen,
WTI crude September futures settle at $76.98 a barrel. That's down $1.37 or 1.75%. And NYMEX natural gas September futures settle at $2.21.
In position because they've made a better product, but once they're there are certain responsibilities that apply, and they're going to be watched carefully for what they do and how they may or may not exclude their competitors. And if they do something that excludes their competitors, they're going to have a very legitimate pro-competitive business justification for it, or they're going to have a lawsuit.
Ed, what are you hearing in Silicon Valley? I'm just curious about how much conversation is going on about this.
Just micro-focused on the presidential election, with particular interest in J.D. Vance because of the continuity of FTC policy. That's what's so interesting about him as an individual. And then how does the Harris-Waltz ticket position itself re-big tech and antitrust, knowing that J.D. Vance has that position? A lot of people talk to me about that, and I think we should probably discuss it more.
Can I just say...
Strange bedfellows, right?
It is strange bedfellows. I mean, we're living in really strange times, weird times, some say, but really exciting. And I got to tell you, it's so cool to have both of you who are super smart to be able to talk about this kind of stuff and really give a lot to our audience. So listen, thank you so much. Really appreciate it. Bloomberg Intelligence Senior Antitrust Litigation Analyst, of course, our Jen Reed, joining us here in New York City, and out there on the West Coast, watching all things tech, is our own Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV. Hey, coming up, we saw a story that crossed about a robot, tabletop, Apple.
Mark Gurman joining us in just a minute. This is Bloomberg.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you?
I had actually run tech banking and took Google Public, so I had a little sneak preview.
Morning from our world headquarters in New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma, is a very, very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. You know, basic technology adoption.
Nobody covers business like Bloomberg.
It's 2:40 on Wall Street. I'm Amy Morris. Apple looking for some new sources of revenue. It's moving forward with development of a pricey tabletop home device combining an iPad display with a robotic limb. Now, this device is envisioned as a smart home command center, video conferencing machine, and a remote-controlled home security tool. Shares of Apple are little changed on the upside. Year-over-year inflation reached its lowest level in more than 3 years in July, the latest sign that the worst price spike in 4 decades is fading and setting up the Fed for an interest rate cut next month. We check markets all day long at Bloomberg. S&P 500 up 0.3%, NASDAQ down 0.2%, and the Dow is up 0.6%. The 10-year Treasury yield at 3.82% and the 2-year at 3.96%. And shares of Google parent Alphabet fell on the stock market today amid talk of an antitrust action. Shares of Alphabet now down a little more than 3%. Mars, whose brands include M&M's, Snickers, and Skittles, buying food company Kellanova, a $30 billion deal, and it gives it access to brands like Cheez-Its, Eggos, and Pop-Tarts. Kellanova houses brands including Pringles, Townhouse, and Rice Krispie Treats. Shares of Kellanova now 7.7% higher. And some world news for you now. The World Health Organization declaring a fast-spreading Mpox outbreak in Africa a global health emergency. The agency is seeking to contain the spread of the potentially deadly virus. It is a mutated strain which causes unsightly, painful rashes and lesions. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right, so appreciate it. Amy Morris there in D.C. Well, as Amy just mentioned, Apple seeking new sources of revenue, moving forward with development of a pricey tabletop home device that combines an iPad-like display with a robotic limb. This story crossed the Bloomberg less than 30 minutes ago. So who wrote it? None other than Bloomberg News senior technology correspondent Mark Gurman, who is in our San Francisco bureau. So happy to have you here. A tabletop robot. What did you find out about it?
Well, this is, let's just take a step back here first. It's really been a while since Apple has done something, you know, amazing, something wholly new, right? I mean, obviously we know the history. We know about the Mac, the iPod, the iPhone, the iPad. Then there was the Apple Watch in 2015. And since then, they've sort of dabbled in new areas. The AirPods, they're a hit, right, for an earbud, but they're not a life changer, so to speak, for Apple's business. They've done the HomePod, which was like their home speaker. They still sell that. It's a commercial dud compared to their other products. Don't get me started on the Vision Pro.
You're on a roll.
I was using mine last night. This thing is absolutely mind-blowingly amazing, right? But at $4,000 all in, they're not going to sell many of them. And so they've basically run out of these product categories that is going to generate enough revenue to be a real new business, right? And then they canceled the big one that could have actually changed the company perhaps as much as the iPhone changed them, and that was the self-driving car. I think the cancellation in the self-driving cars and what led to that is going to go down as a business failure like no other, looking back, 10 years from now, unless they reboot that project. Anyways, they've landed on this home device. They're all in on robotics right now. Robotics is the next big thing at Apple. They're talking about humanoids. They're talking about mobile robots to go around your home. Now they're talking about this home device. It's a robotic neck connected to an iPad. It can swivel 360 degrees, bend, move up and down, move around on top of a table or a desk, video conferencing.
Okay.
But it's essentially your first Apple Intelligence device. It's a AI-ified iPad, a fully voice-controlled system that can move around on your table. It's going to be pretty niche, but it's also going to be pretty cool, like the Vision Pro.
It sounds, Mark, like you're describing the Facebook portal, which is no longer sold, and you do mention in your story. Is this meant for video conferencing in the sense of just being able to FaceTime with somebody while you're, doing the dishes, so you don't have to hold your phone and you can move around a little bit?
Well, it's going to do that, but I'm describing a Facebook portal or an Amazon Echo Show that's probably 3 or 4 times the price of those devices. But the robotic arm is going to be extraordinarily advanced, and it's going to use artificial intelligence and machine learning to understand your environment, understand who's talking. So let's say we're having this conversation over that device, and you actually have that device in front of you. Maybe I'm on my phone or my Mac, and I nod my head or move it side to side. The display on that device will actually move around and shift to match my head movements. Let's say Carol starts talking to me. That screen will understand that it's Carol talking and turn to face her. So I could see her instead of you, Tim, right? And so it's going to have these pretty cool features that use AI, that use contextual information, that use the camera, that use the robotic arm. And again, having a robotic arm to control and move around this device, that's really expensive and advanced technology, and probably would set the framework and the foundation for future robotics devices from Apple. They really see robotics as where the industry is moving, and really the hardware application of AI. But in order to get there, they really have to get their AI software and infrastructure up to snuff. And I think this is all going to time out together, right? I think we're about 3 years away from Apple's AI efforts really hitting their stride. And I think we're 3 years away from AI hardware at Apple, and I think it'll all mix and match together at the right time for them.
My family needs this as we shift around the phone when we're like, propped up on a table and having a conversation. It's like, where are you? Can you move it?
So Brent crude futures settle at $79.76 a barrel. That's down 93 cents or 1.15%.
Apple, when they're manufacturing a product or they're developing or designing a product, they come up with a price point that they want to hit, and they really think about that price point from the get-go. But it takes a lot of time to actually get down to that price, right? Just like when they start building a prototype of something, it could be the size of a table, but they needed to get it to the size of something that can sit on your wrist, right? So it's going to take time to get to the price point they want to achieve, which is around $1,000. So if they were to start producing this product today, it would probably cost 2 or 3 times that. But by the time they bring it to market, they want to get it down to about $1,000, which is interesting because they've not always been able to hit their price targets, right? Like, let me give you one example. The iPad, when they developed that device, they wanted to shoot for $500. They got it out at $500. When they developed the iPhone 10, they wanted to get it around $1,000. They got it out at $1,000. The Vision Pro, they wanted to get it out about $3,000, right? Ended up coming in at $3,500 at the base. So let's see what they do here. Quite frankly, I think $1,000 is too much for this device. But we're entering a time at Apple where they're not coming out with these mass consumer new hit products anymore. We're talking about a bevy of sort of these high-priced niche products, and I think you put them all together, you come out with enough devices, you're going to drive that revenue. But I'm not seeing anything that's effectively a game changer. There are a few other sort of, if you read through the end of the story, there are a few other things there that I think could be needle movers. I talk about 2 of them with detail. One is this gigantic iPad with about a 21-inch screen. That's a foldable iPad. I think that's going to be really cool. And then when that hits the market, when that hits the market, that's going to be the coolest thing Apple has done in a decade. That's going to be really expensive too. I would expect that to be between $2,000 and $3,000. So, you know what? Price aside, this is cool technology, and us tech fans should get excited about it. The other thing they're exploring, we don't know yet if this is actually going to come to market, are glasses. Not AR glasses that we've been talking about, but non-AR smart glasses that replicate many of the features of AirPods. These would be almost the same as the Amazon Echo frames that were updated a couple of years ago, but more importantly, similar to the Meta smart glasses they've done with Ray-Ban over the past few years. Meta has said over and over again, those are really popular. And even Mark Zuckerberg said on their earnings call recently, we simply can't make enough. And so, that's a popular category right now, and maybe something that Apple could to get into as well. Not sure what they would bring unique to the space, but certainly there's a lot of people that would pay a couple $100 for Apple branded glasses or sunglasses.
Hey, Mark, always appreciate you joining us. I know you're visiting San Francisco right now. Come hang out with us in New York. in some time and join us here in the studio, because it's always great to have you on the show. Mark Gurman, out with the exclusive. Check it out. It's on the Bloomberg terminal, also at Bloomberg.com, about the latest that Apple's working on when it comes to robotics and AI. Some bold-faced names in there, too, that everybody should have on their radar.
All I can say is I hope my husband wasn't listening, because I'm just going to see him like, oh, I got to buy this. Wait, I got to buy this. Thank God it's like 3 years in coming and some other stuff.
He's got some time. Got some time, right?
Mark Gurman is the best. All right, coming up, a sign of the changing times as mortgage refinancing surges by the most since the pandemic. One more thing right after this.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670-odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with. Right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Now, your company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Candy company Mars is buying food company Kellanova, a deal worth nearly $30 billion. Kellanova brands include Cheez-Its, Pop-Tarts, and Eggo. It had a net sales of more than $13 billion last year. Mars says it'll pay $83.50 per share in cash. The company put the total value of the transaction at $35.9 million. The deal is expected to close the first half of next year. Shares of Kellanova about 7.7% higher. Word that the Department of Justice is considering whether to break up Google is having an impact on Alphabet shares, down right now about 3.2% after a landmark court ruling that found Google monopolized the online search market. The government is reportedly considering whether to dismantle Google, force the company to share more data with its competitors, or put guardrails in place to prevent it from gaining an unfair advantage in AI products. Marriott International reduced its guidance for full-year earnings, citing softer domestic travel demand in China and North America. CEO Anthony Capuano spoke with Bloomberg Television.
Everybody's waiting for September, and if the rate cuts that are expected materialize, that'll be a boost for the consumer. The thing that gives me confidence beyond the next quarter or two is this this almost sociological shift we've seen with this appetite for travel. And I think that bodes really well for our business.
Marriott CEO Anthony Quano on Bloomberg Television. Victoria's Secret's poaching the top executive from Rihanna's lingerie brand to lead the retailer's turnaround. They say they'll hire Hillary Super to replace Martin Waters, who was terminated as CEO and resigned from the board. Shares of Victoria's Secret now 14% higher. And the World Health Organization has declared the Mpox outbreaks in Africa a global emergency. A new form of the virus is spreading. Those are company stories we're following this hour. I'm Amy Morris. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, this is Bloomberg Business Week. Carol Massar, Tim Stenivek joining us here in our studio. Sorry, I was looking at that Mpox story. You know what it is?
I knew that one would get you.
I know. Spread to at least 6 African countries. Amy Morse was just talking about it, affecting about 15,000 people, killing more than 500 in the DRC this year alone. The variant was first reported there less than 12 months ago. I just, you and I talk about, come on, I feel like, 4 years off the pandemic, and, it finally feels like some things are back to normal, but there's so many conversations about kind of what comes next potentially. If you talk to people in the medical community, you think about what comes next.
Well, the World Health Organization Director General last called Mpox a public health emergency of international concern. That was back in May of 2022, but that was when cases of a milder strain erupted globally. When the WHO lowered its alert a year later, cases in Africa continued to increase. Now there's this mutated strain of Mpox. It's spread, as you mentioned, to at least 6 African countries.
I feel like for a long time we're going to continue to measure things against the global pandemic, whether it's health issues and so on and so forth, but just every metric. And this brings us to our one more thing today, because U.S. mortgage refinancing surging by the most since 2020 on lower rates, something we talked a little bit about with Mike McKee at the top of the broadcast.
Yeah, the Mortgage Bankers Association refinancing index jumped 34.5% to a more than 2-year high of 889.3. Mortgage applications to purchase a home climbed 2.8% in the week that ended August 9th. It's the largest advance since the first week of June.
Yeah, and what we've seen is basically, if you look at the 30-year, the contract rate on a 30-year fixed mortgage, it eased 1 basis point to 6.54%. That's according to MBA data out today. It showed the rate on a 15-year fixed mortgage dropped 7 basis points to 5.96%. That's the lowest since May of last year. This is something we have talked so much about in terms of the housing market. Again, with Mike, like what's holding it back? Well, some of it has to do with the supply of homes out there, but also folks that have really low rates on their mortgage are less likely to move or do something because rates are so high.
Yeah, Mike mentioned that 80% of homeowners in the U.S. have mortgage rates under 5%. So in order to actually see refis really bounce higher, you're going to have to see a significant decline in mortgage rates to make it worthwhile, especially after fees, for people to go out and refi.
Well, and this is what happens. It's almost like a rate game, right? You have to think about, okay, what do you expect the Fed's going to ultimately do? And we were kind of kidding with Mike. Is it 25 basis points? Is it 50 come September? Which is, we expect some kind of move by the Fed. But if it's not going to be as much, if you're thinking about buying a home, you start to say, okay, maybe we're getting to the bottom, or it's going to be at this kind of level for a while. If I want to make a move, maybe I do it now, because maybe we don't think the Fed will ultimately be as aggressive. And only time will tell based on the economic statistics.
And interestingly enough, well, not so interesting for people who are looking for homes, in many markets, home prices have continued to go up even as mortgage rates have gone up over the last couple of years. That's typically not supposed to happen.
Yeah.
But we have such a structural deficiency of the number of homes that are needed in this country right now, that home prices are still really high.
Yeah, exactly. Hey, here's one other interesting statistic. At 48%, of U.S. markets, an income of at least $100,000 is required to afford a mortgage with a 10% down payment. That's according to the NAR. First quarter, that was the case in 40.7% of the nation's real estate market. So throwing some stats at you. Would you buy that Apple tabletop robot?
Sounds expensive right now, but I love the idea, especially for FaceTime, with grandma and grandpa.
I love that
Follow
idea.
the kids around and they can...
I'm constantly with my husband,
cool.
like the phone, like he puts it, he's like holding it and then it gets lower. And I'm like, I can see your forehead. Honey, if you want to talk to me, I need to see the face. That's just how it goes. All right, everybody, if you were watching on Bloomberg Television, the close is coming your way in just a moment. For those of you who we hope stay with us on Bloomberg Business Week, we got a lot coming up, Tim.
Yeah, we're going to talk about an update from the campaign trail as Kamala Harris is expected to release her economic agenda in just a couple of days.
Yeah, and a cool thing in the EV market. Don't go anywhere.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
A CPI report that likely checked a lot of boxes for the Fed and maybe a couple for investors too. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. You know what I'm going to say?
No.
Nothing burger.
Oh my gosh.
It was a nothing burger.
Does anything go in this nothing burger?
No, that's
avocado?
why it's a nothing burger.
Oh.
It's a boring nothing burger. That's what the CPI was. Confirmation bias. Volume super light. S&P, yes, we're around the highs of the session, but going nowhere fast as volatility continues to come down. It did not seem to be the mover that we were all psyched up to have it be, Romaine.
Yeah, but you know, look, I mean, it may have been a little bit of a nothing burger, but there was something significant here because it really was the first time in 3.5 years that we saw headline consumer inflation growing at less than 3%. We've come a long way from that 9% CPI report back in mid-2022, and we're now well below that 5.5% average over that same stretch. Now, while the Fed's fight to rein in inflation is still a long ways away from mission accomplished, David Kelly at JP Morgan is encouraged.
I think this is further confirmation that inflation is gradually whittling away. People are looking for, at this stage, they want, okay, if we get a negative surprise in inflation, then maybe we can price in some more Fed rate cuts. If we get something close to expectations, then we'll sort of sell the news. And I think that's what's probably going on in the bond market.
Well, for what it's worth, that bond market selling is still largely confined to the shorter end of the curve. We see that reflected in money market fund flows as well as in dollar funding spreads. Meanwhile, you have that overnight index swaps showing that traders are pairing expectations for a jumbo Fed cut next month, now lowering the odds for a 50-point reduction to just around 1/3. Now, still, the disinflation story, it does remain intact. It is a long-term story, and that might be part of the reason that you are seeing a pickup in consumer staple mergers. Remember, when food price inflation accelerates, so too does the revenue for packaged goods companies. But when that pricing power ebbs, well, you get announcements like what we got earlier this morning. This is where Snickers candy bar purveyor Mars agrees to buy Pop-Tart titan Kellanova. That's going to create a $63 billion behemoth that, in theory, should be able to resist any push from supermarkets for lower prices. That might not be music to the Fed's ears here, but something we are going to talk about a little bit later in the show.
Yeah, you know what my question is? Do we get chocolate Cheez-Its? Take a second. No, take a second. That could be really good. So here's a chart that kind of shows what Romaine was talking about in terms of Fed expectations, right? The green line, the blue line is what you want to see. That's what the market is expecting the Fed to do at the September meeting in terms of a cut. And we're now at a cut of about 32 basis points. So we are a far cry from that 50 that we saw maybe a couple weeks ago, but we're still over that 25 basis point cut. And throughout the whole year, we're still looking by December, 100 basis points of cut. So there still is this disconnect a little bit there in terms of what the market is expecting versus what the Fed might actually be saying, Romaine.
Absolutely. Those CPI numbers coming in today, not quite the positive surprise that we got on PPI, but for some investors enough to keep them in the game. Sarah House is Managing Director and Senior Economist over at Wells Fargo, joining us to kick us off to the close. On the CPI day, and when you look at these numbers here, I know the incremental changes were relatively minor here, but when we talk about that longer term story of a disinflationary trend, did this give you enough evidence, this report, along with all those that came before it, that that disinflationary trend is still intact?
Yeah, I think we did see enough evidence of that. I'd say if you want to quibble with the report a little bit, the details showed that I think the overall picture from the pandemic and the recovery in price trends is a little bit more drawn out, where you continue to see much more goods deflation, including in used cars, whereas you saw the uptick in shelter suggest that just maybe some of these pandemic effects are taking a little bit longer to unwind. But I think in general, with a lot of the year-over-year numbers continuing to inch down, including in services, it is consistent with this slow grind lower in inflation that we continue to expect through the remainder of the year.
What's driving that slow grind? I know there's been some debate, Sarah, about how much of this drop that we've seen from that, let's just take the headline number from 9% down to where we are today, right below 3%, that really wasn't all just about monetary policy, that there were a lot of other forces sort of at work here that got us to where we are today.
Right, so I think a lot of the improvement we've seen thus far has been more of the supply side driven. So particularly as we've seen supply chains improve and become much more functioning than what we were seeing at the height of the crisis. So if you look at the drop from inflation since its peak, the bulk of it has come from the goods sector, but we are starting to see the services side decelerate as well. And I think that does reflect in some ways the pass through of the tamer physical input cost pressures, and then also benefits from greater labor supply that's reduced wage growth. But I think as we get to the next leg of this disinflationary cycle, I think it is going to have to come down more to what's happening on the demand side as we've seen the supply side improve more slowly. And so I think that's going to be really important to watch, and particularly as we think about what's happening in the labor market, what's driving the next leg lower of inflation from here.
Right, and if it's demand, then that's even a bigger signal to the Fed that they got to cut. The market's still pricing in terms of WIRP, 100 basis points of cut so far this year, which means we're going to have one supersized cut. Is that legit?
Yeah, I think that's pretty reasonable, especially when you look at what's happening in the labor market, where we have seen, I think, pretty clear softening across a whole host of indicators. This isn't just about the July jobs report, but when you look at the labor market, by most indicators, we're back to where we were before the pandemic, if not even more of a mid-2010s position. And I think if the Fed wants to stop that downward momentum, that we do need to see some fairly fast dialing back of the Fed policy rate. And so we think that a 50 basis point cut in September is still pretty reasonable, but of course we'll get one more inflation print and one more jobs print before then. So the debate's far from settled.
The other debate is if they cut 50 basis points, that means something's really wrong, and that's going to freak out markets. Is that the other side of this coin?
I don't necessarily think so, and I think this is what will make Fed Chair Powell's Jackson Hole speech very important, is if he can lay out the reasons why that it is appropriate to dial back the level of restrictiveness, that they're not adding accommodation, that this is really a normalization of the policy stance. I don't think it has to be a message that things are going really wrong at the moment. It's actually that policy is working and that conditions have normalized enough where the policy rate can normalize as well.
Just curious, looking ahead, Sarah, obviously we get the big Fed meeting on September 17th and 18th, a few data points in between that. We also get Jackson Hole next week on the 23rd. Do you anticipate at all that Jay Powell will try to articulate what the Fed is going to do next in that Jackson Hole speech?
I don't think he'll try and articulate exactly what the Fed's going to do, but I think he will try and explain their reaction function and maybe how they're thinking about the overall stance of the current policy rate against the current economic data, where we have seen inflation slow, roughly 1.5 percentage points since the Fed last raised rates. We've also seen the unemployment rate move up pretty noticeably over the past year. And so I think it'll be more about explaining how the Fed is thinking about the current stance of monetary policy, and that there is room to remove some of the restrictiveness at this time, but not necessarily become accommodative.
All right, great stuff. Always smart. We'll let you get back to work. Sarah House, senior economist over at Wells Fargo, kicking us off to the close here on this Wednesday afternoon. Coming up, third time's a charm. Victoria's Secret getting its third CEO in the past 4 years. Investors, though, seem to be pleased with who they chose.
All right, plus we are counting you down to earnings after the bell with Cisco set to report. We're going to bring you the numbers right as they cross.
And we continue our focus on the health of the consumer, diving deeper into Walmart's results scheduled to drop tomorrow. A deeper dive into that and so much more. Stick with us. This is The Close on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs. Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
S&P goes nowhere fast today. Bank of America out with a note saying if you want to buy the rally, go with the equal weighted index, lower risk, bigger discount relative to the S&P, and better earnings picture than the Russell 2000. Joining us now for his take, Jason Trennert, Chairman and CEO of Strategas Research Partners. Jason, always a pleasure. If you want to play the rally, is that the right way? Equal weighted?
I think so. I think this is the time where you want to leg into more of the equal weight versus the market cap weighted. I think we're seeing that in the earnings, right? Because until recently, most of the earnings were really just coming from the handful of stocks that were going up. But one of the things that was nice about the second quarter earnings season, at least thus far, most of them report except for NVIDIA next week or next 2 weeks, is that the earnings situation has broadened out to include more companies. The comment that was made about the Russell 2000, I think, is also interesting because we found that more than 40% of the companies in the Russell 2000 have not had a profit in the last 12 months. It's largely a hangover of QE. There's been a lot of zombie companies. And so going into smaller market cap and large cap makes sense to me.
So from that perspective, what does that imply on the volatility front? Like, does volatility then pick back up, or does it continue to go lower?
Well, I think it's likely to stay higher, and it's largely because those top 10 stocks are still 37% of the S&P 500, right? Or 36%. It's just off the boil a bit. So to the extent to which they're unlikely to produce the types of earnings gains that they have in the past, it seems to me there's more risks there. You'll see more volatility in those stocks. Great companies. I wouldn't short them, if you put a gun to my head. But I also think that there's going to be more action in the more equally weighted lower cap stocks.
Well, when you look at some of those lower cap stocks, and I saw some data out by our analysts here at Bloomberg Intelligence saying that this is going to be the first quarter we've seen the Russell actually an aggregate post profits in I think like a year and a half or 2 years almost. But it gets to the question here about why it's taken this so long. And didn't that have a lot to do with concerns about economic conditions, or at least the fear that if the economic conditions didn't improve enough, those small cap companies, particularly those that were over leveraged, didn't really have a fighting chance?
Yeah, no, a lot of this, and a lot of it has to do with long-term interest rates, really, at the end of the day, right? So what we've found is that the market does a lot better. Anytime the 10-year Treasury is below 450, the market actually is in pretty good shape. Anytime you get above 450, which hasn't happened that often, but it happened last October, believe it or not, the S&P fell to 4,100 at that point. That's when people get more concerned. I'm of the view that, generally speaking, you want to be buying small cap stocks really at the end of a cycle or at the end of a recession, really going into a business cycle, a recovery. And I think it's hard to make that case right now. One of the other things, we talked about this a little bit before we got started, is one of the other things that's making the picture a little murkier is the fact that we're running massive budget deficits. We're running deficits of 7% of GDP at a time when you're pretty close to full employment, or 4% of, we've never run budget deficits when of this size when we either weren't at war or when the unemployment rate was below 7. So there is a little bit, I think, of economic growth, which is you have to wonder how sustainable it may be, and whether at a certain point long-term interest rates will short-circuit it.
That's sort of a kind of a pull forward in economic growth, and that has to be smoothed out at some point in theory, and at least in theory. That gets to the question, though, as if that is true, do you generally believe, though, that the long-term trajectory, and by long-term I'm talking really over the next, say, like 5 years, that interest rates are going to be lower than, I guess, where they were like towards the start of the year? Can you bet on that?
I'm not convinced of that. I'm really not.
Oh.
And that's largely because it really depends on whether the Fed does QE again. But in the absence of QE, it seems to
done with QE.
Right. Who knows? But it seems to me it's unlikely, and that's partly because of just the supply of Treasury bonds. And the other part, as you may know, is that we have, for a long time, been issuing short-dated debt. A third of our debt matures in the next year. Over 50% of it matures in the next 3 years. So the interest expense is exploding higher, which is making it very difficult to get a handle on the debt, on the deficit. And a lot of government spending is indexed to inflation itself. So I wouldn't really plant my feet. I'm not really bearish on bonds, but I think the trend is likely higher over the next 5 years.
Which raises the election risk. How do we deal with the election in the market?
Yeah, I wish I knew, because I think to be fair, I'm not. Whoever becomes president next is, in my opinion, is going to have some challenges on their hands, particularly if you want to put the country on a more sustainable fiscal path. And I would also say, as we were talking about, to really get a handle on inflation, theoretically, you should have some coordination between fiscal policy and monetary policy. And over the last couple of years, there's been no coordination whatsoever. The Fed's been tightened very aggressively, but we've been running these massive deficits. So it's going to be tricky, because it's hard to do this, generally speaking, without pain.
We only have 30 seconds left, but did that surprise you that we didn't see more coordination? Because when Janet Yellen came in as Treasury Secretary, there was a lot of talk that you were going to see that coordination given her previous job as Fed chair and her relationship with Jay Powell, but we never really saw that.
No, and I have to say, though, all presidents want control over monetary policy, but I think, unfortunately, in my opinion, we've set a precedent now where we're likely to have, if I'm a president, I'm going to hire a former Fed chair as my Secretary of Treasury, because they know where all the bodies are buried and they know how to manipulate the system. And I don't want to be critical of Secretary Yellen, but she's moved a lot of levers to keep long-term interest rates lower, without much regard, in my opinion, about the long-term fiscal health of the country.
Yeah, that's been a common criticism. Jason, I'm going to have to leave it there. Always a smart conversation.
Thank you.
Jason Treanert, he's the chairman and CEO over at Strategas Research Partners. All right, coming up next here on the program, we're going to take a closer look at Victoria's Secret and a reason why some investors are celebrating. The CEO of
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
All right, time now for our top calls. The big movers on the back of analyst recommendations. And we start off with Chipotle. Wedbush actually upgrading the stock today to outperform and lifting the price target to 58. The analyst saying that the company's still well positioned to gain market share. And he's unfazed by the departure of Brian Niccol, adding that the company remains in very good hands. The shares fractionally higher on the day. Next up, biotech company Illumina. TD Cowen upgrading, going to buy from hold after what it calls an impressive strategy update where management outlined ambitious plans for revenue and earnings growth over the next few years. Those shares moving higher by about 2%. And finally, let's take a look at Intuit. Morgan Stanley downgrading the shares all the way down to equal weight, with the firm saying Intuit's revenue has become more volatile since the introduction of Credit Karma and MailChimp into the mix. Also, the transition of TurboTax from DIY to assisted presents even more challenges. Those shares down about 2% on the day, and those are some of our top calls. We do want to stay in the sell side space and move on to one of the most talked about companies of the day, and that is Victoria's Secret. The shares having their best day since at least 2021 after the lingerie retailer poached the CEO of Rihanna's Savage X Fenty brand. Hillary Super is going to replace the current CEO starting on September 9th. Victoria's Secret has been off the rack in recent years thanks to falling demand and hefty competition, as well as some image issues of its own creation. Simeon Siegel joining us right now, Managing Director and Senior Analyst at BMO Capital Markets. He's got to outperform on Victoria's Secret. Third CEO, third leader in 4 years. Is this going to be the one that finally gets him over the hump?
It's always number 3, isn't it? Isn't that the move? Just ask Howard Schultz. No, I think that right now, I didn't say that. I think right now, you have a business that has such amazing brand awareness and such low profitability. Mm-hmm. And this is a business that arguably sells clothing. This is something that if you have a large amount of revenues and a low amount of profits, that's something that should be fixed. Mm-hmm. And so I think right now we're watching the reaction to the world recognizing that this has been an underperforming and undervalued asset. Yeah. And so the question of where we go from here, is it 1, 2, or 3? I don't know, right? But I think that the point here is, okay, now let's see what the next step is going to be.
What is the next step? What should the next step actually be? Because overseas sales haven't been terrible.
So you're asking an analyst what the next step is, which means I'm supposed to say they're going to juice up revenues and it's going to be great, and there's a very large business. I think they would, my own view, which is not going to be their view, but my view is I think that this business could see a material improvement in profits by doing less. I think if they sold less and charged more, they would make more money. How do I know that? Because they did it during COVID. This was a business, L Brands, which owned Victoria's Secret and Bath & Body Works at the time, was, I think, the 7th and 4th best stock in the S&P. Someone can check me. But they did really well during COVID. Yeah. Revenues went down, EBIT dollars went up. Yeah. Because for the first time in a while, they realized they could do more with less.
Talk a little bit about Hillary Super. Not a lot of people seem to know a whole lot about her, but I think Rihanna's Savage X Fenty certainly has a lot of brand awareness. I have no idea what their financials are, but I even remember during the pandemic watching a fashion show that they had aired on like one of the streaming channels, which was like the first time I would ever do that here. So they certainly have some cachet, and I assume that she's going to bring that to Victoria's Secret, which, as I'm sure you know, 10, 20, 30 years ago, I mean, Victoria's Secret had all the cachet.
Just to be very fair to Victoria's Secret, they had $6 billion in revenue last year. That's a lot of cachet. I think we do have to internalize and give credit to the fact that the only thing that tells me how big a brand is its revenues. Gross margin tells me how valuable a brand is. It tells me how much people like it. What does it cost them to sell their goods? That's very low. They have gross margins around 36. That is way too low, but the revenues are very large.
But sorry, I just cut you off. But
please.
Do they need to focus a little bit more on the marketing aspect? Because at the end of the day, they're still selling the same stuff they were selling 10, 20 years ago. What happened in between? It seems like people just decided that there were other brands that they thought, I guess, were just better for whatever reason.
So first of all, I love when people cut me off, and especially with this kind of a point. They are still selling the same things, and they're selling the same amount. They're actually potentially selling more in certain instances because the price point has come down a lot. Okay. So if you look at this revenue, and it's a point that it's subtle, but it's important. When a company like Abercrombie & Fitch fell for the same reasons, being accused of being overtly sexual, being exclusive, all of these things that we went after, the revenues came down. When Victoria's Secret did, the margins came down. And so people are still buying the products. They just believe the brand is worth less than it is.
Gotcha.
Is Victoria's Secret doing better overseas, though, than the U.S.? Like, is this a uniquely
I don't think
U.S. issue? No.
I think in general, the brand, to your point about marketing, there's a few ways to elevate a brand. One is price points, another obviously is marketing, and so I assume Hillary will be able to bring that. Brings a very strong merchant element, also came from Anthropologie at Urban Outfitters, which is a much larger business. So I think being able to bring that merchandising side, but I do think my team has done a lot of work historically on where brands peak. I mean, think about it. Brands, for lack of a better word, when they get big, lose the cool factor. That's just what we are talking about. These are tangible brands that teens or older are going to buy, and if they see too much, they're going to start believing it's worth less. Sometimes doing less can help you do more with profitability. And that's why what we look for, very large businesses with very low profits.
Interesting. Interesting take, Simeon. We appreciate it. Thank you very much. Thanks for coming in to Simeon Siegel over at BMO Capital Markets. And speaking of retail, you got Walmart reporting earnings before the bell tomorrow. So are they going to shed some light on how consumers are coping with inflation and rising costs? We're looking to remain at comp sales, if you back out gas, to come in about 3.4%.
Yeah, I'm all in on this earnings report. I always feel like you get a nice kind of read of the consumer, given obviously they sell everything, including groceries, and then of course the whole trade down in the economy. I guess so my question is too, and this kind of piggybacks off the Victoria's Secret conversation too, is like, do brands need that sort of buzz to sort of be big and to have that growth?
Yeah.
Yeah, I thought so too.
Yeah, you definitely need that.
Okay.
But Walmart doesn't count for that. Walmart's different.
They got buzz.
It's big box.
They got buzz.
All right. Coming up, we're going to break down Mars and Kellanova. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. I say it was nothing burger, but staying with food for a sec, chocolate Cheez-Its.
Okay.
I really do think this is going to be a thing. I want it to be a thing.
I hope not. I'm not much of a chocolate person, but I do like this meld up, because I assume you're alluding to this big deal.
I am alluding to the deal.
And everyone keeps talking about how Mars was very chocolate heavy, and that by buying some of these Kellanova brands, that sort of gives it, I guess, what I would call, Alex, the more delicious part of their portfolio.
Pet food?
No, I was referring to, Pop-Tarts and all that other Pringles and all that kind of stuff.
But I am referring to that markup.
The salty and the sweet.
Which is the whole chocolate Cheez-It thing.
Yeah.
But Kellanova stock is up a whopping like 32% from the day before the deal was rumored to come out. So it's definitely been a nice jump for the stock.
Yeah, and it's to point out, this was rumored pretty much from the day they got spun off. Everyone said this was basically an M&A play from the get-go.
$36 billion, one of the biggest deals of the year, biggest deal in this food space of the year. Want to get more on this with Dina Schenker. She covers food and consumer goods for Bloomberg News. Dina, like we said, we weren't surprised. This had been heavily rumored, but talk us through how this deal came about.
Well, we saw Kellogg, the cereal company, split into 2 separate companies. It went WK Kellogg, which was the North American cereal part, which is the part that has really struggled as people just eat less cereal, and every year it seems like less and less. And then the snack segment, which was doing really well, as the entire snack category was doing really well. They had originally planned to spin off a 3rd piece of, they called their Morningstar Farms brand, which is like veggie burgers, but they eventually kept that with Kellanova because they couldn't get the price that they were looking for that. So we have Kellanova. It has Pringles, Cheez-Its, all these growing brands, and they're doing well, and they're having good earnings. And then we find out that Mars wants to buy them, and that looks good for both companies. Mars could use the balance in terms of their snacking portfolio. I will just say, I heard your conversation before I came on, and pouring M&Ms into your bucket of popcorn at the movies is very popular, and maybe now we can start seeing buckets of Cheez-Its and
Thank you. Thank you for seeing me, Dina.
As an option. So it really provides a nice balance both for their brand portfolio and some might say for the palate.
I should point out, it's funny you bring that up because my wife does this at the movie theater. She gets the popcorn, she gets the Nestle Crunches and then mixes them in there. Blah, awful. But anyway, to each your own. I am curious though, when we start talking about this idea of why this got snatched up so fast, and if it hadn't been Mars, did you have any sense, Dina, that there would have been another potential buyer for this company here in the moment?
I think that right now we are seeing what a lot of people have predicted to be a time of a lot of M&A in the food industry. A lot of these companies came out of the pandemic with plenty of cash on their balance sheet, and right now, consumers are buying less at the supermarket. So growing as a packaged food company is even harder. That makes Kellanova, a growing snack company with room to grow more, a really good catch. And so, yeah, probably there would have been other buyers if Mars hadn't been the one to step up and offer such a nice price.
All right, Dana Schenker there. Of course, a closer look here at the big news of the day, the big M&A news, and that is Mars paying $36 billion for Kellanova. We continue that conversation right now with Erin Lash, Director of Consumer Equity Research over at Morningstar. She has a hold rating on Kellanova shares. I do want to start off as to whether you think, Erin, this actually makes financial sense for Mars at $36 billion.
The price that they're paying for Kellanova is quite attractive. We expected that they would pay about 15 to 16 times EBITDA. It came in slightly above that. So this does look like an attractive price. Pre-deal, we were sitting at a fair value estimate, what we think Kellanova is worth, of about $75. So it's about an 11% premium to that price as well. So attractive price, not completely astronomical or unheard of. And given the attractiveness of the portfolio beyond snacking, Kellanova also possesses or derives, about 30% of their sales from faster growing emerging markets, which should enable both Mars and Kellanova to take advantage of more favorable demographic trends longer term by extending the reach of their products.
So Mars is going to be huge, and they're going to do a lot of stuff. Do you think we're going to see them sell off or sort of spin off certain areas of their portfolio that now doesn't really mix?
That's a definite possibility from where we sit. It was mentioned that Morningstar Farms in the initial split of the business last year had been targeted to be split. We think that that could ultimately come to fruition. Over the last several years, we've seen a number of packaged food firms look to slim down, increase their focus, and we think that that could come into play in this situation as well down the road.
Yeah, that's what I'm curious about, whether this bigger ends up really being better here, Erin. And I'm specifically with regards to the distribution. I know Mars already has a great sort of pipeline into whether it's to the wholesalers or into the retailers directly here. By adding these brands here, does that give them more leverage?
It would, as it relates to the reach that they have within the grocery store. There is not significant overlap in terms of the aisles that these two firms play in. So there is the ability to enhance their negotiating leverage potentially, to derive greater consumer insights across categories. And that's just on the home turf. As I mentioned, being able to do so on a broader scale would also be an advantage, and extending the distribution of their products into more global markets and more distribution channels abroad would also be another benefit.
Hey, Erin, how much of this do you think was also defense? We've made a lot of hay over Ozempic, and I feel like the conversation a year ago was how disruptive that's going to be for all the food players and drink players. How do you think this is feeding into the conversations over at Mars?
Yeah, I think that that's a very interesting point. Obviously, that has come up quite a bit more recently in terms of how food companies combat and protect themselves from evolving health and wellness trends across the space. We think that these firms, regardless of the deal or not, have the resources to be able to pivot and to be able to enhance the health profile of their products and evolve with consumer trends in time. But this definitely accelerates that and gives them, both firms, a play in categories where they didn't have exposure before. But from our vantage point, it is also defensive in terms of being able to buoy growth in a slowing environment.
All right, Erin, great stuff. Erin Lash over at Morningstar. A closer look here at the big deal of the day, Mars buying Kellanova for roughly about $36 billion as we continue to focus on food. And not a good day here for Brinker International. The shares having their worst day in at least 2 years. This after the parent company of Chili's issued a fiscal year profit forecast below estimates. Basically, the company, and I thought it was more interesting, not just their own metrics, but they're saying industry-wide, they're projecting a 4 to 5% decline on comp sales industry. industry-wide.
Yeah. Did you, there's a great new function that I hadn't heard of called ALTD Go, and it basically looks at all the data and credit card swipes and debit card swipes. Right. And if you take a look at it on a weekly basis, year on year, they're still growing, just that growth is slowing. And like, how do you then price that in? It's happening to all their competitors too. It's not necessarily unique to Brinker.
And you do wonder, I mean, we've been talking a lot about these meal deals we've seen at the fast food restaurants, KFC, McDonald's, et cetera here. Do we start to see those types of deals at the higher end? I mean, I guess you could call Chili's higher end, but slightly higher end restaurants as well?
I mean, Chili's did really well though, right?
Yeah.
They weren't terrible, but like Maggiano's and other areas of
I haven't even
Brinker.
seen a Maggiano's in years.
I haven't eaten that since college.
Yeah.
I mean, I didn't even know they're still around, but I don't know.
I haven't been in a Chili's in a while too. I do kind of miss those. They had this little salad thing a while back.
Salad thing? They have salad at Chili's?
It was actually really good. I mean, it wasn't a very healthy salad, but it was tasty. All right. Speaking of which, let's talk weight loss drugs. Eli Lilly trying to squash its weight loss competition by going straight to the doctors who prescribe it. It's our stock of the hour. It's up next, right here on The Close on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. Covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Let's get right to our stock of the hour. Eli Lilly, higher by about 2%. And a new report out there that the company is sending a slew of cease and desist letters to telehealth companies, wellness centers, medical spas, and clinics, demanding they stop promoting copycat weight loss drugs. Jess Menton joining us for more on this. This looks like the crackdown that we knew was eventually going to come.
It is, and you see the stock up more than 2% today. Also, the pharma group in the S&P 500 is also getting a boost on this too when you're looking at some of its peers. But we did get indications implications of this, because we've known very well there's a lot of shortages when it comes to those key components when you're talking about its diabetes drugs and its weight loss drugs, as far as what this means. But I feel like a lot of people may not have realized when it comes to situations like this, the FDA does allow in situations where there is a shortage that pharmacies like this can have copycat type drugs until those shortages are resolved. But right now, Eli Lilly's saying that when it comes to the ingredients that go into those types of drugs, that it's better at this point and more accessible, but the FDA still has it listed as shortage. So that's kind of the conundrum that some of these other pharmacies that were selling those are in right now.
And what I was reading too is that not only do you have to be able to meet demand, but you have to be able to stockpile it also. And until you do that, then the FDA allows these sort of like a copycat, for lack of a better word, a drug. So it's like, what's the leg to stand on then?
Yeah, and so that's the big thing to see where this sort of stands, because terzepatide is actually the ingredient that goes into those. Terzepatide is actually the ingredient that goes into like Zepbound, and then if you're thinking about Mounjaro as well. And so that's sort of the key component where they're trying to figure out. It seems as if like Eli Lilly's trying to say the shortage isn't there anymore, but that's what the FDA still has it listed there. But it's interesting because if you coming out the back, we actually just had the earnings results last week, as well as Novo Nordisk. Obviously, when you're thinking about Ozempic, and two very different stories when you're looking at those reports and the stock reactions to both of those.
Well, the other thing, though, too, I mean, just on this shortage idea, though, too, I mean, because we've talked a lot out of those earnings reports that these companies would be doing better if they had more supply. So it doesn't really seem like the issue is that other companies are stealing their lunch. It's just that they can't produce enough to satisfy the demand.
That is the thing. And then also in the earnings call for Eli Lilly, they talked about how if you're looking at the same year-over-year period for this next 6 months compared to a year ago, it's a 50% higher when you're looking at the demand for those particular types of drugs when you're talking about weight loss and diabetes. So that's also still more demand there. So how are they going to rectify that if there's potentially going to be more shortages if you still have strong demand?
All right, Jess, super appreciate it. Thank you so much. Jess Menden joining us from Bloomberg. It is kind of a head scratcher on that. I'm taking a look at markets. Yes, we were around the highs for the S&P, Romaine, but it's really financials that are outperforming because of Progressive at one point hitting a 52-week high today after earnings came in really solidly. So we're still getting that fundamental read through the market.
Yeah, and you saw the Allstate also rally here on the day with a lot of those insurers and financial companies also moving on the back of what continues to be that turmoil that we continue to see in the bond market. Right now, the yields are only slightly higher on the short end of the curve, but I thought it was interesting. We were speaking with Jason Trenner earlier, and his comment that he actually thinks yields are going to end up being higher over the next few years than where they are now, which, I don't know, seems to run against the grain a little bit.
Fiscal issuance, that's it. I mean, the demand can still be there, but if issuance is so high, then you're going to have those higher yields. Also, if you get growth scares, that's a different story as well. All right, we're going to count you down to the closing bells coming up next with Emily Rowland, Chief Investment Strategist at John Hancock Investment Management, as we take a look at the markets. Still holding up. They're looking at an S&P up by 0.3%. This is the close on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find...
So 1 minute remaining now for the market on close imbalance.
How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Morning from our world headquarters in New York. I'm Manus Credit.
So we're looking now to the market on close imbalance. S&P 500, 1.4 billion to the sell side. NASDAQ 100, 830 million to the buy side. Dow 30 stocks, 525 million to the buy side. Mag 7 stocks, 570 million to the buy side.
I'm of the view that generally speaking, you want to be buying small cap stocks really at the end of a cycle or at the end of a recession, really going into a business cycle, a recovery. And I think it's hard to make that case right now.
Jason Trennett there, the CEO over at Strategas Research Partners here. Interesting call here on the small cap space, and more importantly, he was really kind of much more focused on equal-weighted S&P here, and that's actually a better deal for investors here as they move closer to the closing bell.
And in some ways, it makes sense when you take a look at the price action today, right? The S&P is up, but the NASDAQ is underperforming, in part because of Google and Tesla. There may be some fundamental reasons for that, but nonetheless, tech kind of underperforming there. I appreciate that small caps are also up by 0.6 of 1%, but not a huge dramatic move from what we've seen in the past.
Yeah, 6th straight day of underperformance for the Russell versus the broad market. And it's really a lot worse than that when you go back over the past 20 sessions here. Of course, a lot of investors still looking ahead and still seeing some potentially green shoots out there, given the inflation reports that we got this week, and maybe just potentially some encouraging retail sales numbers tomorrow. Emily Rowland, she's the co-chief investment strategist at John Hancock Investment Management, and she joins us now to count us down to those closing bells. Emily, look at the economic conditions here. Is that a backdrop for further gains in the equity market?
Yeah, I mean, we've been in this environment where for a long time, bad news was good news because it was reviving hopes that the Fed would cut aggressively this year. And then we went to a bad news is bad news environment. We saw that weaker than expected ISM manufacturing number, initial claims jumping, clearly markets reacting to that growth scare that we saw. And then, well, lo and behold, the data came in a little bit better. Last week, we had ISM services surprise on the upside. We had initial claims coming in lower once again. So the market backdrop or the economic backdrop is really bumpy, really choppy right now. And that is classic late cycle behavior. Jason Trennett mentioned that earlier. So what we expect from here is, still an opportunity to own high quality stocks here, look for ones that are on sale, but start leaning into the income that's available in bonds because it's still really attractive, especially when we see these little backups in bond yields.
Well, when you say lean into the bonds, is that primarily short duration, Emily, or is there any appetite to extend that, maybe take a little bit of a chance on the long term?
Yeah, we've been legging into duration more, and I think the intermediate part of the curve right now is really the sweet spot for investors. Even if rates chop around from here and inflation is moving lower, but in a choppy pattern, you can get paid to wait. In fact, the income that's available in the aggregate bond index right now is approaching 5%. We would look to lock that in and really develop a return stream for years that can be really accretive to client portfolios. Yes, you're going to get paid also owning the short end right now, but we still think there's massive reinvestment risk there, which is, a year or so from now, as rates come down, you're not going to have that opportunity to benefit from the duration component.
So, Emily, to that point, if you take that template to the equity side, is it S&P? Is it equal weighted? Is it small? Is it large cap tech? Is it mid?
So we are overweight the quality factor. These are companies with great balance sheets, tons of cash. They've got a better ability to maintain profit margins. And just to expand on that a little bit, slowing inflation is great in a lot of ways. Of course, it's wonderful for the consumer. It's bringing down borrowing costs. But there is a dark side to it, which it means that revenue growth is slowing. So as the consumer slows, as there's cracks in the labor market, top line growth for companies is slowing as well. And that means they've now got to really defend their margins. So we think that companies that have a better ability to do that are going to fare better, great return on equity, lots of cash. The poster child for that, Alex, is mega cap tech. But we still have a little bit of a valuation problem there. I think it's pretty tough to argue that those stocks are not expensive. So we also want to be looking on the value side at areas like mid-cap value, which are trading at the steepest discount to large cap stocks since the late 1990s. We are underweight small caps. Like Jason mentioned, they tend to be lower quality. They have high levels of indebtedness, and they're going to be much better off in an early cycle environment. Too soon to go to small caps.
Too soon to go to small caps, Emily. How much risk, though, do you want to be taking on? Doesn't have to be in small caps, but in general, what's that risk feel?
Yeah, we would be trimming risk here. You're seeing, you guys have mentioned the Russell 2000 outperforming. We're seeing kind of growth at any price, unprofitable companies back into the spotlight here. We think the equity market, in terms of the intra-market leadership, is kind of getting it wrong here. We do think that slowing growth is slowing growth. It's not great news anymore, and bad news is ultimately going to be bad news. So that means, looking at more defensive parts of portfolios, maybe looking at things like utilities or infrastructure. We're going to learn more from retail sales tomorrow, but it feels like we're going from this, what do you want to buy versus what do you need to buy kind of trade-off happening right now. And certainly we saw that underneath the hood of the CPI report this morning. So looking at those more defensive areas, and then trimming kind of these bouts of risk-on behavior. They're being helped, frankly, by a weaker dollar that's helping international performance. We want to look to fade that as we head towards economic contraction.
Economic contraction. Emily, final question here. We spoke with Jason earlier. I think that the trajectory for interest rates might actually be higher than where they are today, at least over the next few years or so. Do you believe that's possible?
We think lower. And I think if you look at every market cycle that's happened in recent history, it's the same playbook every time. You see everything looking awesome, especially as inflation slowly coming down. Markets celebrate that. And then the music stops, frankly. Once you see high yield spreads widen, you see initial jobless claims picking up. And that's the environment where bond yields fall, and they fall pretty precipitously, which makes the math on high quality bonds look pretty awesome from here.
All right, Emily, going to have to leave it there. An awesome conversation with Emily Rowland, Co-Chief Investment Strategist over at John Hancock Investment Management, as we count you down to those closing bells. And Alex, I do just want to point out, we did get some headlines out of Austin Goolsbee, of course, the head of the Chicago Fed, a Bloomberg interview where he's basically saying that policy, in his words, are very restrictive right now, but the economy is not overheating, and that he would focus much more on employment if the job market continues to weaken.
As if we weren't clear that jobless claims are going to become more and more important. Just look at the price action.
And there was a great quote, I forgot who said it in one of the Bloomberg stories, said that basically now the Fed has moved from being dependent on the inflation data to now really just being dependent on labor market data.
Yeah, I'm also looking at earnings. We get Cisco after the bell. It feels like we're obviously looking for any more job cuts. Reuters had reported that story about a week ago. And also that traditional tech spending that has been diverted to AI. when does that recover? That core networking business, when does that sort of trough and start to pick up again?
Yeah, it's a good question here. And I do sort of wonder, like, what's the relevance of Cisco in that sort of AI story?
They're wondering that too.
Because a lot of people, particularly given just their role in sort of the advent of the internet, whether they can maybe have a footprint in this as well.
Yeah, and you look at the stock, and clearly investors are very worried about that too, despite any investments they may be making into AI startups.
All right, stick with us. We are moving closer to those closing bells. Full market coverage coming up right now, right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you to the closing bell. It's a global simulcast, starting now with Scarlet Fu joining us in the TV studio, Carol Masser and Tim Stenovic in the radio booth. Here on a Wednesday afternoon, Carol, where we're actually seeing stocks now get a bid into the close, things flipping into the green as we get closer.
I always think that's a positive, right? In those last few minutes of trading to see actually some buying into it. On a day or just right before, Tim, we're going to get some interesting data points.
Yeah, kind of a double dose of the consumer tomorrow morning with an update on retail sales. And then Walmart, because we are not done with earnings yet, Walmart's going to report so we get an understanding of how the consumer's what are they buying? Always some good insight coming from Walmart.
So that's the consumer economy. There were some ominous remarks about the industrial economy with China Baowu Steel, the biggest producer, warning of a severe industry crisis. I was just looking at the steel makers and the S&P indexes, down 1.2% as a group.
Yeah, and that's not a good macro read for sure. But also, guys, volume is terrible right now. So I have a hard time taking any sway in where we're going with the indices. I called it a nothing burger. I called the CPI nothing burger.
Why'd you call it a nothing burger? Because of volume? Because everyone's on vacation?
Yeah, but also it was just confirmation bias. That's how I was looking at the CPI.
But I guess taken in hand with what we saw 2 weeks ago at this point with the jobs numbers. I don't know. This one's pretty Fed friendly.
Are you saying the people that are buying into the close are kind of lame investors, that they really don't know what they're doing?
No, they're probably the systemic investors buying into the close.
Just checking.
All right. Well, we look at a day here, a mixed day in the bond market. The VIX remains lower once again, down around that 16 level. The dollar relatively unchanged, and Bitcoin taking a slight leg lower. We did see a bid come into some of the equities here at the closing bell, just enough to flip a couple of the indices from red to green. The Dow Jones Industrial Average higher by more than 200 points, or about 0.6%. The S&P 500, which has been holding in the green for most of the session, is going to finish higher as well, 21 points, or about 0.4%. The NASDAQ, which was in the red just a few minutes ago, looks like it's going to close in the green, though we can call it relatively unchanged, only up by about 5 points. But the Russell 2000, it's been in the red all day, and that is where it ends, down 0.5%.
Yeah, pretty small moves there. So let's go dig a little bit deeper into the S&P 500. What you're finding, guys, is almost an even split. 293 names in the S&P 500 gaining ground on this Wednesday. Scarlett, just about 202 to the downside, 8 unchanged.
Yeah, but the majority of the sectors in the S&P 500 are in the green. Financials leading the way, up 1.3%, by far the best performers, thanks to some strength in insurance companies. Energy stocks and tech gaining about 2/3 of 1%. On the flip side, Alphabet is dragging down communication services by 0.9%, and consumer discretionary and utilities also finishing in the red, but not by a whole lot.
All right, guys, gainers, individual gainers, something to eat, something to wear, and something to do. So we start with Kellanova, finishing the day just shy of an 8% gain. It is your number one gainer in the S&P 500 today. We all know the story, the merging of these two companies, essentially, or I should say an acquisition. Mars agreeing to buy Kellanova for nearly $36 billion, including debt. I know mergers don't happen. I got it. Bringing together two major food companies in the biggest deal of the year. Not a surprise, right? We probably knew something was going to happen when they announced that they were going to break in two last year. I'm talking about Kellogg's and Kellanova, and then said that they were going to spin it off. And so we finally get this deal. So this has been certainly percolating for some time. What, though, you guys have been talking about it with all of our Bloomberg team. It does sound like it brings some growth, though, and some growth brands into the Mars world, if you will. Victoria's Secret, 16.4% higher in today's session, rising the most intraday in 3 years. Company is poaching the top exec from Rihanna's lingerie brand to lead the retailer's turnaround. Stock still under pressure, though, in 2024. And we know this is a brand that's been struggling for years. We'll see whether or not they can bring some excitement back into it. And then Flutter Entertainment, up about 8% in today's session. It's a $36 billion market cap company. No, online mobile gaming company, operator of FanDuel, online sportsbook, jumping after it reported second quarter sales and profit that beat analyst expectations. So some big outperformers there, Tim.
Okay, you got the outperformers. I got the underperformers. Let's talk about Alphabet. GOOGL, we've been covering the story all day. Shares finishing the day down by 2.3%. As a result of that story that we reported, our Bloomberg News team late yesterday after the close, that a bid to break up Alphabet's Google is one of the options being considered by the Justice Department after that court ruling found that the company monopolized the online search market, according to people with knowledge of the deliberations. So what could actually happen here? Perhaps a divestiture of the Android operating system, maybe Google's web browser Chrome, or perhaps a possible sale of AdWords, or none of those things, and maybe a different settlement. We'll have to wait and see. Ed Ludlow joining us a little earlier on our program, reminding us that whatever they hear from the Justice Department or from regulators, certainly the company will appeal. Shares of Tencent, or ADRs I should note, fell as much as 3.6%. That's how they finished the day today. Pressures from a weaker Chinese economy. The segment for fintech in the second quarter recorded its slowest growth since 2022. Tencent's revenue was slightly below estimates, despite stronger growth across the high margin revenue streams of the company. And finally, taking a check of Starbucks today after yesterday's record 25% increase. Shares falling 2.1% today. Shares gave back a little bit of that gain yesterday. It was down as much as 4.6% earlier in the session. Keeping an eye on analyst reaction as they digest the Brian Niccol news. Starbucks was upgraded to a buy equivalent recommendation over at Deutsche Bank, Evercore ISI, and Stifel. Alex.
All right, getting to the bond market here. If I said a nothing burger for stocks, I got to mean a nothing burger for bonds as well. Yes, things moved, but the moves were very muted. You saw a little bit of selling in the front end. You got yields up on the 2-year by about 3 basis points. On the back end, a touch of buying, but really on the back end, like the 30-year, you had to go out there. The 10-year, nothing doing, guys, on the 10-year.
I love when you talk nothing burgers.
Thank you.
You're very welcome. All right, so one story that caught our attention, we've talked about kind of the rate reset, our moves that we've seen certainly over the last week or so. U.S. mortgage refinancing surging last week by the most since the early days of the pandemic. Borrowing costs, as we know, continuing to drift lower, and that is certainly moving the needle on this one, Tim.
Moving the needle ever so slightly, given that, rates are still significantly higher than they were a few years ago, and given the fact that so many Americans out there who do own homes right now own homes with a mortgage rate that is sub 5%. So significantly lower than what you'd actually get today if you were to refi or buy a new home.
Yeah, and we were talking about the idea that once you started to see those rates come down, you would see a lot of activity. And most people said the initial activity, Alex, was going to be in the refi and home equity space. Alex.
All right, Cisco out with earnings. The big headline here, they're cutting more jobs, and they see a pre-tax charge of up to $1 billion. We had reports that they were going to be cutting another 5% of the workforce. They are cutting more jobs. Let's take a look at their full year 2025 revenue. They now see that coming into $55 billion to $56.2 billion. I do have to say that they upgraded it the last quarter, and they seem to have upgraded it again for this quarter. So, and they're maintaining their quarterly dividends. Scarlett, again, sort of the traditional tech, that hardware tech, continuing to try to transform.
Yeah, in terms of the quarter that ended, we should mention that adjusted EPS did come in higher than anticipated by 2 cents. Revenue was also better than anticipated, $13.64 billion, and adjusted gross margin, 67.9%, so almost at that 68% mark. Analysts were looking for 67.1%.
Okay, looking at what Chuck Robbins is saying, looking at what Scott Herren, the CFO of Cisco, is saying in the press release, quote, as we look to build on our performance, we remain laser focused on growth and consistent execution as we invest to win in AI, cloud, and cybersecurity while maintaining capital returns. That's coming from Scott Herren, the CFO of Cisco.
Kind of one of these legacy tech companies, right, that have been around for a long time, trying to address a market that has been changing. I mean, they've been working on this for some time. This is a stock that's been under pressure this year, off of about 10% year to date. But we are seeing investors like what they got here. And so you've got the stock in the aftermarket, guys, up about 5.1% here. But, that's a lot of jobs. That's really some changes there at that company.
Yeah, it's interesting, too, the commentary, though, about sort of how they fit into the AI space and the idea of sort of helping to protect their customers. And this has been the big thing I think a lot of investors wanted was, can they articulate a strategy of how they fit into all this AI hype and whatever this AI future is going to be? I'm not sure this quite does that, but at least now they're putting something on paper.
Well, also, if you just take a look at some of the areas of growth, right? Like earnings wound up beating estimates. Their service revenue also beat estimates. So not all doom and gloom. And you wonder, is this going to be the trough?
Yeah, absolutely. Of course, guys, we are also trying to keep an eye on what's been going on in the world of politics. President Donald Trump, former President Donald Trump, is set to unveil an economic proposal here. He's holding a rally down in North Carolina that we've been told is going to focus here on some of his economic policy proposals if he is getting back into the White House. Let's take a listen in to what the former president has to say.
North Carolina, thank you very much. It's great to be back in this beautiful state with the proud, hardworking patriots who make our country run. You really do. You built our country. You make our country run. I want to thank a very good man, and he's in there fighting. He's fighting, and we know he's a fighter. The next governor of North Carolina, Mark Robinson. Thanks, Mark. Mrs. Robinson, thank you. They're a great, great couple. Thank you both. Thank you very much. Thank you both. Thank you very much. Well, this is a very frisky group, I have to say. And by the way, we have some very good polls coming out today, I just heard. Despite all of the fake publicity about this radical left person from San Francisco. How's San Francisco doing? Not like North Carolina. No, we have some very good polls coming out, so that's good. You know, considering the fact that what they do, what the fake news is able to do, and yet we're leading, and let them have their convention, and who knows how that's going to turn out. Joe Biden is a very angry man. You know that, right? Because they took it away from him. They usurped it. They took it away from him. Terrible, terrible. And I'm not sure that they picked the right guy in him, but he got 14 million votes. He got 14 million votes. He got no votes. And you look at what happens. That's not the way it's supposed to happen. They are a threat to democracy, right, as they say. They are a threat to democracy. But thanks as well to members of Congress, Chuck Edwards.
And that is former President Donald Trump speaking right now at a rally down in North Carolina. We are told that at some point he does plan to outline some of his economic proposals as he is out on the campaign trail. We haven't quite gotten to that yet. Again, he's just getting started here, thanking the folks in the crowd and getting everybody all fired up here. We're going to continue listening in on this. And of course, we will bring you any material news as soon as it happens. Romaine Bostic here alongside Scarlet Fu. This is the close coming off of what was another green day for the S&P and the NASDAQ. Stocks looking for some direction here, Scarlet, on a day where we did get a lot of economic data with that CPI data this morning, the PPI data yesterday, retail sales, and of course, weekly jobless claims numbers tomorrow. And that's the backdrop for some of these policy proposals that we might hear out of President Trump today and, of course, out of Kamala Harris, his opponent in the presidential race later this week.
Yeah, and certainly a lot of people are waiting for that. But in the meantime, they're looking ahead to those data points, which will confirm whether or not the Federal Reserve can move ahead with interest rate cuts next month. But we want to go back to some of the bigger picture policy prescriptions that these candidates have in mind. I want to come in now with Kelly Lines, who is in Washington. And of course, we'll be monitoring all these speeches from former President Trump and Vice President Kamala Harris. Kelly, what do we know in terms of what Trump is likely to propose? Because he's made comments along the way during campaigns about not taxing tips, for instance, when he addressed folks in Vegas.
Well, certainly, Scarlett, we may be able to draw a clue from the signage that is behind Donald Trump as he speaks this afternoon in Asheville, North Carolina. Not just a sign that says no tax on tips, but also a sign that says no tax on Social Security. This is something else that he has floated as he speaks in general terms about his tax policy. We're waiting to see if he gets specific in a speech today or in the days moving forward as to how exactly he plans to pay for it. Knowing the no tax on tips policy is also one that now has been adopted by the Democratic nominee, Kamala Harris. She called for it this past weekend as well. But the Committee for a Responsible Federal Budget has said that could add $100 to $200 billion to the federal deficit over the last next 10 years. And of course, the tax policy that Trump has said he would like to see, a continuation of the tax cuts during his first administration in 2017, could add trillions of dollars to the deficit as well. So it's the pay for question that we're waiting to see if we get an answer from Donald Trump on.
Yeah, and we're looking, of course, at the backdrop there, no tax on tips, and of course the logo there about Social Security potentially protecting it, which seems to run counter to some of the other proposals that have come out of the Republican Party overall. Do we have any sort of sense here, Kaylee, about some of his other economic proposals? I know he hasn't articulated them today, but he is a relatively known quantity, and we've kind of been watching him now for the last year and a half as he's sort of mounted this re-election campaign, if you will, here. What more can we expect on the economic front out of a second President Trump administration?
Well, Ramin, there has been a pattern here when he's asked about fighting inflation and bringing inflation down, given that he does blame the Biden administration and Kamala Harris by extension for the high inflation that the American people have experienced. Consistently, when he's asked that question, he answers deregulation or something to the effect of drill, baby, drill. This idea that if the U.S. could just produce more oil, you could deregulate the energy industry so that they're free to pump more and do what have you, that all of that would then therefore lead to lower prices overall. So the deregulation aspect is something that we expect to be hearing more about from Donald Trump, but he hasn't necessarily gotten specific about what exactly he would like to deregulate where, what specific policies he would like to put forward. Of course, when we think about economic policy as well, some of these populist ideas that both he and J.D. Vance have adopted, it's the question of tariffs. He has said before he would look at a 10% across the board tariffs globally, perhaps 60% on all goods coming from China, but a refining of that policy, if he really is talking about doing blanket policy like that. We haven't necessarily gotten an answer on that. He, of course, is trying to define Kamala Harris very much so in these early weeks of her campaign ahead of the DNC next week. But in doing so and focusing on Harris and with a lot of personal attacks as well, we've struggled to get really firm details on the kind of policy platform Donald Trump would put forward instead of her.
All right, got to leave it there. Kaylee Lyons, you can catch her at the top of the hour, the co-host of Balance of Power. And, of course, we are going to keep an eye on what the former president is saying at that rally. As soon as he says anything substantive about his economic or other policies, of course, we will break in and bring you that information immediately. We do want to turn back to the world of earnings. Shares of Cisco moving higher here in after hours trading, the biggest maker of computer networking and equipment, giving a bullish revenue forecast for the current period and announcing some cost cuts and job cuts that may help to shore up its income statement and balance sheet. Woo Jin Ho over at Bloomberg Intelligence joining us now. Woo Jin, what was your main take here on this earnings release here? I mean, it still seems to reflect a lot of the same problems, but the reaction by investors here is much more positive than in the past.
I think it's more of relief than anything else. If you're looking at the big concern heading into the print was there another downturn or sustained downturn for Cisco, especially given the rumors of the headcount cuts. And, if I look at the numbers really quickly at a glance, the networking business actually beat consensus expectations just slightly. So it just gives us more of a call of stability than anything else. And from there, we can start talking about recovery.
What struck out at me is the 14% gain in orders, which of course is some kind of indication of future revenue when orders had been flat in the third quarter. What changed here inside 3 months?
Yeah, so what we're starting to see is that some of the, the inventory glut that had happened on the customer end, they're starting to really work through that. And as you start working through that, customers have to start coming in and picking up some more capacity. We started to hear glimmers of that from other companies. Peers like Juniper start talk about improved order growth. Extreme Networks, it's a much smaller peer talking about order growth, so I wouldn't be surprised that Cisco is seeing that follow through as well.
All right, good stuff. Woo Jin Ho of Bloomberg Intelligence giving us the instant analysis here on Cisco's results. And Cisco, as you can see, moving higher in after-hours trading. We want to fold in the spate of tech earnings that we've gotten this earnings season along with the broader markets. And for that, we turn out to Mark Lehman, head of Citizens JMP Securities, who has been looking at everything alongside us. When it comes to tech earnings, I feel like we managed to get through big tech with a very mixed picture, right? Everyone just wanted proof that all that spending was paying off somehow. But if the bar was low, then companies were able to surprise to the upside. What's the mood heading into the next big tech earnings, which is NVIDIA?
I think the mood is certainly more optimistic than it was a week ago. And I think there was great differentiation between the Magnificent Seven, which I think is really important because there were some really stellar numbers and some stellar outlooks, and there were some that were muted. So I like that. I think a market that is more specific about companies as opposed to just saying they all trade the same way. Even just saying the Magnificent Seven versus the FANG stocks, which we don't say anymore, it tells that.
I think it became Famaga at some point.
I called it Mount Fang because I added Microsoft and Tesla, but that's a little different.
So when you look beyond the technology and you look at the rest of the companies that have reported earnings, how concerning are the warnings from companies that have exposure to the consumer and the way that consumers seem to be much more selective about their spending? They're not necessarily holding back, they're just restraining some of their spending compared to last year.
It's noticeable, and you see the haves versus the have-nots. And I think it's very telling the people who are pivoting and making sure that they have the right offerings for consumers. So you've seen that obviously with McDonald's. You've seen that obviously with other companies who are honing what they're doing. And it's been very glaring how well the companies that have pivoted and prepared for this are doing. And similarly, the companies that overspent and are still not over that kind of COVID high are paying for it right now. So those inventories that are being worked down and some of the pricing pressures that have to abate because, frankly, people are not willing to spend, like we saw up until yesterday, $10 every day for a latte. And you got to make sure the consumer's happy with that $10 latte.
That's the consumer side of the equation. What about corporate spending?
Listen, at Citizens, we have a big footprint. So as a trusted advisor for a lot of companies, we've heard a lot. I would say last week when things were really in a panic mode, there was no panic anywhere. We didn't really see that on our trading desks across equities, across fixed income, et cetera, which tells me a lot, which is that the consumer is definitely slowing down. The corporate America is ready for that. But this fear and panic that this is some global recession or some global diminution in demand, I just don't see it. We don't see it.
Do you think when we talk about, particularly when it comes to tech stocks, and I mean, you kind of still, I guess you could still say San Francisco is the seat of tech, right? Although some of that's moved a little south and a little east, but you're still kind of the center of it. And I am curious that when we talk about kind of the innovation machine, and I know everyone went gaga over AI because this was like the next big thing the tech was fun to finally give us, whether that materializes or not, still TBD. But are you encouraged here about what these companies are doing, how they're spending that money, and the ideas they're coming out with?
I am. I mean, some of that is, and we're going to find out not today or tomorrow, but in a few years if it is overhyped. But I don't think the results of that investment are overhyped. I think that the changes that are going to happen to our day-to-day work and our day-to-day engine here, R&D engine in this country, are going to be absolutely substantial. Whether those investments merited such a big investment at these lofty valuations, we're only going to learn in hindsight. But again, I think this innovation engine that's accelerating for both tech and lifestyle, we call that a horizontal, not a vertical, because that's what AI is.
Where are these companies right now? Because it's funny, we talk about the Mag 7, right? But we talk about this idea, there was a reason why everyone invested in the Mag 7, because if you wanted tech and you wanted reliable tech stocks, that was pretty much it. But there's all these companies that are private that I think a lot of people would love to get their hands on, and I guess you can to a certain extent if you have the right connections. But when do those companies come to the public market?
It's a great question. I would have expected, because the backlog in IPOs is there's a glut in the backlog. But what I've also seen is that the IPOs that have happened to go public, the Reddits of the world, the Oddities, et cetera, they've worked. The stocks have done extremely well. And I talk to portfolio managers every day, and they're wondering why are they not coming to the public markets. There is a disbelief that there is an audience, and I think some of the big investment banks proffer that notion. But when I talk to portfolio managers, they're willing to make earlier investments for things they believe in. So I don't expect the fourth quarter to see that robust turnaround. We have the election, we have this backdrop of interest rates, but the demand is there, and I expect 25 to be a much better demand environment.
Mark, really appreciate your joining us today. Mark Lehman is head of Citizens JMP Securities. And it is that time of the year when earnings season is largely over, and we get the 13F filings that shows us what the big investors are doing with their positions. And of course, it's a snapshot in time, Romain. It's not really a moving picture. So we don't know exactly what they're doing with it, but it does tell us that they've started to buy or started to sell some of their big holdings.
Yeah, we know exactly what they held at the end of the quarter here. So whether they've sold it or bought more, who knows here. But a couple interesting ones. Ulta is actually the biggest mover here in after hours trading, finding that Berkshire increasing its stake significantly in that and in Sirius XM, ticker SIRI, which I don't know, that one's kind of a contrarian one to me because I always thought this was a company that was kind of circling the drain. But anytime Berkshire invests in a company like that, you kind of have to poke your head up and say, they clearly see something that the rest of us don't.
Yeah, everyone is going to be taking a closer look at that. We'll continue to monitor these headlines here as we get more 13F filings. But for now, you're looking at gains in Ulta and SiriusXM. This is Bloomberg.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
It's time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Tay-Tay, Taylor Swift, responsible for driving a 30% bump in the Kansas City Chiefs fan base. That's according to the team's CEO. So she first showed up at Arrowhead Stadium for the Chiefs' second home game versus the Bears in September. Apparently, Romaine, she didn't want any special accommodations, and she preferred to walk through the stadium's front gates. The security team was like,
she's just a person of the people, woman of the people here.
But she sparked a frenzy.
I'm sure she did.
Everywhere.
I'm sure anywhere she walks through, she's going to spark a frenzy here. Yeah, this is great. Can I just scam myself and say this out loud? I'm kind of over them, this Travis and Taylor
Really?
thing. Yeah.
You don't see a love story coming
I
here?
don't. I kind of want them to break up.
Oh my God.
All right. Now that
Speaking of causing a frenzy.
Okay, now let me dodge the follow-up question from Scarlett there. And let's move on to our second person that we're keeping an eye on. His name's Dwight Scott. And now for a lot of people not on Wall Street, you might not have heard of him, but he was the man who built Blackstone's credit operation. It's a $330 billion behemoth. And we're now learning, based on an internal memo that Bloomberg reporters got, that he's retiring from the firm. It's not an overstatement to say that he is not just a pioneer, but really a titan in this space here. And now let the speculation begin as to what he's going to do next. I think he's just, let me just double check, he's only 61.
I know, so he's got room
on Wall Street, that leaves him a few more years to do something
Second
else.
act, third act, fourth act. Actually, this would be the second act, right? Because he came to Blackstone from GSO Capital Partners, which basically jump-started Blackstone's credit business. He's 61, you said Schwartzman is 77, so that's another 15 years for him to do something.
Yeah, there you go, and make even more money.
All right, well, keep an eye on that. He'll be another top 3 at another point. Third on the docket is Bob Jordan. You may also not have heard of him, but he is the CEO of Southwest Airlines. The carrier, by the way, standing by its man after activist investor Elliott Investment Management proposed overhauling Southwest board. That includes Jordan and also the chairman, Gary Kelly. We know that Elliott has criticized both of them for poor execution and stubborn unwillingness to evolve the company's strategy.
Of course, I was just taking a look. It should be pointed out, as we were talking about 13Fs, the latest 13F from Elliott Management is out. And of course, it confirms what we already knew, which is that they have been amassing the stake. In fact, that was their biggest new buy in the most recent quarter, Southwest Airlines. They've been a very activist investment shop over there.
But you know, Southwest has made a number of changes, or at least announced a number of changes, right? They're going to add red-eye flights. They're going to add this new premium class option, and they're getting rid of free seating. So they're going to add assigned seating.
I always see, when growing up in Chicago, Southwest was like the greatest thing because it was so simple. And no extra fees. And, everyone just sit where you want, blah, blah. Now they're just turning into just the cluster that is everyone else.
They're nickel and diming everyone just like everyone else.
All right. Scarlett, I got to get me a private jet. How do I get one of these things? All right, when we return, we're going to take a look back at the biggest blackout in North American history. Huge ramifications for the economy. That conversation coming up next here on The Close. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Let's look back in history. On this day back in 2003, New York City, the financial capital of the world, went dark. A 29-hour power outage that ranked as the biggest in North American history and second largest ever anywhere in the world. Now, the drama started shortly after 4 p.m. on August 14th when a 9-second event occurred on a small patch of the electric grid in Akron, Ohio. And now an alarm that was meant to alert utility operators failed to trigger, and that caused a single sagging power line in the Midwest to cascade into a multi-state, multi-nation, multi-billion-dollar catastrophe. All told, at least 61,000 megawatts of power, affecting at least 50 million customers, were lost across Ohio, Michigan, Pennsylvania, New York, Vermont, Massachusetts, Connecticut, and New Jersey, as well as in Ontario and Quebec, Canada. Here in New York, the power failure, it closed the nation's biggest transit system, forcing 5 million would-be subway passengers to fend for themselves on the mean streets of New York, streets where all 11,000 plus traffic signals ceased to work. Mobile phone service was disrupted as cellular towers lost power. General Motors, Ford, and Chrysler suspended work at 55 car factories across the region, and airlines canceled flights for hundreds of thousands of passengers worldwide as airport systems for bookings, securities, and traffic control went down. Now, the blackout also was the biggest test of Wall Street's resilience, the biggest test since September 11th. It was a test that Wall Street actually passed. U.S. stocks, believe it or not, were a little changed that day in what was one of the slowest trading days in history. And the New York Fed's payment systems and open market desks, well, they function normally, and that's a good sign. Nationwide, though, it was estimated that the blackout led to around $10 billion in direct costs and lost revenue for businesses and households alike. A blackout so big and disruptive that even U.S. President George W. Bush weighed in on the need to upgrade the electrical grid, a clarion call that 21 years later has not been fully heeded.
Yep, add that to the long to-do list. I kind of remember there was a baseball game that day and Derek Jeter talking about how it was actually kind of refreshing for them to play baseball without the power on because they were able to play without all the bells and whistles and all the sounds and, you know, the clap your hands and the T-shirt party patrol guys everywhere. It was the game went really quickly, if I recall correctly.
That sounds great for the players, but for the fans.
Yeah, well, he enjoyed it.
Yeah. Okay.
I might have my memory wrong here, but I seem to recall that. Anyway, let's move on to the economic data. And of course, the report of the day was CPI. It posted the smallest 3-month increase in core inflation since early 2021. So that keeps the Fed on track to cut rates, start cutting rates, that is, next month. Kathy Bostjancic, the chief economist at Nationwide Mutual, joins us now. Kathy, I talked with someone else earlier who said that the inflation genie is back in the bottle. Do you agree with that?
Hi, Scarlett. Happy to be with you. Well, I think largely that's the case. It was another very good inflation reading. We've had 3 in a row, and I would say even the one prior to that, maybe say 4 that were rather good. I think it gives the Fed enough confidence to start cutting rates in September. I'm not sure that it's enough to tip the scales towards 50 basis points. Probably they start conservative 25, but the one part of the report that I would say is like kind of the fly in the ointment was the housing inflation number, right? Shelter inflation was up 0.4. And the reason I say this, last month we all got very joyful that it was a low print and thought, okay, now this is finally turning, right? We've been anticipating this for well over a year that rental inflation was going to turn down. The fact that it reaccelerated in July, that's a little bit of a concern.
It's a little bit of a concern, but shelter inflation, I think auto insurance was also higher as well. Are these lagging indicators, meaning they're just reflecting things that, like, over time catches up and therefore, they're going to start declining as well? Or is there still more room to go in those 2 areas?
Great question. I think, the rental inflation, all of the data that we use to forecast that points to slowing, so deceleration in shelter inflation. It's just that it's still taking so long. It's been longer, the lags, than the model suggests. And it does raise this question, is something broken there or something different? On the motor vehicle insurance front, we did get another big increase in July. I think, over time that should moderate as well. I think that if you look at things like repair costs, which rose a lot after the pandemic, motor vehicle insurance, the level of that insurance is now caught up to rental repair costs. So that makes it, there's less pressure in that sector going forward. Doesn't mean you can't see some still sturdy increases, but I think the worst of that increase is behind us. But again, the rental, the shelter is really problematic because it's such a big share of inflation.
Well, that's what I'm curious about too, because there's a lot of people celebrate some of these numbers, these sort of, I guess, disinflation type of reports that we've been getting here, Kathy. Kind of lost in it is how much damage has actually been done so far. I know there's been a lot of anecdotal evidence of lower end consumers pulling back already, but should we be a little bit more focused on the damage that has already been done and how that affects the psyche for whether these consumers are going to continue spending no matter what the data says?
It's certainly it's taken a toll on consumers. Now, you know, previously there was big tailwinds. There was a lot of pandemic savings that consumers could tap into. Also, households were turning more to credit card usage. But low-income, younger users of credit are really increasingly maxed out, and we see delinquency rates rising for credit card payments and autos, and that's at a time when the unemployment rate's still really low. So that's a concern, and I think that does weigh on the consumer. And I think the fact that the price level, except for certain categories like used car prices, the price level is not going to go down. It's just that the inflation rate is moderating. So I think the consumer's feeling fatigue here, and I think the other thing I would say is that consumption is now more in line with income. So if the labor market continues to moderate, you know, so will consumer spending.
Mm-hmm. It was kind of interesting, too. I mean, there was a great quote that we had from Krishna Gua over at Evercore. He's quoted in the Bloomberg story that talked about, and I'm just going to read the quote exactly. He says, basically, it's now, this is a labor data first Fed, not an inflation data first Fed. Does that sound right to you?
It's more in balance. I understand where, you know, the point he's making. You know, prior to this, it was all about inflation, and employment took the back seat. I think they're now both in the front seat, but I wouldn't say that they've completely, you know, focus on employment. And the reason I say that, again, is that it's a shelter. It's sticky, and it's really hard to get service inflation down. The thing I worry about is the airfares that have been down the last 2 months in a very large way. Is that going to continue to offset the shelter costs? And the same thing with used car prices. There's going to be some limit there, and that's the concern that I have.
Kathy, really appreciate your joining us. Kathy Bostjancic is chief economist at Nationwide Mutual. And of course,
you know what would be a sign of things coming down?
What's that?
If they started letting me back into airport lounges again.
You're still steaming mad about that, aren't you?
I am.
Yeah, you can't get into airport lounges with a business class ticket anymore. We learned the hard way. You need to be flying international, or you need to have like the specialty credit card, or
be like the ultimate first class premier platinum customer or something.
Yeah.
You are a platinum customer somewhere, right?
No, not in the right places.
Or something, right?
Yeah.
Does that doesn't get you into an airport lounge?
If only.
Well, can you imagine if Costco got into the airport lounge
I would pay double the membership fee for that.
You would.
The Costco airport lounges would be massive. Just think about that.
That's right. Yeah.
Oh, we could reimagine
all
everything.
the paper towels you ever need.
Let's take a look at how markets closed on the day. Overall, an up day here, but it was kind of all over the place for a while here. And the NASDAQ really a laggard here when it comes to the big tech names, especially Alphabet, because of all the talk about how the DOJ might break apart Google.
Yeah, and it's kind of interesting, too, because we talk about it being somewhat lower volume. Obviously, we're in mid-August. A lot of people not at their desk. But there are a lot of people that have made a conscious decision just not to trade this market right now. They really do want to wait till the Fed actually gives us more clarity, a few more data points, and maybe even they're waiting longer than that because they're scared of the election.
And also NVIDIA to report, right?
Oh, yeah,
That's
NVIDIA
at the end of this month. So
absolutely.
Don't touch anything until that happens.
Yeah, absolutely.
This is the close on Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Walmart, it's set to report earnings before the bell tomorrow. The street looking for about 3.4% growth in comp sales, roughly about $169 billion in revenue and 65 cents on the bottom line adjusted. Corey Tarlow joining us right now.
Fitz Goolsby now speaking on Bloomberg News says, I'm growing more concerned about employment. So again, Fitz Goolsby says, I'm growing more concerned about employment.
3.5%. So Corey, you're actually above consensus estimates right now. What gives you that kind of confidence?
So the street's closer to 3, as you mentioned, and we're at about 4. And it's really driven and grounded in data. So all of our estimates that we do for a lot of our larger cap, value-focused, food-oriented retailers is very data-driven. And so we have, thankfully, a great data team at Jefferies that works very closely with all of our vendors and with us. And we've been able to triangulate really footsteps in the door at Walmart on a quarter-over-quarter basis.
And what are you seeing?
What we've seen is that the data's actually accelerated. And so
more people coming in.
More people, new customers coming into Walmart, existing customers shopping more. And that's what's driven really the upside to our estimates.
Are they spending more? Is there any sense that do we know that?
So
are the tickets larger, the individual receipts larger?
The tickets are about flattish. So pricing's been about flat overall. At Walmart, we saw pricing flat in the last quarter. You'll probably see it flat in this quarter as well.
Okay, and that's really interesting given that the macro data shows inflation is definitely slowing down. CPI and PPI confirm that. In November of 2023, Walmart used the word deflation on their earnings call, talking about prices coming down rather than just a slow increase. Do you think we're at that point where that's going to be a theme again?
Not quite. But there are certain areas within Walmart's business where they're actually seeing deflation. And
where's that?
Probably the most important area is in their private label business, which in the U.S. is actually in excess of $100 billion. And so that private label business is growing faster than the overall enterprise. And by the way, it's higher margin. And in an environment where you're seeing consumers trade down, where you're seeing consumers trying to stretch their dollar a little bit further, a great way to do that is to not necessarily buy the brands that they know and love, but maybe shift into a store brand that has the same quality of the branded products, but at a much cheaper price.
Is that only for Walmart, or does that apply to Sam's Club as well?
It applies to Sam's Club, it applies to Costco, and in fact, I actually just recently met with Walmart management, and one of the things that they mentioned was that their price gaps, if you compare the branded items that they offer to their private label products, is that you're actually seeing those price gaps be the widest they've ever been in company history.
Where's the competition right now? Like when we think of Walmart, I feel like a few years ago we used to kind of do a direct comparison with Target. I'm not sure that's as fair of a comparison. And if we are headed towards a softer economy, which many people think we are, I would think that that would maybe actually boost some of like the kind of dollar store competitors, although they're not really dollar stores anymore.
$5 stores.
Does that not apply?
Well, I think It's important to note as you think about dollar stores, if you just look at Walmart's midweek business as an example, because you highlighted dollar stores as a competitor, Walmart's midweek business for its pickup and delivery is up double digits. And so if you think about the efficacy and the utilization of a dollar store type model, it's about going to those stores when you need to go to them because they're convenient and that you can get what you need and get out very quickly. But Walmart's always done well on value, but now their convenience is getting better and better with buy online, pick up in store, buy online, ship to home, their Walmart Plus offering that they've rolled out and is continuing to grow double digits as well. So that convenience element has really elevated their competitive edge over certain competitors like the dollar stores, like a Target, et cetera.
As far as like kind of the long-term trajectory for this company, there was a lot of talk when we learned about the Vizio acquisition and sort of what the rationale behind it was. I know there was some speculation it was about ads, some of it was about data. What do you think it was about, and when do we start to see them talk about that a little bit more as to how it's going to be folded into the business?
So Walmart's advertising business is really core to driving more profitable, predictable growth ahead because the advertising revenues, they're around $3 billion today and they're growing double digits, but the margins are 60 to 70% or even higher. And so if you compare that to Amazon, for some perspective, Amazon's advertising revenues are $50 billion. So the opportunity for Walmart to scale this is absolutely massive, and that'll underpin a lot of profitable growth. Vizio fits into this such that Walmart can advertise online on their marketplace. They can advertise in stores, which Amazon really can't do to a great degree because they have Whole Foods, but they don't have much else. And then on TVs. So it gives Walmart an additional avenue to actually push their advertising revenue and advertising product through to consumers.
That is a lot to think about here, especially for a company whose revenues on a quarterly basis is $168 billion. Corey, thank you so much for joining us today. Corey Tarlow is Senior Vice President of Equity Research at Jefferies, and of course, Walmart will be reporting earnings tomorrow morning. Now, for those who thought supply chain disruptions were over, think again. Labor issues this fall could make things problematic for retailers like Walmart. Port workers along the East and Gulf Coasts are threatening to head to the picket line in October. The drama comes at a time of heightened turmoil in the shipping industry, driven by the ongoing crisis in the Red Sea and drought conditions at the Panama Canal. And timing-wise, a walkout could overlap with the election in November. Joining us now for more on this is Jess Dankert, Vice President for Supply Chain for the Retail Industry Leaders Association. Jess, thank you for joining us. Give us a better sense of what's at stake here for the retail industry. How much product moves through these ports, and what's usually in the shipping containers?
Yeah, thanks for having me. You know, this is a critical time for supply chains and critical for retailers. We're right in the middle of peak shipping season heading into, right now it's back to school, but ahead of that we have all of the fall holidays and then winter holidays as well. So this is the time when everything is moving. So while the contract expires at the end of September and a strike could happen on October 1st, right now is a time of great uncertainty, and uncertainty is kryptonite for supply chain. So those question marks are making retailers need to put contingency plans into place to make sure there aren't going to be any surprises come this fall.
Yeah, well said. Kryptonite for the industry. So you mentioned that the current contract expires at the end of September. Do we know how negotiations are going so far? What is the retail industry, what is its awareness on whether the two sides are even negotiating, whether any progress has been made?
Yeah, the negotiations aren't really going right now. They were called off in early June, about the day before they were supposed to restart. So that hasn't been promising. Right now, the two sides are pretty far apart on some key issues. There were statements over this past weekend kind of illustrating how far apart they remain. So what's really critically important is for those two parties to get back to the table and find some sort of resolution in time, well in advance of that expiration, and take that uncertainty out of the system.
Well, given that uncertainty, is it too late for folks that need their goods and need them some point in the future to sort of front run this, to basically try to pull a lot more of this into the country now before we get to October, or does that not really, that's not how it works?
That's what retailers have been doing, really, because the uncertainty is so risky for supply chains. retailers have been either pulling shipments forward, front-loading the season, which has affected kind of the picture or the outlook of peak season generally, moving a lot of those forward, and also diverting shipments to the West Coast instead of the East and Gulf Coast, so that we're not going to have any of those surprises. Retailers have really, especially over all the disruption of the pandemic, have developed a playbook to avoid any sort of disruption, ensure that those products are on the shelves, on the doorstep where consumers need them.
Yeah. Well, one reason I ask that too, and I'm just curious that when you're talking to the members of your organization and other folks in the industry here, is there any concern here about over-inventorying? We went through this before, of course, I don't know, was it 3.5, 4 years ago? And some companies, of course, overdid it, and then, of course, they ended up sitting on a lot of product that they couldn't move, or at least not move at the price that they thought they would be able to sell it for.
Yeah, and this is a different sort of situation. This sort of uncertainty and challenge isn't driven by a massive, striking consumer demand like we saw during the pandemic, that there was some potential overreaction to that resulted in a lot of overextended inventories. All of that's been kind of right-sized by now, and this is just the ordinary inventory that's been forecasted for the needs that we're seeing the strong consumer demand for heading into the fall and holiday season beyond.
Jess, how big of a topic of conversation is this among retail executives? How high is it on their list of worries that they really need to address right away?
It's something that everybody's watching. Everyone's keeping a really close eye on it, including the administration and the federal government. As you mentioned, the timing. Retailers are really watching it closely, but they're not sitting around waiting to see what the outcome is going to be. They've already put those contingency plans in place to make sure that merchandise is going to be where it needs to be. The retail industry and shopping is, those timelines are a bit unforgiving. Nobody needs Halloween costumes on November 1st. So they really need to make sure that things are where they need to be for consumers, where and when the consumers need them.
All right, Jess, great stuff. Really appreciate you taking time for us. Jess Dankert there.
Thank you.
She is the Vice President of Supply Chain over at the Retail Industry Leaders Association. When we come back, we're going to set you up for what to watch over the next 24 hours. This is Bloomberg.
Markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's been another busy day in financial markets. Tomorrow could be even busier. A lot going on. Here's what to watch over the next 24 hours. And we're going to start off, Scarlett, with earnings out of some big companies, too.
Yeah, Walmart, the world's biggest retailer. That'll be fascinating, especially since it's such a big read on consumer spending. By the way, this is a company that's going to book $168 billion in revenue for 3 months. Just, it's hard to get your head around that.
Yeah, you'll get a nice read on the consumer there. I'm interested in Deere as well. Of course, a read here, I guess, on the agricultural and farm economy. But I almost forgot about Alibaba. I mean, I have no idea what's going on in China right now because it seems like every headline is a bad one here. Is that going to give us some insights?
Maybe. We know that the Chinese government is not looking to stimulate the economy right now. Yeah. So Alibaba will definitely give us some kind of sense of how much Chinese consumers are pulling back on their spending.
Yeah, I'll be keeping an eye on that. A lot of that coming before the bell. Also coming before the bell, we get some economic data and also some big ones.
Yeah, retail sales is going to be the key one here. And of course, there was an unexpected drop last time because of the cyber attack at auto dealers. So you're going to wonder if that's going to be made up this time around.
I completely forgot about that. Yeah, I'm just so focused on like the people buying apparel and other things. I forgot about that
cars.
But this could be a pretty momentous one here as we kind of put together this economic picture of what's going on. Those weekly jobless claims numbers, which surprisingly ended up being one of the most tradable data points last week. I'm not sure that's going to get a repeat of that, but we'll keep an eye on that. And I know you love Fed Speak.
Yeah, Fed Speak. After all the big inflation data is coming out, we've got Muslim, we've got Harker, and by the way, not mentioned here, the drop of the season 4 premiere of Emily in Paris on Netflix.
All right, we'll have a full recap of Emily in Paris. Join us tomorrow. Balance of Power is up next.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport, it's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with, right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew.
Donald Trump talking about the economy at a rally in North Carolina, still ongoing, just days before Kamala Harris will do the same. It comes against a backdrop of cooling inflation with today's inline CPI data.
We'll get reaction from the White House with Jared Bernstein, chair of the Council of Economic Advisors, and from Douglas Holtz-Eakin, president of the American Action Forum.
Plus, we'll be joined by Evelyn Farkas of the McCain Institute as negotiators head to Doha for talks tomorrow on a ceasefire in Gaza without Hamas in attendance, and as Iran and its proxies keep Israel in suspense over a potential retaliatory attack. Welcome to Balance of Power on this CPI day, and noteworthy, Joe, that on a day in which we get cooler inflation data, we are hearing Donald Trump still in North Carolina talking about the economy just 2 days before we expect the vice president to outline her economic plan. Also in that swing state.
They both chose North Carolina. Interesting, he's still rolling here. And Kaylee, it's been not unlike his acceptance speech at the RNC. A little bit of teleprompter, a little bit of ad-libbing, and we carry on. It has not been all about the economy, but the former president, did make some promises, speaking moments ago in North Carolina. Let's listen.
From today and from the day I take the oath of office, we will rapidly drive prices down and make America affordable again.
Of course, the U.S. inflation data we saw today did show prices going down, easing for a fourth consecutive month in July, which keeps the Federal Reserve on track to lower interest rates in September. Joining us now for a reaction from the White House and the North Lawn of it is Jared Bernstein, chair of the Council of Economic Advisors. Welcome back to Bloomberg, Mr. Chairman. Always great to have you. When we look at the data today, on the surface, obviously looks good, pretty much in line. Then you get to the sticky part. Shelter costs contributed to 90% of the inflation we did see. This is something we've talked about a lot, Jared. How confident are you that some of that can unstick in the remaining months of this administration?
Well, first of all, nice to talk to both of you again, and it's great to see a CPI report with a 2 handle, 2.9% year over year, and of course, 0.2 for both headline and core over the month. And by the way, those are soft 2s, soft 0.2s, 0.15 on headline and 0.17 on core. So these days, everybody goes to the second decimal place, and that's a soft 0.2. In terms of shelter, yeah, it's stickier than I think we and many others would like. And the fact of the matter is that we have a housing shortage in this country that's been in the making for 10 years running. But 2 things to consider about that. One is that housing's contribution to the price index has been going down. It's been coming in, it's been contributing to the easing that I think has dominated much of this discussion today. Would we like it to come down faster and contribute more to that easing? Absolutely. And in fact, if we look at rents, we've seen them roll over in a way that many of us keep thinking would show up in the CPI. We saw more of that in June than we did in July. But directionally, it is moving in the right direction. And of course, the second point is we are taking really aggressive action to try to lower costs in the housing space. We had an important announcement on that earlier this week, and I'm happy to go through some of that. We also have a congressional agenda that we believe will add 2 million affordable units to the housing stock. That's a huge difference in terms of the affordable supply. So lots more work to do there, but we've already been rolling up our sleeves on that one.
Well, considering the good news 4 months straight here, Mr. Chairman, a reporter asked the president today, your boss, Joe Biden, about whether the U.S. had at last beat inflation. This is what he had to say in response.
I told you we're going to have a soft landing. We're going to have a soft landing. My policies are working. Start writing that way, okay?
Start writing it that way, he said. Jared, Donald Trump just told the crowd in Asheville that if Kamala Harris was capable of beating inflation, she would just do it right now since she already works at the White House. Considering what the president just said, how do you respond to that?
Well, the forecaster-in-chief was out in full effect today. I think what he was really doing there was citing the baseline forecast. I mean, if you listen to experts talking about inflation today in the econ Twitterverse or in the media, you heard a lot of sentiment that was very much that the trend is pretty embedded when it comes to disinflation. Obviously, there was a pause in that progress in Q1, but it looks like it's back and back with some strength. One of the numbers I like to cite this morning is Sure, 2.9, got that 2 handle on year-over-year CPI, but it's 2.5 on a 6-month annualized basis, and it's 0.4% on a 3-month annualized basis. What those more near-term annualized rate tells you is that not only are we moving in the right direction, but we have some momentum. And when the president was talking about a soft landing, I think, again, the baseline forecast is one for a transition to steady, stable growth, where the strong job market continues to support consumer spending. An interesting and important linchpin into that, by the way, is the fact that we now have 17 months in a row of year-over-year wages beating prices for middle wage workers. That's a really important part of what the president was referring to.
Well, the president, the forecaster-in-chief, obviously, Jared, it is your job to forecast as well. As we talk about this notion of a soft landing, given after the most recent jobs report and the uptick we saw in the unemployment rate, the triggering of the so-called SOM rule, there was a lot of talk about a potential growth scare. Are you as comfortable looking at the labor market with saying that soft landing phrasing out loud as you were maybe a couple months ago?
Well, I think the thing about the labor market is to pay a lot of attention to a cooler than expected report that we saw for July, but not to over-torque or over-index on that report. If you look at payroll gains over the past 3 months, they average 170,000. Okay, that's a good clip. If you look at wage growth, July, 3.6% nominal, 3.8% nominal for middle wage workers, and we've been talking about a 2.9% inflation rate. So wages beating prices. We have, as I often say when we talk about this, we have a 70% consumer spending economy. You've got real wages growing, you've got inflation easing, you have the gas price down about 35%, according to this morning's report, 2.2% decline in gas prices over the past year. All of that supports steady, stable growth. It looks to me where we are right now. We're going to watch the cooling of the job market very carefully, but the baseline forecast is still favorable.
There's been a lot of talk about trading down in this economy, Jared, and we're going to be hearing retail sales numbers later this week. We're going to get earnings as well from Walmart. What does the president's economic advisor, in this case, Jared Bernstein, the chairman, look for and listen for on a day like that when we get a massive news dump from the retail world? What's going to be important to you, and what should our audience listen for?
Well, I think the consumer spending data, as I just mentioned, it's such a big part of the economy. Retail sales is one part of that picture, but of course it covers, a relatively small share. I think we want to look at the consumer spending writ large. We want to look at the part of retail sales that feeds into that, and of course we'll be all over that tomorrow. I'd like to talk about a different indicator right now, though, and it gets to your question, but also to Kayleigh's. One of the really important and I think maybe somewhat underappreciated aspects of the labor market right now is that while we've seen some cooling, it looks like that cooling has come largely from slower hiring rates, not more layoffs. Okay, think of the old bathtub model. If you think of the water in the bathtub as the stock of the unemployed, we haven't seen the flow into the tub increase. That would be people coming into unemployment very much. What we've seen is the flow out slow down some. It's taking people a bit longer to find work, and because the rate of hiring has slowed. So the thing that we don't really see in these jobs data is layoffs, or at least permanent layoffs. We had a spike in temporary layoffs in July. We're not seeing permanent layoffs. And without permanent layoffs, without that kind of increased flow into unemployment, I think it's hard to get really to a more negative place about where the economy is headed. So that's an indicator I'll be watching very carefully.
Great to have you back. Mr. Chairman, at the White House Council of Economic Advisors, Jared Bernstein didn't ask a question about the Fed this time. Let's bring in Jonathan Tamari at Bloomberg Government with our eyes on politics here. Jonathan, it's great to see you. The crossover with the economy and politics is huge, and it's going to get more important as we get closer to November. It seems to really be starting this week with these addresses, the economic framework being rolled out by Kamala Harris. Friday, at least that's the promise. We didn't get a lot in the way of details today from Donald Trump. Is he still going, or did he wrap up here?
He's still
going in Asheville. And it's been really a speech about everything, not so much an economic policy address. You could argue, though, that the stars are aligning a bit for Kamala Harris right now when it comes to economic data, even though she hasn't put out a policy proposal.
Yeah, I mean, it's clearly her biggest weakness. Despite all of the energy that Democrats have generated in the time since President Biden dropped out, Kamala Harris secured the nomination, they've seen a lot of positive indicators, polling, volunteers, but the economy is a fundamental thing. It's the most important issue to voters overall, and a lot of Republicans are betting on the fact that once this energy dissipates, the economy will still be the thing that drags down Harris and lifts up Trump. So the way that it gyrates in these next few months could really determine how voters feel come November and not, here in the kind of heat of August.
Well, Donald Trump used the word energy a lot in these remarks that are still ongoing, but in a different way, Jonathan. He talked about unleashing American energy, drill, baby, drill. He specifically talked about the state of Pennsylvania, which he argues Harris cannot win because of her stance on fracking, or maybe more accurate to say former stance on fracking. Yet we saw a new Quinnipiac poll for the state of Pennsylvania. She's beating him by 3 points. And in the new Cook Political Report polling, she's also leading in Pennsylvania. So what does that say?
Well, so partly it says that there's been a really big swing because Democrats were not leading, not by those kind of numbers when Joe Biden.
RBNZ's or CPI returning sustainably to target band of 1 to 3%. Reserve Bank of New Zealand governor addresses parliamentary committee.
Harris to have a path to victory. I also think that her record has not been fully litigated yet in the state. She's only been the nominee for a number of weeks here. I think Republicans will hammer that message. There's a debate among strategists. Republicans say it's a really key issue for their voters in Pennsylvania, but a lot of Democrats say, no, listen, environmental protections are also important for a lot of voters in those suburban areas that have a lot of votes. So it's not necessarily a fatal thing, but it is something that will be a challenge for her to overcome for sure. And I think we're still to see kind of how the messaging plays out as people grasp what she has said in the past and what she's saying now.
Well, on the subject of environmental protections, Donald Trump did in these remarks suggest that no one actually knows what net zero means, that he doesn't know what net zero means. It'll be interesting to see how that lands in some of the areas you're talking about. Jonathan Tamari of Bloomberg Government, thank you so much. And coming up, we'll continue our conversation about the economy and the economic platforms of these two campaigns. Douglas Holtz-Eakin of the American Action Forum joins us next on Balance of Power on Bloomberg TV and radio.
RBNZ's or current economic conditions are poor.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
CPI is on a really good trajectory. If you look at over the last 3 months, headline CPI is up only 0.4%. That's obviously actually below the Fed's target for annual inflation. The housing number is obviously driving the vast majority of the inflation that we still have. It's incumbent upon both candidates to explain what they plan to do on housing.
And both candidates have that opportunity this week with economic speeches planned. Donald Trump in the midst of his now in North Carolina. Kamala Harris will do hers on Friday in the same state. Thanks for being with us on Balance of Power. I'm Joe Matthew alongside Kayleigh Lines. That was the former National Economic Council Deputy Director in this White House, Bharat Ramamurthy, talking with us earlier here on Bloomberg on the heels of the fresh round of inflation data we've been talking about showing U.S. prices that continue to cool. Shelter housing, though, is an exception. And joining us is Douglas Holtz-Eakin to continue our conversation, the president of the American Action Forum. Douglas, it's great to have you back. Both campaigns are going to be speaking to this issue, but isn't the dirty little secret that neither can do anything to help this housing market?
Not on the timetables that matter for elections. There's no question about that. This is one of the toughest problems we've faced in a long time. We came into the pandemic and the tightening cycle that followed the policy errors with record low inventory in the residential sector, record low vacancies in the rental sector, and with the tightening of monetary policy, no real incentive to fix that problem. So it is a very, very tough nut to crack. Now, I just want to say, you always have to take 1 month's piece of data with a grain of salt, and indeed, the shelter number, 4.1% an annual rate, is the nettlesome part of this report. The rest is pretty solid, and I think people should not be confused and think this is a bad report. This is a good report. It indicates that the Fed is, again, closer to balance of risks on employment and inflation, can contemplate moving toward a more balanced monetary policy, and I think given the things they've said, they're likely to cut 25 basis points in September. That seems to be almost a lock at this point. I think the larger problem, the political problem, since that's this show, is that Kamala Harris as candidate owns the entire 43-month record of the Biden administration. And what you hear my good friend Jared Bernstein and Bharat do is cherry pick the record. The record is that for 43 months, they've averaged 5.4%.
RBNZ Governor, New Zealand needs to enhance its potential growth rate.
Over that 43-month period, people went to work and got further behind. That is the problem that she owns and needs to deal with. The converse problem, just to finish, sorry about that, Kayleigh, Donald Trump is promising to lower prices. He's not going to do that. We are going to get inflation back to the 2% target, but food prices are not going to go back to their 2021 levels, and that is the reality that people are going to have to face. So neither of the conversations that are going on right now are leveling with people about the data.
RBNZ Governor or fiscal policy should enhance potential growth.
Donald Trump is still currently speaking in North Carolina, and it seems that a lot of his ideas as to how to bring down inflation center around energy. He keeps coming back to this idea of drill, baby, drill, and deregulating. But Douglas, considering the U.S. is already producing a record amount of oil, does that go anywhere to solving the cost problem that people are facing?
No one's accused Mr. Trump of being a policy-rich candidate, and this is something that he's latched onto for a number of years now. Certainly, it comes from the administration's climate agenda and reduced leasing and limitations on LNG export facilities and things that got a lot of publicity. But the reality is the production of carbon-based fuels, particularly oil and gas, is very, very high. And so this is not the source of the inflation problem. The source of the inflation problem was enormous policy errors in 2021, massive fiscal stimulus that was way too much for what the system could bear, and a Fed that kept its foot on the gas throughout the year. And we're just undoing that, and it takes a long time. This is a great reminder that once you let inflation get embedded in an economy, is a very painful thing to wring it out. And then we're in a 2.5-year process at this point.
Well, what if you make the Trump tax cuts permanent then with no way to pay for it? What does that mean for inflation in a Trump 2.0 White House?
We have seen the Biden administration just continue to do deficit finance spending, right? CHIPS Acts, student loan forgiveness, name everything they've tried. That's not helping the Fed. That is, at full employment, $2 trillion deficits. No one would recommend that as macro policy. To exacerbate it would be completely unwise. And so, I think the most pressing issue facing the U.S. that anyone can see is that there must be some action in 2025 on the sunsets of the Tax Cuts and Jobs Act. In the absence of action, we get a 4.2 over 10 years, $1 trillion taxing increase. No one thinks that's a good idea. What then is the plan? How will one get from here now to the end game? And no one's talking about that. And that's what's really missing on policy platforms.
Well, we're glad to have you to talk to about that. Douglas Holtz-Eakin, president of the American Action Forum. Hope to see you back soon. Thank you for joining. This is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From business's most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation?
RBNZ's or policymakers aim to prevent fluctuations in output.
How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Today, the Teamsters are here to say we are not beholden to anyone or any party. I don't care about getting criticized. It's an honor to be the first
CPI returns to target band of 1 to 3% sustainably. New Zealand should enhance its potential growth rate. Fiscal policy boosts potential growth. Expert. Policymakers aim to reduce output fluctuations. Staying on hold for a longer duration was unnecessary.
Leaders, including O'Brien, after comments he made during the interview he conducted with Tesla CEO Elon Musk.
I look at what you do. You walk in and you just say,
You want to quit? They go on strike. I won't mention the name of the company, but they go on strike, and you say, that's okay, you're all gone. You're all gone. So every one of you is gone.
On Tuesday, the Teamsters Black Caucus officially endorsing Vice President Kamala Harris. Sean O'Brien telling Politico, quote, firing workers for organizing, striking, and exercising their rights as Americans is economic terrorism, unquote. Joining us now, Ian Colgren of Bloomberg Law. Ian, Mr. O'Brien also said he hasn't received an invitation yet to the DNC. Does he show up in Chicago? Did Donald Trump just lose the Teamsters?
Well, unclear. We'll see. I'm told as of a few minutes ago, too, that the Teamsters have not heard back from the Harris campaign about their invitation to have her to headquarters either. So there is this sort of deafening silence on the part of the Democrats after O'Brien would speak of the RNC.
Well, it's fascinating to behold. It's also worth considering at this time last year we were talking about a red-hot labor summer. It extended into the fall. We still have a few months to go before this election. We know that ports on the East Coast are going to be dealing with potentially some strike activity. What should we be on watch for other than endorsements?
Certainly. Well, unions are going to have to communicate to their members and are starting to communicate to their members about what to expect as the economy tries to cool off. And that is going to be important as they try to organize members to get out the vote for Kamala Harris. The UAW is having a big all-members call this evening, actually, to kick off its formal campaign, which I'm told by a source in the union is actually bigger in reach than any they've done previously. It's going to be in 26 states with focus on Michigan, obviously, their home, but it's going to be a lot of places too.
Are we going to see another situation if Sean O'Brien endorses the Democratic ticket where leadership is with Democrats, rank and file, or with Donald Trump?
Well, I think it's important to note and consider the fact that the Teamsters have not solidly been in the camp of Democrats throughout their history. I mean, they endorsed Reagan twice. They endorsed George H.W. Bush. They endorsed Richard Nixon. I mean, they really didn't endorse Democrats until 1992 when they endorsed Bill Clinton and have pretty much endorsed Democrats since then. So this is a situation where the membership is mixed, and I think that is reflected in how President O'Brien is handling this, trying to give every candidate a fair hearing and have a methodical process to make a decision. And members are also voting on who they want to, which is going to be a big part of it.
Certainly. Ian Colgren of Bloomberg Law, thank you so much for joining us. We'll have much more ahead on Balance of Power on Bloomberg TV. Evelyn Farkas of the McCain Institute will join us with an eye on the Middle East. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to
be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement
Policy
each other.
discussions in the future will focus on whether to maintain or reduce rates.
And the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Believes sufficient measures taken to control inflation.
This region has now suffered enough, and the more time goes by of escalated tensions, the more time goes by of daily conflict, the more the odds and the chances go up for accidents, for mistakes, for inadvertent targets to be hit that could easily cause escalation that gets out of control.
Amos Hochstein, Deputy Assistant to President Biden, as he meets with Lebanon's Parliament Speaker earlier today. Hochstein's engaging in shuttle diplomacy as we speak between Lebanon and Israel, as ceasefire talks are now expected to resume tomorrow in Qatar. We're joined at this important moment by Evelyn Farkas, Executive Director of the McCain Institute at Arizona State University. Evelyn, it's great to have you back on Bloomberg TV and radio. I don't know how you're looking at the potential for a ceasefire here as we wait for a retaliatory strike reportedly by Iran against Israel. But to pick up on what Hochstein was just saying, how long can we have such a mass of American military hardware in the theater and have Iran in this crouched position before something bad happens?
Yeah, I mean, Joe, I don't know how long. How long can U.S. forces stay on, on point, on alert? I think fairly long as we need them to. But what Hochstein was saying there is that, and I worked with him in the previous administration, he was saying that every day that we have the Iranians poised to make an attack is a day where the risk of real escalation and all-out war, a full, multiple front war in Israel increases. And what I heard when I was in Israel in June from the retired Israeli Defense Forces commanders, the IDF commanders, was that if an attack came from the north, from Hezbollah, that the likely problem for them would be that the Iron Dome, that the existing defenses would not be able to protect the Israeli citizens, and so that some of these missiles would go as far as Tel Aviv. And that's to say nothing of what Iran has in store. And most of the people in the Pentagon, I was there last week, they don't expect anything worse than the strikes that Iran launched against Israel last April. But that's, they don't really know actually what's going to happen. So we're at a very dangerous moment in time, and negotiations, as you know, appear stalled. And that is what Hezbollah is looking for in order to, and Iran, frankly, as an excuse maybe, to halt further escalation. They want to see peace. They want to see an agreement.
Well, this is exactly what we were discussing on this program yesterday with Aaron David Miller of the Carnegie Endowment for International Peace. This is what he told us, Evelyn, and then we'll have you respond.
That Israeli-Lebanese border is not going to stabilize or de-escalate unless you can get an Israeli-Hamas agreement. And right now, even though Middle East negotiations traditionally have two speeds, slow and slower, this one does not look good. That's the real problem here. At some point, the Iranians and Hezbollah are going to respond. The only hope to avert a major escalation is a ceasefire deal, and I just don't see it coming together right now.
And Evelyn, considering Hamas isn't even going to be at the table in Qatar tomorrow, do you see one coming together?
I see very slim likelihood for that, Kaylee. I mean, first of all, as you said, Hamas won't be at the table. Hamas is now also led by Yahya Sinwar, who was the architect of the October attack on Israel, because, of course, the Israelis assassinated the negotiator, the political leader, recently in Iran. And frankly, the situation looks as bad when you look at Israel, because you have the far right cabinet minister, Ben Gvir, basically declaring another, legalizing, which is not an international law term, it's just in Israeli parlance and in the domestic context, saying that we're going to take more territory from the Palestinians in the West Bank, which is another part of Israel that can become inflamed. So we're talking Gaza in the south, we're talking in the north, the conflict with Hezbollah, and the more pressure these far-right politicians put on the West Bank. And also, I should note that he went, this far-right leader went to the holy sacred site of the Muslims, the Dome of the Rock in Jerusalem. This is off limits, and even Netanyahu basically rebuked him. But these far-right politicians in Israel are also trying to stop any ceasefire, any hostage exchange. And frankly, if you believe that these hostages should be rescued, you should be infuriated at what's going on right now on the Israeli side as well.
Well, Evelyn, as the Pentagon invests itself in defending Israel here against a possible attack, another one by Iran, they're also watching what's happening at an incredible moment right now in Ukraine. And I'd like to ask you for your thoughts on this, as you have spent so much time in Ukraine and covering the situation there. Rebecca Grant, a senior fellow at the Lexington Institute, spent some time with us a little bit earlier as Ukraine continues this cross-border incursion into the Kursk region of Russia. Russia had to shoot down over 100 drones last night. And we talked about Ukraine's goal in this offensive, now almost 2 weeks old, Evelyn. Here's what she said.
Ukraine, with this surprise flank attack, has really opened up a new chapter. It shows that Ukraine's forces have been very well trained by several NATO partners, and they're really very, very capable. The question now is, are they going for a particular objective? Will they then consolidate, or at some point will they pull back?
What's your thought on this, Evelyn, in terms of an objective? Is this a fleeting moment to boost morale in Ukraine, or can they get a foothold here?
I mean, Joe, I can't say for sure. It's interesting because I also had a chance to talk to Pentagon officials about this current situation. And they were really kind of funny. They said, we weren't told ahead of time. They had real operational security here, and they don't know. I think that Zelensky probably has multiple objectives in mind and, has the flexibility. Clearly, his command is unified. They're working in a really concerted fashion. And if it looks like they need to withdraw, they will withdraw. It still will be a victory for them because as President Zelensky has pointed out, he's got some prisoners he can swap. The Ukrainians have shown that they can take advantage of the Russians. They can take the offensive. And, as your analyst before said, they are conducting, serious, concerted, organized military operations. So, I think that it's unclear exactly what they're going to get out of this, but I think the Ukrainians are hedging their bets. They may have to negotiate at some point. They may
CPI requires more frequent
Russia
re-weighting.
is probably not likely to negotiate until after the U.S. elections, though.
Well, so Evelyn, I guess it raises the broader question for me of whether or not this incursion from Ukraine prolongs the war or brings it closer to its end.
I think at this point, again, it's unclear. However, if they use these positions to continue to take out airfields and air defense and sort of real serious Russian capabilities, and I suppose potentially they can also impact, Russian morale. Clearly, civilians are fleeing their towns. It could start a dynamic that ultimately leads to the Russians being forced to the negotiating table, but I don't expect that overnight. And so I think it's probably more, Kaylee, on the, hasten us to peace side of the equation than delay, because the stalemate was delaying us.
All right. Evelyn Farkas of the McCain Institute with insights from inside the Pentagon. Thank you so much for joining us. We appreciate your time. And coming up, Congresswoman Ilhan Omar wins her primary in Minnesota in a victory for progressives. We'll have more on that with our political panel after the break. This is Balance of Power on Bloomberg TV and radio.
Using high-frequency data to improve CPI and GDP estimations.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
We run the politics of joy. Because we know it is joyful to fight for your neighbors. We know it is joyful to make sure everybody has access to health care.
Congresswoman Ilhan Omar, member of the Progressive Squad, last night after handily winning the primary battle for her seat. She's expected to win again in November. Our political panel is with us now for more here on Balance of Power on Bloomberg TV and radio. Ashley Davis, founding partner at Westfront Strategies, and Caitlin Legacki, partner at Four Corners Public Affairs. So, Caitlin, obviously, this primary race was one we were watching very closely, as we had already seen two squad members, Cori Bush and Jamal Bowman, go down in their primaries, in part because of the Israel and Gaza issue, but in part because AIPAC money is at play. Wasn't as much in this race. Is that what saved her?
I think, honestly, the thing that saved her is that she's very plugged into her community, and within her district, she's very active. And so, I certainly don't agree with her on a lot of issues, but I respect the fact that she has, despite traveling back and forth from D.C., she has kept very close roots in her district and in her community, and I think that ability to organize her voters is what saved her last night.
Ashley, is there something good for Republicans when it comes to the squad? This has been something that you could frame and use as a cudgel against Democrats. Is it good for Republicans to have
Absolutely. And on the Democrat side, it's the same for the Freedom Caucus or Tea Party or whatever you want to call us over the years. But absolutely, it's a good thing to run against, right? I mean, but I also, and I think you would agree, AIPAC decided not to go into her race. So, and which means to me that they knew that she was not beatable, and that you're right. I mean, if you stay close to your community, you're not going to lose your election. So, I mean, I think it's positive for Republicans that we have a couple squad members left, but we have a lot more...
Smaller squad.
Smaller squad.
But remarkably...
But we have a lot more, you know, Freedom Caucus people
a larger
on our
group
side.
by far.
But we did lose the big one.
Bob Good.
Bob Good lost.
So much for the recount.
Yeah.
Interesting, though, to see this is playing as good news on both sides of the table. Our political panel coming up.
Well, we said we love each other.
I know you do. And Ashley Davis are going to stay with us as we spend some time here on the broader presidential race, the massive amount of money being dumped into 7 swing states the rest of this month. It's next on Balance of Power on Bloomberg TV and radio.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Vote Trump and your incomes will soar, your savings will grow, young people will be able to afford a home, and we will bring back the American dream bigger, better, and stronger than ever before.
Donald Trump a bit earlier today in a speech that just wrapped up, actually, billed originally as outlining details of Donald Trump's economic vision. It seemed a lot more like a stump speech. We didn't get a lot of details on the economy ahead of Kamala Harris's speech, billed just the same way for Friday in the same swing state of North Carolina. We reassemble our political panel. Caitlin Legacki, Ashley Davis are back with us now at the table. It's wonderful to have you both here. Ashley, this felt a little bit like Milwaukee. We had the teleprompter
how long
there.
was the speech?
The panels were there. It went on
over an hour.
About that long, actually.
Yeah.
And he was kind of toggling between some pre-written comments about the economy and then riffing on some of the retribution stuff, Democrats stealing the election and so forth. We didn't get a really cohesive economic message beyond what we've long heard. Drill, baby, drill. If you lower energy prices, inflation, the rest of prices of everything will follow. Did he just create a big opening for Kamala Harris on Friday to get more specific?
Well, I looked at what she's supposed to be talking about, and she's supposed to be talking about cutting taxes and helping with the middle class. I mean, so I don't know what that means, and obviously I don't know if you're sitting in Iowa, if you're sitting in Western Pennsylvania, if you know what that means in regards to legislation. But Trump has 3 pillars that he should be talking about, which is baby drill, I guess. I've been opening up energy policy or stopping regulation. He has keeping his tax policies in place. And then he also has the tariffs, continuing tariffs and tougher tariffs on China. That's the message. And I think that that's the message people resonate with. I don't know. I think I think that we are causing our own issues by not just sticking to our policies and talking about what people believe in. But I think it does open a door for her because she can actually lay out what she wants to.
Yeah.
On the same side, though, before I hand it over to you, I think that she has the economy wrapped around her neck right now because of she's vice president to Joe Biden. So how does she differentiate herself? And I think she has an opportunity.
Well, on this idea of trying to really narrow and stick with different policy messages, we are now starting to see former other Republican presidential candidates who are now in Donald Trump's corner, outwardly endorsing him. Vivek Ramaswamy is one, but also Nikki Haley with some critical words about the way things are going right now. She spoke on Fox yesterday about how she thinks the party is doing right now and what they need to do to win the election.
The Republican Party needs to make a serious shift here. And the first thing is the Republican Party, Donald Trump, people here at Fox, quit complaining that she's not giving an interview. You don't need an interview from Kamala Harris. I take her at her word. Now, what Donald Trump needs to do is go out there and campaign every single day, telling the American people exactly what Kamala Harris has said. One thing Republicans have to stop doing, quit whining.
Quit whining is what she says, but also stop making a big deal about the interview. It is true, though. We haven't seen a Kamala Harris interview to this point. And in the absence of that, what we are seeing is her gaining some serious momentum in polls, including the latest from the Cook Political Report that shows her leading in every single swing state, with the exception of Nevada. So if you're the Harris campaign right now, Caitlin, are you thinking you might want to try an interview and see what happens?
I think that, to your point, there's not a lot of demand from voters that she needs to sit down tomorrow and do an interview. We have seen her taking questions from reporters on the tarmac and being available that way. But if I were on the Harris campaign, I would tell her to get through the convention, focus on knocking that out of the park, and then there'll be plenty of time for sit-down interviews after that.
That does seem to be the plan at the moment. We're going to get the speech Friday. I just wonder if this fragile lead that we're seeing that kind of came out of nowhere in less than a month could be at jeopardy, could be in jeopardy as soon as she starts detailing policy proposals. You just highlighted her main challenge, to find sunlight between herself and Joe Biden. Is that possible?
There's 86 days or 85 days. I don't remember the exact days, but I mean, I think that she is going to have to come out with policies. However, it's such a short campaign. And I mean, there's nothing in our history that we've ever witnessed this in modern history. And so I think she should take advantage of it. I mean, if I'm on your side of the aisle, I mean, I think that she does not need to do an interview before the convention. I mean, I'm surprised she's doing her economic speech before the convention. I think it's probably a little pressure, but she's going to ride a high. And I don't think we see true polls until mid-September.
Well, we are seeing polls now.
No, I mean like true polls.
Okay, fair enough. But I still am going to mention one anyway, even if Ashley already threw some cold water on it.
Sorry.
But you were talking about drill, baby, drill. Something else Donald Trump said today was that Harris might not be able to win Pennsylvania because of her history on fracking policy. We did, though, see a Quinnipiac poll today that shows her up 3 points. Harris, 48, Donald Trump, 45. Do you get nervous looking at polls like that, yes, she may be in the lead in a key blue wall state, but if more focus is paid to her policy positions of the past, that might change real quick?
We're Democrats. We're nervous about everything. We're never not nervous. But no, I think that Pennsylvania is one state where that could affect her. But, the fact of the matter is that the Biden administration has done more domestic energy production, both clean energy and oil and gas, than any other presidency in recent times. So there's a good all of the above energy record for her to stand on. I agree with Ashley. She doesn't need to go out and specify policy proposals down to the legislative mechanism she's going to use, but I expect to hear from her a lot of her vision and her values over the next 89 days, and I think that will give people enough of a sense of what she stands for and what she wants to achieve that they'll be satisfied.
Pennsylvania is one thing. Florida is a very different thing. We saw a poll this week from Suffolk University suggesting that she is in striking distance within the margin here, cutting Donald Trump's lead to just 5 points. And I talked to David Paleologos from Suffolk Polling about this on the early edition of Balance of Power, his theory as to why.
People don't realize this, but Florida has a ballot question on legalized marijuana, recreational marijuana. That's going to drive out young people. They have an abortion rights question, statewide abortion rights question, which is going to drive up women, which will then, by default, will help Kamala Harris's campaign.
Ashley, I don't know if we should be having this conversation with a straight face or not, but it does reinforce the idea that Kamala Harris could be helping to evolve the map.
I don't know if Florida is really the answer. And remember, like 3 weeks ago, we were saying Donald Trump was winning all the map as well. So I think that this could like go back and forth a million times before November. But I do think the ballot issue is a big concern. In 2004, we ran George Bush's reelect on gay marriage in states like Ohio that was purple then, and other states that actually tipped it to him.
You have abortion and cannabis.
Now you have abortion. I don't even know if cannabis matter. I mean, cannabis is almost all legal everywhere, but abortion's a huge issue in some of these states. Arizona, I think Missouri now, it's on the ballot. That, to me, as a Republican, is very concerning. That's going to drive out voters, and that's going to drive out that 5% that is what we're up against right now. But undecided voters.
Arizona obviously is a swing state, and it's one of the many that we're seeing both Trump and Harris pour over $200 million into in terms of advertising just in the month of August. Would it be wise, given the pot of money the Harris campaign has, to just throw a little bit of that toward Florida and its many media markets?
I would not. I think Florida is just a sinkhole for political money. You can't just dip your toe in Florida. If you're going to go into Florida, you have to go all in. I think that states like Arizona and North Carolina are much more winnable for a national Democrat, and I think are much more inclined to tip this year. So that's where I would go first. But the people on the Harris campaign are extremely smart, and they're looking at this really hard. But it's so much money to play in Florida that I have a hard time seeing it.
It's only, 45 media markets, I think, invest in. Taking the bait, that's the idea, right? To get the Harris campaign to spend money where they have no chance to win.
Yeah, and I also think we could solve world hunger with all the money that we're spending on these elections.
It is a very good point. $247 million in ad buys in August.
It's unreal.
And it's only August.
It's not even fall,
Ashley Davis, Caitlin Legacki, our wonderful political panel this evening. Thank you both so much for joining us. And you, of course, can always get more coverage in the Washington Edition newsletter on the terminal and online.
Thanks for being with us. Catch us in Chicago next week for the DNC. We'll meet you back here tomorrow on Bloomberg TV and radio.
Saturday mornings, I understand you have off.
Yeah, Saturdays is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm onto a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am.
Are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Our first job is to intimately understand and anticipate the consumer's needs.
It's an incredibly fun job for sure.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
Competition's moving faster. The world is moving faster.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episode September 11th, only on Bloomberg. Brought to you by Workday.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Reflect what's going on in the country, right? That's the nature of this. And I think we're seeing more polarization within our communities, within our states. There's some interesting studies out there about people moving to areas because they feel there's a more comfortable political home there. So they're leaving places, you may be a fourth generation Californian. Right. And leaving that state because you don't feel like your politics are welcome in your own community anymore. So you leave to Idaho or wherever. And then what you have is areas that are just more politically homogeneous. Right. And then you see that reflected here. I got to go in and do this. What time is it?
It's 1:20.
Oh, yeah, I got to go. Okay, bye. Good luck. All right.
She loves the stairs. Senator Lisa Murkowski showed up to her office today wearing running shoes. It felt appropriate because for more than a decade, she has been trying to stay one step ahead of an increasingly right-wing Republican Party, intent on devouring everything to its left. In 2010, after losing her primary to a Tea Party candidate, Murkowski had to resort to running as a write-in.
We made history. Alaskans made history.
She was successful and returned for her second term in Washington solo. Her relationship to the Republican Party, well, let's just say it got complicated. And though she continues to serve as a Republican senator, her refusal to fall in line with the party's far right has formed her political identity ever since. So I went to Washington to meet with the senator, motivated by a central question. How does it feel to operate in a political environment where the very idea of compromise has become a third-rail issue?
I'm a little bit of a pack rat, but I work at this desk. I don't have a sit-down desk, as you see. I don't have a computer in here.
You don't seem to like to sit at all.
No, I'm not a very good sitter. I swear, I cannot talk on a telephone if I'm sitting down.
Yeah, if people talk about you.
RBNZ Governor Adrian Orr concludes committee remarks.
Willing to have idiosyncratic views that do not toe whatever the most caricatured version of a party line is, or not follow a cult of personality and have that dictate their votes. Do you feel like you're part of a dying breed?
Oh, sometimes I feel a bit like a unicorn coming from Alaska. In 2010, when I lost a primary, I think most people thought I was political roadkill, and Alaskans thought differently. We ran a write-in campaign. And I was returned to the Senate, but I was not returned by my party. I was not my party's nominee. And so I came back with a level of support that was so broad and so diverse and so unique that it put me in a place where I felt freed up to just Put party politics aside. Doesn't make any difference who you caucus with, who you have lunch with on Tuesday. And I think maybe because I did have that near-death political experience, I know the worst thing that can happen to me is I can lose an election and be sent back home where I am absolutely, positively, 100% most happy. What I would like is to have more colleagues who are really open, truly and honestly open to understanding both sides of the issue so that we might be able to find some compromises. I am not afraid of compromise.
It seems like the polarization has mistakenly led people to think that representing the most extreme view of their side is good politics, and that's often not the case,
Not
right?
the case, yeah.
And so I'm curious, with something like labor or with abortion, how do you feel those issues play politically for you?
I feel that my position on abortion is so in line with the vast majority of Americans, and certainly the vast majority of Alaskans, who believe that a woman should have the right to control her own healthcare decisions. Abortion is not anything that any one of us would want to have to go through. I believe that there should be a lawful process for a woman to receive an abortion. But I am not afraid to say that there should be limitations to that. I do not think that you should be able to go up to full term and then say, I've changed my mind.
That basically doesn't happen statistically, right? I mean, in cases where it's a late-term abortion, it's typically when the life of the mother is at stake or the life of the child is at stake.
And I think this is where those states that are cranking down so much and saying that 6 weeks.
Right.
6 weeks. Well, 6 weeks, most women don't even know that they're pregnant yet. You have not given them that opportunity to, again, control their own healthcare decisions. And so how we ensure that a woman has those rights, how we ensure that our policies are fair and humane, this is what the debate should be about. But instead, I think what happens is you have those that are on, to your point, the far extremes of both sides. So you have some on the Republican side that say no, never at all, under any circumstance. Not rape, not incest, not life of the mother, not anything. And those on the other extreme who say, nope, a woman, she should be able to make that decision at any moment, absolutely, positively, without question. And I don't think most people in this country are in this bucket and this bucket. They're in this swath in the middle. And yet we can't have conversations because we get so emotionally caught up in what is being directed by both extremes.
In 2010, when you lost that primary and you won as a write-in, that was with the rise of the Tea Party. That was an extension of the polarization of the right becoming even more extreme. In 2015, we had the rise of Trump. It was something pretty similar. It was sort of an extension of the politics of the Tea Party. Did you feel like you had seen this movie before and that you knew how to deal with it, or did it feel like something totally different?
I think it felt like it was an extension of it. My race in Alaska was one of the early indicators, I think, of how impactful the Tea Party could be in terms of elections.
Murkowski wasn't the only politician threatened by the rise of the Tea Party in 2010. As establishment Republican candidates in Delaware, Colorado, Nevada, and Utah were swept away by the party's rightward shift, a shift that was triggered in large part by the election of America's first black president, Barack Obama. The influence of the Tea Party on mainstream conservative politics waned for a little while, but elements of the movement survived, evolved, and eventually dovetailed with the anti-establishment sentiments that supported the rise of Donald Trump.
Politicians are all talk, no action. Nothing's going to get done. They will not bring us, believe me, to the promised land. I will be the greatest jobs president that God ever created. I tell you that.
Did you feel like you understood how to handle the Trump era from the beginning, or was that something that took a while?
No, I don't feel like I fully understood it. I'll tell you, I was one of the ones who saw the replay when Trump made that statement, the Hollywood tapes.
It's the audio recording sending shockwaves across the presidential election.
You know, I'm automatically attracted to beautiful. I just start kissing them. It's like a magnet. You just kiss. I don't even wait. And when you're a star, they let you do it. You can do anything. Grab them by the. I can do anything.
And I was just so struck by just what I considered to be his open vulgarity. And it was like, well, this guy's not going to become president.
That was pretty late in that election.
Yes, that was pretty late.
We had been through a lot of vulgarity by the time we got to
And so maybe had we just become numb to it.
I know.
But I honestly thought that people would not accept that. They accepted it, and he became president. I now look at where we are today, and I see that the public is again open to accepting individuals that I think are so inherently flawed that it makes me wonder, am I not tapping into what it is that they are identifying as leadership qualities? Is this what the American people really want? Is somebody who is very narcissistic in his views and one who, in my view, put himself above country. That's not something that I as an individual can accept.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Walk with me, and I just want to show you because this is important to see. So this is our capital. None of this area here, none of that is connected by road.
Wow.
When we're talking about our marine highway system, it connects all of these communities. I like this. I could be a weather person. Into Seward, out to Kodiak, down here to Unalaska. I was up outside of Nome in Golovin, $99 for a case of a 24-pack of water that you would get at Costco.
Wow.
I get really excited about the map because it demonstrates the challenge that we have with infrastructure. It's what makes my job representing Alaska what I think is the most exciting, the most challenging, because it is so hard. It's so hard. I have a mix of urban, rural. I was the PTA president in a school in Anchorage that had 56 different home languages spoken. It's just this mixing bowl of extraordinary individuals.
What's the story with this guy?
Walter is a magnificent king salmon from the Kenai River. I brought him out of the river in 2006. He weighs 63 pounds. Unfortunately, beautiful fish like Walter are not seen in the Kenai very much. We're seeing with warming temperatures, with challenges to habitat, it's been harder for great species like this to survive.
Do you think they're going extinct because people are mounting them on their walls? I'm just kidding.
No.
I'm just kidding.
Right now, over 90% of our food comes up by barge or by ship from the Seattle area. That's not sustainable.
And the prices are crazy, right?
The prices are crazy. If you have no roads, how do you get your food there? How do you get your fuel there? How do you get your refrigerator there?
Right.
You fly it.
Very stupid question, but how is there no regulations about inflation on necessary goods like that?
I wish that we can control the inflationary part of it. What we do is we try to offset the high cost of energy in rural areas by what we call power cost equalization. It's effectively a state subsidy to help offset the cost. You have some communities where you will be paying over $1 a kilowatt hour.
Wow.
In the lower 48, the average is 8 cents.
Wow.
How can you afford to turn your lights on? How can you afford to stay warm? So these are some real world issues that we just have to deal with matter-of-factly every day. I'm going to go in and talk nuclear.
Thank you.
All right, we'll see you.
Good luck in there.
Thank you.
It's probably not surprising that a lot of an Alaskan senator's time is spent thinking about barges, roads, airplanes, and energy. If there are two things that define the unique challenges of the state, it's getting around and keeping the heat on. That made the $1.2 trillion bipartisan infrastructure law especially significant to Murkowski, not only in its substance, but in its process, which involved exactly the kind of old-school bipartisan negotiations that she thrives on.
I worked really hard on the infrastructure bill, and am very proud of the work that we did. There was a lot of give and take, and I'll give it a specific example. I was making the case for funding for what I was calling essential ferry service. And Mark Warner finally, he says, I don't know why you're pressing so hard for ferry money. I mean, that's ridiculous. In his head, ferries are like those nice little things that go across, to some cute little island for a vacation. Yeah. I'm like, no, this is medical. This is your basketball team. This is going to the grocery store in Juneau to get your groceries. And he says, I don't get it. And I said, so you don't get me and I don't get you, but I know you know your state and your region. And I'm gonna ask you to trust me knowing my state and my region. And so we built an infrastructure bill that really helped America, and particularly rural America, which was so deficient in infrastructure. There's still about 36 communities in the state of Alaska that have no running water, no flush toilet. They operate on what is called a honey bucket system, and basically it's nothing more refined than a 5-gallon bucket. It sits in the corner. If it's fancy, they've bought a toilet seat lid and they put it on top, and when the bucket gets a little bit full, it's usually the preteen kids that get the job of hauling the bucket of human waste, walking it down to the sewage lagoon and dumping it in the lagoon. And we wonder why we have the issues that we do with disease and conditions related to health in Alaska.
It strikes me, this is a pretty obvious point, but like the work of legislating and governing seems so at odds with politicking and running for office.
Yes.
How do you reconcile those two different modes that you have to be in?
The politicking side of things, my view, is the worst part of the job. Yeah. I mean, it's what you have to do in order to be allowed a seat at the table to create and direct and then implement policy. Mm-hmm. The practice of campaigning is so superficial. Yeah. Nobody wants to hear you talk for a half an hour about the benefits of advanced nuclear. They just want to know whether you support or oppose it. Right. They don't want to know the details. I want to talk to you about the details. This is why people should run for office, because you want to help create good policies that are going to benefit our entire country. Mm-hmm. And it shouldn't be just about the campaign. I have some colleagues that are really great campaigners, and they're less enthusiastic about the policy making. I'm exactly the opposite. Put me in the policy tank right here, right now. Let's make it happen. And more I'm seeing with every passing year, with every new Congress, it seems that people are coming into Congress with a focus on which team they're on, instead of what problems are we going to solve today.
Why do you think that is?
It's changed. In the 20 years I've been here, it has definitely changed.
How do you feel? I mean, is it possible to maintain optimism?
You have to. I have to be optimistic about our system. It's not perfect, but it has sustained us, and it has sustained us through good times and in bad times. And
Biden and Harris briefed on Middle East developments.
And many will say it's really rocky right now.
Would you say that?
It's different. It's very different. I worry about political divisions creating further divisions in our society, and how that might impact education and healthcare and public safety. We cannot be a divided nation. We can be a very unique and a very diverse nation, but we've got to figure out ways that, again, there's something common with all of us, but you just got to find it. I got to go in and do this. What time is it?
It's 1:20.
Oh, yeah, I got to go.
Okay, bye. Good luck.
All right.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Polarization in modern American politics didn't start with Trump, and it didn't start with the Tea Party. Instead, the key inflection point was the moment Newt Gingrich became House Speaker in 1995. Gingrich normalized a provocative, hyper-partisan Republican politics that characterized opponents as enemies and compromise as surrender. The electoral success of that strategy embedded into the party's culture and pushed politicians like Murkowski onto the sidelines.
We try to come together as much as we can. But, you know, in fairness, it's kind of like your family. No family that I know of is perfect. Everybody loving one another and getting along all the time. You might love one another, but you might not necessarily all get along all at the same time. And so it's important that when you have differences or different disagreements, that you also be able to share them. We're kind of like a big family, and sometimes the family is not always entirely functional, but we're all brought together to do a job.
Why do you think lawmakers are more willing to disregard norms around civility?
Maybe again, that's part of the reflection that we're seeing in society. You know, people are seemingly angrier. When I was growing up, I'd never heard of anything called road rage. When you think about how we're able to use social media to anonymously attack people, call them bullies, call them names, call them whatever it is. When did we get to a place where somehow or other it was acceptable to condemn people personally when we don't know them? I think we see that reflected in in some of what happens with government. We can argue, we can debate, we can win and lose, but we don't need to denigrate and to belittle.
Do you think it's salvageable?
I have to be an optimist about where I am and what I'm doing and why I'm doing it. I don't think I would want to get on the airplane from Alaska and come here if I didn't believe that I could somehow or other make a difference. I'm a mom of 2 boys. They're now raised men. You see how